There'll be times where you lose that trade, obviously, and there's nothing you can do about it. For me personally, there are setups where I see them and I'm like, wow, this is an A plus setup. For example, let's say my higher time frames, the trends are up, and then on my lower time frame, the trends are up as well, and we're getting a nice pullback into a demand zone. If you don't know what I'm talking about, that's fine. You can apply this to any strategy. So let's say again, my higher time frames are showing me I should get in long. My lower time frames are telling me I should get in long. We have a beautiful setup where it's pretty much picture perfect. Like some setups you're going to get, they're going to be like 6 out of 10. Some of them are going to be 10 out of 10. Let's say this is a 10 out of 10 setup. I could take that setup and then all of a sudden something happens in the news, some political nonsense happens or something, and all of a sudden I'm in the trade and then boom, price tanks and stops me out. Should I worry about that? No. What I will do, I used to do this. I don't really do this now because I'm more of a seasoned, experienced trader, and I just know that it's out of my control, so I don't worry about it. You just take a step back, realize, is there something that I did wrong? If you're day trading, if you're on the day trading time frames, which I'm not, was there economic data that was being released? Should I have taken this trade at this time, or should I have waited? There are definitely questions to ask to see if you could prevent this from happening again. But a lot of the times, it's out of your control. What can you do about it? Nothing. There's no point in that instance of saying, wow, this is horrible. Like, trust me, I've been there where I'm like, wow, I'm an idiot. I shouldn't have taken this trade. And it's really not true a lot of the times. Now, let's say you take this setup, you think it's picture perfect, but then after you realize it's actually really not, that's a different story. But even if it's not a 10 out of 10 setup, it's like a 7 out of 10, 8 out of 10, and the trade doesn't work out, big deal, right? I saw a great quote from somebody on X, follow me on X at FX Telepath, and it was something like the idea of a stop loss is there to help you, the stop loss is there to ensure that you don't lose the war, that you only lose the battle, right? I think it's a fantastic quote. It's actually an incredible quote in my opinion. Because the stop loss is there. Yeah, you lost the battle, you lost the war, right? You lost the battle, you didn't lose the war. But if you don't have a stop loss in place, then you could potentially lose the entire war. So having that stop loss in place, taking that L is okay. One thing that I really jammed into my head when I first started trading, I don't know why it was so jammed to my head, but just the idea of having a stop loss on every trade is so extremely important. Again, not only so that you don't lose the war, that you only lose the battle, you don't blow your whole account. Obviously, that should be very obvious to anybody, but also because it'll hold up your capital, right? Let's say you risk way too much on one trade, and then you're down. You don't have a stop loss, and the price is just tanking and tanking and tanking, and then I'm just going to wait for this to recover. That might be a fine idea. It could recover. Obviously, anything is possible, but the issue with that is that now you have less capital to take more trades with. You could have taken a 7 out of 10 setup with no stop loss, price is tanking, you're just waiting for it to recover, you're in a massive drawdown. But then you see another 10 out of 10 setup and you can't take the setup, or maybe you can't risk as much on that setup because you have capital tied up on this other setup that's in a massive drawdown. So there's different ways to think about, why you should have a stop loss. It's extremely important. And like I mentioned earlier, tons of comments, tons of messages of like, I'm in this trade. Where do you think, like, can it go up? And like, I get that question all the time, and like, it's a very rookie question in my opinion. I always say, I don't know. Anything is possible. Show me your work. Show me your analysis. The market uncertainty is real. We cannot control that. And one thing you need to get used to as traders is taking losses. One thing that I don't day trade now. I am a swing trader / position trader with stocks kind of. But when I first started trading, I was day trading a lot, and what I would do is, I don't like to talk about position sizes. Nobody really knows how much I risk because that is irrelevant in my opinion. What I like to show is my forecasts on YouTube, right? So if you want to check out my work, that's what it is. It's all there on YouTube for the past like 3-4 years. So that's where my work is. I don't talk about money or anything like that. It's all a percentage game to me. What percentage you make this year, that's what's important. Anyways, so like I was saying, when I first started trading, I was day trading and I was basically risking a small amount. Again, I don't talk about dollar amount, but I will say here, I was risking like $5 a trade. $5 could be a lot to you, so I'm sorry if you take offense to this, but $5 according to me was not a lot, right? Just like if you're a millionaire, you could be risking $100 in a trade and it's not a big deal. So the reason I was doing this was just to get involved and understand the psychology of it. Paper trading isn't really a great idea. Paper trading is really only a good idea for learning the software that you're trading on so that you can place an order properly. But you need to get used to the psychology aspect of trading. And with me, $5 every trade was enough for me to feel a little bit of emotion, right? Because okay, you lose $5, not a big deal, but you lose $5, 5 times in a row, then you're getting up there. And if you win the trade, that could be like $50 if it's a good winner, right? So it was enough for me to get that emotional side of trading. It was very important, and I did that. And what that allowed me to do is just get a bunch of experience. I would just wake up, I would just not take a bunch of trades. I had a little bit of a system with the supply and demand trading methodology, but it just helped me get used to that trading psychology aspect of things being out of my control. There was many times where I learned some lessons where I took a trade and it's all of a sudden price just absolutely tanked. And I'm like, why did that happen? And then I go to, forexfactory.com or whatever, and I look at the news. It's like, oh, okay, well, there's this economic data that was being released that I should have known about. I should have waited to take a trade rather than take a trade right before that took place. It's vital to be checking those times of when the economic data is coming out, right? Because if you take a setup and then price just absolutely tanks, it's probably some sort of economic data that you should have known about. Now, me as a swing trader, if that happens to me, I don't really care because I'm on the swing trading timeframes. If it's really bad data that comes out and it stops me out, it is what it is. Again, it's all about understanding that things are out of our control. The only thing that we can control is our actions, thoughts, and responses. And we have to let go of what is not. And what is not is the market movements, right? Life is filled with uncertainty, and so is trading. And the goal in trading is not to eliminate risk, but to manage it, right? So another example of something that I do is, let's say my higher time frames are trending up. Everything's looking good. I'm getting in long with the trend on the lower time frames according to the higher time frames. That's when I usually will risk the full amount. Now, let's say it's a counter trend setup and I'm only looking for a small move. Then I will risk less and I'll be more aggressive with my stop loss, putting that into the green or to break even and just looking to take profit earlier. It's all about managing these things. And look, I've been through some pretty big drawdowns. You can definitely expect to go through some very big drawdowns, 100%. There's no ifs, ands, or buts about it, guys. You will definitely go through a massive drawdown that will definitely make you think about quitting. Me personally, the amount of times I've thought about, I'm done. I'm not trading again. This is pointless. I can't make it. And then a lot of times that next trade is that winner. And it really just keeps you coming back. It's the same thing with golf. I don't know if there's any golfers that listen to the podcast, but you'll be having a bad round, and no shots are going your way. You can't hit any greens, you can't hit any putts, and then you hit that, and you're like, "Wow, I hate this game." It's a love-hate game with golf. Any golfer knows that. But a lot of the times, you're having a bad round, and then all of a sudden you hit one beautiful shot. You're like 200 yards out. You take your 3-iron, 4-iron, 3-wood, whatever club you're using, and you just hit a nice one on the green. You're like 5 feet away. Those are the shots that keep you coming back, right? It's the same thing with trading, where you can have that one trade that says, wow, I can do this, right? And another thing, too, is you don't need to... You could literally lose more than you win and be a profitable trader. That definitely changed my entire mindset with trading. Obviously, it's easier to be winning more, and it's really all based on your psychology. If you have a really, really hard time losing, you should acknowledge... With trading, you should know yourself. That's huge. If you have a hard time losing, that's something you need to work on, definitely. But what you could do then is just simply look for smaller risk reward trades with a higher win rate, right? If you're looking for one-to-one trades, your win rate's going to be higher. If you're looking for, just to take it to an extreme, 10-to-1 trades, your win rate's going to be less. I'm sorry. Anybody that says they win 80, 90% of the time with a 5-to-1, 10-to-1 risk reward ratio, which I'm sure some people do, they're full of it. I don't believe them at all. So if you know yourself, and let's say you're okay with losing, right? I'm in the middle. I don't like winning, I love winning. I don't like losing, but I also, now that I'm more of a seasoned trader, I'm okay with losing more. Again, reading Marcus Aurelius's Meditations book 100% helped me with this. Again, it's losing is out of your control. Winning is out of your control too. But, understanding that losing is okay and it's fine is going to help you big. So what I was saying was you could definitely just change up your risk reward and try to look for those quick moves rather than looking for the larger moves. If you have no problem losing and you're just have a strong mental game already, that's great. Maybe you could look for a higher risk reward with a lower win rate. It's whatever kind of floats your boat, right? Obviously, all this comes with back testing. You shouldn't just be pressing buy and looking for a 5-to-1, right? You have to have some, sort of system, in my opinion. And just as the Stoics believed in focusing on what we can control, in trading, we should focus on our strategy, risk management, and emotional control, rather than obsessing over the market volatility. And the mindset not only reduces stress, but it also improves our decision making, right? If you have a system where you know what you're looking for, you know your risk, you have that emotional control, you're not going to care what happens. You're going to just take the trade and move on if it's a loser and move on if it's a winner. Another powerful thing is not letting the highs and lows get to you. Yes, everyone talks about not getting mad when you take a loss and not getting upset. The same thing applies for winning a trade as well. You don't want to get overjoyed. Look, if you're a new trader and you've been trading for a week and you're listening to this podcast, it's fine if you get a winning trade and you're really excited about it. Like, I'm not going to give you guys a hard time about that, but eventually it needs to almost be dull. And a good concept of this is, the idea, I firmly believe this too. The idea of if you look too much forward, let's say you're working a 9 to 5 and you look way too much forward for Friday, like you're really like, oh, Friday's coming up, I can't wait for Friday. And you get overjoyed about Friday, that only makes Mondays worse. Now, that doesn't mean that you can't look forward to things and you can't look forward to Friday, but it's kind of like the idea of having a flat line of emotion almost. Like a flat line isn't like, you'll have spikes up and down, but little spikes. You won't have these massive spikes up. Oh, it's Friday. Yeah. Oh my God. I'm going to party so hard. And then what that does is it makes Mondays so much more dreadful. So something that I've kind of introduced in my life is just the idea of trying to have an emotional flat line. Like, again, you're going to have small spikes in that flat line, but you're not going to have those massive spikes up and down because it's the idea of if you go up, it's going to crash even harder, right? If you go down, it's going to feel great. I know so many people in my life where they live like that, where it's like they're either extremely happy, and it's usually on Fridays and on the weekend, and then when Monday, Tuesday comes around, it's like it's dreadful. They're just looking forward to Friday. So if you can apply that mindset into trading, it's key, right? Because if you get too over high on a win, that could lead to making bad decisions. Just like if you take a losing trade, that could lead to bad decisions as well. Because a lot of the times, if you have a few losses in a row, look, I've been there where it's like you have a couple losses in a row and then you just press the buy button just to recover, and it usually never works out. So yeah, it's important to regulate those emotions and try to keep that flat line of emotions for winning and losing. And this is something that just comes with time, guys. Everything I'm going to be discussing in this podcast and future episodes, the idea of this podcast is to show you guys kind of the way of trading psychology. But again, you can't just listen to this podcast and just, now you have it. You can't. You have to. This all comes with experience. There's nothing I can tell you guys where it's like, oh, now that's implanted into your head. Now you're trading perfectly with perfect psychology. It is impossible. It's something that you need to experience, and that's only going to come with time. And trading discipline is also vital to your success. Just like a Stoic practices patience in the face of adversity, traders must learn to wait for the right moment to strike. Discipline in following a trading plan, it's akin to a Stoic's commitment to virtuous living. We have to remain disciplined in our trading, just like in real life as well. And there's things you can do in real life that can kind of correlate to trading and help you in trading. For example, I play poker. I used to play a lot more poker before our government ruined the online poker scene. But learning risk management in poker and psychology in poker helped me with my trading, and vice versa, right? I was already kind of trading before playing poker, so it kind of helped me with both ends. But things like that can definitely help. Discipline in real life as well can help you remain disciplined in your trading. If you wake up every day and you have a plan of, okay, I go to work from 9 to 5, I come home, I eat, and then I go to the gym at night. If you remain disciplined to that, it will definitely kind of leak into your trading psychology and trading discipline as well. You have to have a trading plan. This podcast is designed for newer traders. So I always tell the newer traders, it's okay if you look, I trade supply and demand. I think you guys should definitely look into supply and demand zone trading. It's extremely powerful. It is not the only profitable trading system though. There's tons of profitable trading systems, and the holy grail is what you come up with for yourself. I always recommend new traders explore, look around, look at different strategies. So, whatever intrigues you, look into it, back test it, right? Don't just say, okay, I saw a guy talk about support and resistance, I'm a support and resistance trader now. No, back test it, look into it. Same thing with supply and demand. Look into it. Go on TradingView, back test these systems and strategies, and then you'll come up with a plan. And in my opinion, your first couple months of trading should be kind of experiencing different strategies, back testing, seeing what kind of works for you. I always recommend to open a small account, whatever it is for you to be small, right? Again, if you're a multi-millionaire, small account could be 50 grand. If you only got 20,000 to your name, a couple $1,000 account is fine. So open a small account, practice, risk a little bit of money. You don't have to risk 1%. You don't have to risk 1%. That's a myth. You risk 1% once you have an actual system and strategy in place. And then just kind of slowly come up with a trading plan based off of these testings and everything. And then once you have that trading plan, you have to stick to that trading plan. There's no ifs, ands, or buts about it. I will never take so I'm a supply and demand trader. I will never take a support and resistance trade. Not because it's not profitable, but it's because I don't know too much about it. Yes, I know a small amount about it, but I will never just be like, oh, this is a clear area of support, I'm going to take this trade. No, I take supply and demand zone trades. I know exactly where to place my order around the zone. If you don't know what I'm talking about, it's more of it. The supply and demand zones it's a zone right on the chart. So you enter right before the zone with a stop loss below the zone, and that's what I do. I already know exactly what I'm doing. And when you have that trading plan, it's much easier to control your emotions and remain disciplined. But again, if you're new, I highly recommend just exploring, looking around, and seeing what is what you could be trading and what you shouldn't be trading, what maybe doesn't work for you. And it's a long-term game. But again, just practice, look around, build your own system. You might take supply and demand zones and support and resistance. I personally trade supply and demand zones, but I also look for support and resistance areas and trend lines to see what the kind of the retail trading crowd is doing and kind of try to trade against them. It's a little bit too complex to discuss in this podcast, maybe for another podcast, but it's something I've kind of combined a couple strategies to come up with my own, and nobody has my own strategy, and you should have your own as well. Again, the holy grail is in your head. It is what you like to trade based off of your risk tolerance, what you look for, and what you've practiced. And another thing I highly recommend that you guys do, this is a stoic practice as well, is imagining a worst case scenario to lessen the emotional impact of a loss. This might sound crazy, but it's, in my opinion, this is something I do. It's important to understand that you can lose and imagine that. It might sound weird, but just for an example, in my personal life, if I'm walking around or I'm here at a family event and I know this one person can be very negative, and it's whatever they're going to say, it's probably going to be a negative thing they're going to try to just bring me down to this negative level. And if you go into that, like, let's say I'm turning the corner, I can see them coming towards me, and I just practice the art of imagining the worst case scenario, it's going to not shock me as much, right? If I'm like, oh, here comes Debbie, she's going to be really negative, and it's probably going to be something negative. It's not going to be a positive thing, so don't let it get you down. Just shake your head and be like, yeah, wow, that's terrible, and move on. So just by envisioning that, it can help you, right? If you take the trade, if you press buy or you have a limit order, take the trade. Imagine this trade can lose. It will not impact my emotions. Say that to yourself as you take the setup, or as the setup is kind of playing out. Say that to yourself. It'll definitely lessen the impact. You don't want to be like, this is going to be a winner for sure, because again, you're regulating your emotions. You're understanding that this can be a loss, and that will just build resilience. Super important. It might sound kind of weird, but I think it's a very valuable lesson, because if you don't do this, you might hold on to that losing trade due to the fear of realizing the loss, right? But again, as beginner traders, you have to have a stop loss. I would never recommend not having a stop loss for new traders. I can tell you, I have no evidence of this, but you can take my word for it. I have never, from the very start, I have never taken a trade without a stop loss, because again, I understood that the stop loss will help me lose the battle, not the war, blowing my account. I have never blown an account. I haven't even come close. You should not even come close to blowing an account. Do you know how hard it is to blow an account if you're risking 1%? Like literally, I could take a child who has the ability to click buy and click sell, and as long as they have a stop loss in, if we could just, again, I know it's a kid, but as long as I have a stop loss in, if they risk 1%, and let's say they're looking for 1-to-1s or something, it's almost impossible to blow an account, or at least it would take a long time, right? It would take, like, if they don't know what they're doing, yeah, okay, maybe they blow the account after like a couple years of doing that. But I've seen some people where I just opened an account a week ago, I'm like so close to losing, and I'm like, what are you doing? You have to be more careful with your capital, right? It's very important, and a lot. The problem is, like, the social media traders out there, they really promote basically borderline gambling, and it's not good. And a lot of people don't want to take a loss. Like, you have to take your ego out of trading. You have to understand. You have to go into trading saying, I'm not a good trader right now. I'm going to lose. I'm just trying to get better. And if you practice the art of getting better rather than seeing results, it will pay dividends, right? You shouldn't go into trading trying to make money. Yes, that's the end goal, is to make a profit trading, obviously. But if you go into trading with the idea of, I want to learn this, right? The reason I learned trading is, yes, I wanted to be rich. I wanted to trade for a living. That's why I got into it. But in my career, I understood that it was about learning the game, and then the money will come, right? If I can deposit $1,000 into an account and risk like $5 on every trade and make, I don't know, 15 to 20% that year on $1,000 account, I realized that I could just scale up and do that on a $50,000 account, a $100,000 account, $200,000 account. You just scale up. It's not about making money. The money will come, right? It's very simple. The same thing with any business, really, right? Let's say you want to, I don't know, to take an extreme example, just you wanted to become a professional hockey player. I play hockey. want to become a professional hockey player, do you focus on what you focus on is becoming better at the game, right? You're going to practice every day. You're not going to make any money doing it, and eventually it will come. Obviously, this is kind of a bad example, but you know what I mean. So the money will come later. Focus on becoming a better trader and mastering your emotions, understanding that you can lose, and again, the money will come. Too many traders are focusing on making a quick buck, and I do blame that on a lot of these social media traders out there who they post their, I won $100,000, which is probably all fake in my opinion, because anything can be fake. That's why I do not show P&L. And anyone who says, why should I go join your group? I say, go to my YouTube channel, FX Telepath, and look at my Forex forecast that I have released for the past 3 to 4 years. I don't know the exact time frame. It's all there. You can look at everything. You can see what I said. You can see the accuracy, where these other people are mostly just posting their P&L screenshots, and that's fine. Anybody can be profitable even in a year. There's another trader out there, I'm not going to name names, but they have, this is my broker statement for the past year, and like, sure, let's give them that. What about the year before, right? And a lot of times too, they're just trading like the overall stock market, like the S&P, and it's like all you need to do is press buy and you're going to be profitable. That's not really you're a profitable trader. That's fine, but it's kind of different than if you're trading Forex and you're looking for longs, you're looking for shorts, and you're profitable that way. It's kind of two different situations. So don't get distracted by these social media traders. I highly recommend, if you are going to embark on the trading journey, do not follow these people that are basically borderline gambling and trading. It's gambling. It's not trading. You're probably better off just investing for the long run, buying dividend-paying stocks if you want to make money. If you just, again, I promise you guys, if you just focus on building a craft, learning trading, become obsessed with it, you will do good. With supply and demand zones, it's like I could do this stuff blind now, and it's only because I have a passion for it. I love opening up a chart, looking at the zones, seeing what's going on. It just, I don't know, it gets me going, and that's why I do it, and that's why I love doing the forecasts and everything as well. It's a love for the game. And then what has happened? Well, the money has just come. Again, I was risking I'm not going to discuss how much I risk per trade now, but I was risking $5 a trade. There was times where I was even risking like $2.50, and it was just so that I could practice. And I from the very start, I understood that, and that's kind of why I'm doing this podcast, is to kind of help traders go on the same journey that I went on, where I kind of had, trust me, I did not have my emotions under control at that time. I promise you that. That has come with time. But just the reason for this podcast is to set you guys off on the right foot, or I don't even know if I said that right, but kind of just, plant that seed in you. Like, you're learning first. The money will come, I promise. So anyways, guys, that is going to wrap up this first podcast. Check out my YouTube channel at FX Telepath if you want to check out my forecast, learn about supply and demand zones, check out different strategies as well. I will never just say, only learn from me. I will never say that, because that is what scammers say. So again, check out my YouTube channel. Follow me on Twitter at FX Telepath if you want to get connected with me. And I will see you guys in the next episode. Welcome to episode 2 of the Stoic Trading Psychology Podcast. I am FX Telepath, your host. Happy to have everyone here. I hope you guys enjoyed episode 1. Looking to grow this podcast even more. And in today's episode, we will be discussing what is the best trading strategy. Now, I will kind of set the stage here and acknowledge that there really isn't a best trading strategy, and we will kind of get into that here today. So if you are searching for a holy grail, remember, the Holy Grail is in your own mind. The Holy Grail is not out there. It's not something you can search on YouTube or have a guru teach you that. It's really difficult to say what is the best trading strategy. I will say I'm sure there probably are some that are better than the others. I'm sure that there are some that are a little bit more objective than subjective. We can get into that today, but just want to say, kind of set the stage that, the search for the Holy Grail might not be a search that you should be searching for. You should be trying to create your own strategy, and we're going to talk about that today. So there is a common belief, mostly amongst beginner traders. I've definitely been guilty of this myself too, where they think that there is a holy grail trading strategy. If you look on YouTube, you'll see, I haven't looked at it in a while, but I'm sure you'll see many thumbnails and video titles saying the holy grail, or 99% win rate or something like that. When somebody says they have a 99% win rate, they're basically saying they have the holy grail, because if your win rate was 99%, you'd be probably the best trader of all time. You'd probably beat Nancy Pelosi in trading. I'm sure some of you guys will get that joke, but there is no holy grail, guys. I need to get that out right away. In short, the holy grail is the strategy that you come up with yourself. Now, that doesn't mean you have to just open up a blank chart and just create something yourself. There are many different strategies you can use. Just for example, supply and demand trading. That's what I look at. Support, resistance, SMC, smart money concepts, chart patterns, indicators, a lot of that stuff. Now, I will say that things like chart patterns and indicators and trading trend lines and stuff, that's pretty basic stuff. And I actually personally believe that the bank's algorithms do kind of target those types of systems so that they have enough orders to fill their buy orders, if that makes sense, right? Because if you think about it, if a bank has so many orders that they need to be filled, a ton, like millions and millions, the only way they can fill those orders, it's not against trading them against themselves or other banks. They have to be pretty much trading against retail traders, which is us, right? So I personally, I don't really have any evidence for this. I kind of have this gut feeling that their algorithms that they have for their trading platforms or whatever they're doing, I kind of think that they do have an algorithm that targets support and resistance areas and trend lines and things like that. And I also will say things like trading indicators and stuff like that, they are lagging, right? When you trade price action, right? Like let's say there's a demand zone there and you buy the pullback at a demand zone. If that is a lot different than trading like an EMA or an RSI, a lot of those indicators are lagging and it's not really providing real-time input. I will personally state right now that I personally do believe that price action trading, whether it's supply and demand zone, support resistance, whatever you're doing, smart money concepts, whatever, I will say I do believe those are higher odds of winning than just simply buying because an indicator said this or something like that. I think it is a lot better. And now it doesn't mean you can't have a profitable strategy with indicators, right? And what I recommend people do, look, I teach supply and demand trading. You can follow my YouTube channel. I'm sure a lot of you guys are here from my YouTube channel, but that's what I teach and that's what I trade. It's what I love to trade. It's what makes sense to me. I have traded support resistance in the past before. I never really traded any indicators, but it's kind of what clicked to me, right? It made sense to me when it was taught to me, kind of just watching free YouTube videos and stuff like that. So it clicked to me, and it didn't just click, right? I didn't just watch the videos like, wow, supply and demand trading, that works. I went and back tested it. I traded it. I traded it on a very small account. We talked about trading small accounts in the last episode, but I traded on a small account basically as a real-time example to see if it works or not, and it clicked. And maybe supply and demand trading won't click for you. I recently kind of changed up my strategy from just simply supply and demand zones to using support and resistance areas as well as supply and demand zones. And it's not that I'm buying a support area, but what I really like to see now is, let's say there's a demand zone. I like to see support created right before the demand zone, because then a lot of the times you will see price kind of stop out all the support traders who are buying at support right into our demand zone. Now, I will also say a supply and demand zone, it's pretty much objectively a large player placing an order at that zone. Is it 100% win rate? Absolutely not. But when you see basing and then a massive rally in price, whether that's a green candle or a red candle, I will say without a doubt that retail traders like you and I, we can't move the market like that. We can move a market like that in a penny stock or something like that, but in the Forex markets, absolutely not. So when you see those big, massive moves away, up and down, whether it's buying and selling, those are the banks. Those are the large players that are in the markets, right? So I do like that objective reality of supply and demand trading, where something like a trend line, you can't really say that, oh, the bank made that trend line, right? I don't know about that, but again, what I like about the supply and demand trading methodology is that, there is that aspect of, we can't move the markets like that. It's only the big players with the large accounts, if that makes any sense. Now, it doesn't mean that supply and demand is the holy grail. I personally find it the best trading strategy objectively, but it doesn't mean you have to just trade that, right? Like I said, can't even talk right now. Like I said, the combining it together with things can definitely be useful. For example, let's say you trade a bull flag or something like that, which is basically a breakout trade. What I would do in that instance is, let's say you want to trade a bull flag on a 5-minute time frame. What I would do is I would then go to a 1-hour time frame and identify supply and demand zones and just see, are you buying a breakout of a bull flag right into a higher time frame supply zone? Is that what you're doing? Or are you buying a bull flag as we're coming out of a 1-hour demand zone? That would be a higher odds chance of that bull flag working out. I haven't back tested that personally, but that might be something that you might be interested in. If you do that, let me know. Again, all of this revolves around your own testing, right? Just because I say something doesn't make it true. And the kind of the issue with this holy grail type, mindset, it's the people on YouTube. And look, a lot of them strategy hop, and they're just trying to make content, sell another course. What I will say is, if I'm promoting some sort of strategy that's different than supply and demand, it is because I truly believe it works. It's not just because, I need to make more content and supply and demand isn't popular anymore, and I need to start talking about this new concept or this new indicator. I will never do that unless I actually have tested it myself and I believe in it. I'll just tell you guys that right now. So the Holy Grail, it is certainly, it's a myth, right? There's no ifs, ands, or buts about it. There's many different factors that can make up a trading strategy. You can use support and resistance along with supply and demand. You could use chart patterns with supply and demand. You could use chart patterns with support and resistance. There's so many different methods to trade, and again, it's all going to revolve around your own testing. And probably the most important factor when it comes to trading, let's say, for example, there was a Holy Grail trading strategy. To be funny here, let's just say you only buy the S&P 500 on a full moon at 1:58 p.m. and you risk and you put your stop loss below the previous day's low, and you're guaranteed to win 100% of the time. Let's say that's the Holy Grail and it exists, and I'm wrong. Let's say that for an instance, if you cannot hold that trade until take profit, or let's say price is running towards your stop loss and you get scared and you close out the position, it's not a Holy Grail anymore, right? You have to have the trading psychology along with the strategy in order for the strategy to actually work. Now, let's say you look for 2-to-1s, or let's just say you look for 5-to-1 trades. 5-to-1 trades, let's say your win rate's like 35% or something like that. That's really good. If you trade like that, you're going to lose a lot, right? And you have to make sure that you're not going on tilt. Going on tilt is actually a poker term. For any of you who don't know, I am an avid poker player. I love playing poker. It has absolutely helped me with my trading, and trading has helped me with my poker playing. I am a profitable poker player as well. Am I a professional poker player? I wouldn't really say that, but I definitely am able to exploit weaker players than me. And honestly, with poker playing, it's all about playing players who are worse than you. Like, it's really that simple. You just sit down on a table at the casino or wherever you're playing, and if the players are better than you, then you leave. And if they're worse than you, which you can tell pretty quickly, then you stay. It's really that simple. Anyways, you can go on tilt, right? I could get pocket aces and lose against pocket queens or something, and then I could get pocket aces again and lose and lose and lose and lose. Technically, you could lose forever. It's not going to happen, but on a technical level, it can. So you have to make sure that you do not go on tilt, and I have been guilty of that. Not really in trading, because it's kind of difficult, right? But like, there's been times where, especially when I'm playing online, I don't really play online anymore, and you have pocket aces, and then you lose a hand, or I don't know, you have the straight, and some guy's got a flush, and you lose you lose your whole stack. And then the next hand, you're like, you have some dumb hand like 9-4 suited, and you just raise, and you get yourself into trouble, and you just call, make bad calls because you're on tilt. You do not want to do that in trading, and if you do things like that, it is just going to damage your account. Now, the equivalent to trading is, let's say you have that 5-to-1 risk to reward ratio. you can expect pretty big drawdowns with that risk reward ratio, like even up to 10%, even more. Looking for a risk reward like that. Now with drawdown examples, there are average drawdowns that you'll probably have, and then there's also like max drawdowns that you'll have, right? So like let's say on a 5-to-1 strategy, like your average drawdown is like, I don't know, six trades in a row lost or something. You know, your max could be like 10 to 12, or I don't know. I don't know the exact numbers, right? But there are tools where you can look into this stuff, and it's just more about expecting that. For another great example is I was just golfing on the weekend, and I shot an 84. I don't know if anybody watches golf or plays golf, but an 84 for me is my best score. Before it was 85, so it was one less stroke. Actually, it was very close to an 83, and I shot an 84, and it's pretty much the best round it's the best round I've ever had. So I am now expecting the next time to golf. I'm not being negative when I say this, but I am just expecting to shoot worse, right? Because that's my best round. Maybe I shoot in the 80, in the 70s next time, maybe, but I just kind of doubt it, right? I'm just thinking, basically based on the past, I'll probably shoot in the high 80s next time, maybe a couple times more in a row, and then maybe I'll shoot an 81 or something like that, right? I'm just saying, I'm going into the next round not with high, whatever you call it, like high probability of shooting an 84. I'm not going into it expecting to break 85. I'm really not. Do I want to? Yes. Will I play the same way I did? Maybe, maybe not. I'm going to do the exact same things, and it might not work out. I might get a couple bad bounces or something, and it's the same thing with trading. If you win 2 trades in a row, you can't expect to win the 3rd. If you lose 4 trades in a row, you can't expect to win the 5th. You just have to have a system that's in play, and basically trade that system and let it work out in the long run. If you understand that you are going to go through drawdowns in these strategies, it will just become easier. I'm telling you guys, if you, I don't know, in the Stoic philosophy world, there's this concept of, it's kind of wild, but when you tuck your kid into bed at night, you know, think to yourself, you know, he might not be alive in the morning, or he or she might not be alive in the morning. And that's kind of wild to think. I don't know about that, but, you know, it's just the idea of not letting anything, you know, get to your head or take it for granted, right? If you go on a win streak, don't expect to keep winning. Expect to lose almost every trade, and then when you win, it'll be good. And then when you lose, you're like, wow, I expected that, right? And that's the reality of it. If you go on a massive drawdown and your strategy is not working, okay, maybe there's things that we need to change here. But, you know, it's all about just remembering. It's all about keeping the ups and downs to a minimum. In last week's episode, I talked about trying to have a stable mindset of like not getting too excited, not going from, you know, 10 down to 0 and down up to 10 again as far as like a level of emotion. Try to keep it at a 5, right? You lost. Ah, damn, that sucks. I win. Okay, great. That's great. Not like, oh my God, I won. Yes. Or like, oh my God, I lost. Everything is the worst. You don't want to do that. I'm telling you guys right now, I used to be like that. I used to win a trade and I'd put on music and I'd feel like I'm the hot shit of the town, and you know, it's just, it doesn't work out. Not because I didn't win the next trade, but because when you lost, you're like, oh my God, what the hell's happening here, right? So it's all about trying to keep that consistent emotion in play, and understanding that it's not always going to work out, and don't expect to win every trade, especially if you have a lower win rate with a higher risk reward. And if you have a hard time losing like that, I challenge you to work on that, but I also recommend maybe finding a strategy where you're only looking for like 2-to-1s, 3-to-1s instead of those 5-to-1s, right? Just to take it to an extreme. Imagine you were looking for 10-to-1 trades. I don't know what the break-even rate on that is. I'm not a math guy, but you know, you're gonna lose a lot, and you have to be okay with that. And not only do you have to be okay with losing a lot, you have to be okay with, I took this trade now, and I'm at 7-to-1 risk reward right now. Do I bump my stop loss up? I don't know. Technically, you should be leaving it, right, or at least putting it at break even. So things like that are going to come into play, and it's very, very challenging. This is not an easy market to be in, I will tell you guys that. So there's just so many different psychology aspects. That's personally why I love trading, and I love talking about it. It's so cool how many different situations there are and how it can really, really test you. So as far as coming up with your holy grail strategy, it depends on what you're trading. Again, I'm sure a lot of you guys are here from my YouTube channel because I did bring it up, and I do appreciate you guys tuning in. I really appreciate it a lot. If you want to be on this podcast discussing trading psychology and your own journey with it or something, you have interesting things to discuss, please let me know, and maybe we can do an episode. But I do encourage you guys to give me a 5-star rating, if you don't mind, would be probably help the show a lot. So I definitely, it would be much appreciated. But as far as developing your own best strategy, I would try to align it with your personal strengths. Again, if you don't mind losing a lot, having a 5-to-1 risk reward ratio, it's very rewarding, and a lot of times price will go to that 5-to-1 pretty damn quickly. Again, if you have a hard time losing, maybe have a lower risk reward and win more, right? It's all going to depend on your back testing, and I will point you guys in the direction of supply and demand trading because that is what I know. I'm not going to sit here as a supply and demand trader and recommend that you guys trade trend lines and support and resistance. I don't know anything about that, but what I will say is if you want to come up with your holy grail trading strategy, and if you listen to what I said earlier about the objective truth of when price moves away that fast, that is a bank or large player buying, and we want to trade with the banks, I will point you guys in the direction of using supply and demand first, at least on a higher time frame. So what I recommend is at minimum, use supply and demand zones on a higher time frame. So let's say you want to trade a 5-minute chart. I don't recommend going any lower than the 5-minute chart, so I'm not going to give an example for 1 minute. Let's say you want to trade a 5-minute time frame. What I would do is, at minimum, on your 1-hour chart, learn how to identify supply and demand zones on a 1-hour chart and just kind of get the bigger picture, right? Because maybe you'll see up top you have a nice supply zone and down below you have a nice demand zone. Maybe you're in the middle of that. In supply and demand trading, we call that the curve. So if you're near a demand zone on the 1-hour chart, then you're at the low end of the curve. If you're at the supply zone on the 1-hour chart, you're at the high end of the curve, and you should look for shorts, right? If you're at the lower end of the curve, you should look for longs. High end of the curve, you should look for shorts, right? If that makes any sense. If it doesn't, feel free to send me a message on Twitter or Instagram, or email me, and I'll try to answer you when I can. So use that and go from there, right? I'm just kind of giving you guys that I don't know, that first step, that first stage in building your strategy. And then maybe from there, maybe you watched a video on chart patterns, right? We'll use, I don't know, like the flag patterns again. They're all kind of the same to me, but again, I don't know too much about them. Maybe you really like those chart patterns, and then maybe only, again, buy the flags at a demand zone, right? And then another thing I would recommend is using trend as well. Try to trade with the trend when you can, at least the trend on the higher time frame. That's, again, I'm just trying to point you guys in a direction that I think is going to benefit you. Let's say you don't want to trade supply and demand and you already like support and resistance. That's completely fine with me. Obviously, I don't care. Use higher time frame analysis. That is really what's going to separate, the men from the boys or whatever. And the reason why higher time frame, multiple time frame analysis works really well is not just because, let's say you don't really want to be buying at a supply zone when, let's say, there's a 5-minute demand zone right into a 1-hour supply zone. Maybe not the best idea, right? But if you're buying a demand zone on a 5-minute chart inside of a 1-hour demand zone, it's going to increase your odds because those higher time frame zones are kicking in. Not only does it increase your odds of the trade working out because of the fact that it's a 5-minute demand zone instead of a 1-hour demand zone. Keep going. It's a 1-hour demand zone instead of a daily demand zone instead of a monthly zone. You can just keep going and going and going, and that increases the odds. But what it can do for your strategy is, let's say, again, you look for a 5-minute demand zone inside of a 1-hour demand zone, and that's also in a daily demand zone. And let's say you look for the 5-to-1 trades. You're pretty good at taking losses. You don't mind. You understand the long-term game. Your trading psychology is on point. Let's say you buy that 5-minute demand zone. You look for a 5-to-1. But you've identified that, wow, look at the higher time frames. This thing really could shoot up, and there's more profit to potentially be made. Well, what you could do is, instead of just taking full profit at that 5-to-1 risk reward or whatever you do, maybe only sell 75% of your position and have a 25% of your position just as a runner, right? Now, this might not work if you're taking a risky 5-minute demand zone inside of a 1-hour zone. You probably just want to take your profit at a 5-to-1. That's my best advice, I guess. But again, if you're using the multiple time frame analysis with it, there's just so much more money to be made a lot of the times, and you can turn that extra 25% into like another overall 5-to-1, right? Giving you like a 10-to-1 trade, depending. It's happened to me before. It can definitely happen to you guys too. But if you don't use the higher time frame analysis, you're going to probably get smoked, or you're just going to give up a bunch of money. That's just my personal opinion. So it's not just about, making sure you're buying at a demand zone on the higher time frame. It's about understanding maybe this is a time where you could risk more. Maybe you typically risk 1%, but you realize, hey, this is a 5-minute zone instead of a 1-hour zone, instead of a daily zone, all at demand. It's a great time to buy. Maybe that's when you risk 2% or 3% or whatever you feel comfortable with. Again, that's going to rely on your testing as well, but it's just something to consider. And again, I'm just trying to put you towards the right path. Whatever strategy you're using, use multiple time frame analysis. If you're using the RSI, the Relative Strength Index, also known as the really stupid indicator, that's just a joke I've heard from another trader, but if you're using that, use it on the higher time frame as well. Just because the RSI is saying overbought on the 5-minute time frame, maybe it's oversold on the 1-hour time frame, and it's like, what do you do there, right? Well, maybe you wait for it to be oversold on the 1-hour time frame, and then also oversold on the 5-minute time frame, and then you're just using the multiple time frame analysis to just kind of give you an edge. Remember, trading is all about having an edge, and your edge isn't going to be that big in reality. I know a lot of people say they have the big edges, but trust me when I say this, those people that you see on YouTube who claim to have 99% win rate or things like that, they're mostly full of shit. I will say that right now. Nothing against them. I'm not trying to start any beef or anything, but they're basically just preying on beginner traders. You'll see it all the time where these people that run these Bitcoin scams, they claim they'll make you 5% a day or something like that. It's so unrealistic. It's way too good to be true. So you have to be careful of those people. And a lot of times they're strategy hopping because they want to keep the content flowing and keep it fresh, get new people in here. They want to have the supply and demand traders, the support and resistance traders, the indicator traders, the chart pattern traders. They want to have all of them on their channel watching so they can sell more courses and make money that way. Do I have a course? Yes, but it's all supply and demand trading. Again, if I ever were to change my strategy up, it would be because I believe in it. I'm personally not going to be changing my strategy up because I trade supply and demand and it works for me. There's no need for me to trade something different. Again, I've added to it using the support resistance trap areas, things like that, trend line traps, things like that. But that's because I tested it and I saw it work really well. And I'm like, wow, that really works. And I added it. So there's things I might add. I might tweak it a little bit, but I'm not going to be strategy hopping. And that's something you don't want to be doing too. Again, I talked about this in the first episode of the podcast. It's okay to strategy hop / test when you're first starting out. If you're an absolute beginner trader and you don't know what you want to trade, try different things, right? Again, I highly recommend you stick to supply and demand zones and higher time frame analysis to start, because I promise you probably will see the power of it, but it's okay if you want to explore different strategies. But for me now, especially as a profitable trader, I'm not going to just start to look at bear flag patterns. It would just mess me up, and I'm not going to do that. It'd probably just kind of be analysis paralysis at that point. Now, if you have tested a system and you like it, and you just started trading it a month ago, and maybe you're break even, or you're down 1%, or you're up 1%. Let's just say down 2%, which is not that crazy. You're going to have losing months, I promise you guys. Maybe at that point, you should not be strategy hopping. Test it for a long time. 1 month is nothing. 2 months is nothing. 3 months is nothing. I've even seen these quote unquote trading gurus on Instagram and YouTube, and I did a live broker login, and it's like, and they showed a statement for a year. Even a year is nothing. And in reality, they could have just bought on that. They could have had 10 different accounts and just had daddy's money before, 10 different accounts, and they just showed you one account. It's that easy to fake. That's why those don't even mean anything. I will give them a little bit more credit than other traders online. But again, what I pride myself in is the fact that you can go back on my YouTube channel and look at my forecast for the past, I don't even know now, 2-3 years. It's all there. I have never deleted one of them. I've only missed a few. I don't do them on Christmas and New Year's because when the markets aren't even moving and nobody's really watching. So I don't do them then. But I've never deleted one. I've never been like, wow, that was a bad week, better delete that. And trust me, there's been bad weeks where I'm like, wow, that was a bad forecast. And it's not even that it was bad. It just didn't work out. And that's the reality of it. Most people can't say that. There are a few traders who do the forecasts, and I have a lot of respect for them, and I hope that you guys have respect for me for doing that as well. That's really the only way you can gauge somebody's analysis. Live broker logins don't mean anything. I almost want to do an example of make 5 accounts and just show you guys and put $5,000 each and just do crazy trades, and one of them's bound to work out, and just look at my live broker login and look at my trading statement, because it's not photoshopped. It's really not, and it's just, I don't know, it's so easy to fake things. So be careful who you're following out there. But again, test different things, guys. There's no reason not to. There's nothing wrong with trying out new things, but the goal, remember, is to come up with your own system. And I will say, let's say you're starting out brand new today, and you're going to say, okay, I'm going to take Kevin's advice, and I'm going to look at supply and demand zones, and I'm going to use higher time frame analysis, but I'm going to explore different strategies and see what I can combine with that to come up with my own quote-unquote holy grail. Try to have a goal in mind of I'm going to test things out for the next 6 months, and then the next 6 months, I'm going to trade whatever I figured out, and just trade that for the next 6 months, whether I win or lose or not. I think that's a good plan. You don't want to be doing this for a year. The goal is to come up with a strategy and a system as soon as you can. There's no rush, but it's also, you don't want to be testing things out for an entire year. Again, maybe you do it for 2 months, but it depends on how much work you can put in, right? If you can only spend 20 minutes a day doing it, it might take you a little bit longer. But, I think saying for the next 6 months, I'm going to experiment, back test, get confident, open up a brokerage account, and then the next 6 months after that, I'm going to trade the system that I come up with. I think that is a very, very solid plan to just have sort of a timeline in place so it keeps you from strategy hopping. And then again, what's very important is that you trade that system for the next 6 months or whatever your time frames are. You have to trade that system. If you go into a 10% drawdown, keep trading that system. If you go into a 10% drawdown and you don't have a system, then I would just pull away, and I would pull my money out of the trading account, or just kind of put it on pause. That's what I would do. But anyways, guys, I feel like that is enough for today's podcast. Let me know what you guys think. Let me know if there's anything I could do differently, the way I'm saying things, the way it's flowing. This is new for me. I'm mostly doing videos, and I want to get better at this. I want to grow this podcast because I listen to podcasts a lot. And I want to have my own, and I want to have you guys on here. So please give me feedback, whether it's positive or negative. It would be very, very much appreciated. I will not take it personally unless you attack my family or something. But, give me feedback. I would really, really appreciate it. And if you do like it, I would appreciate giving a 5-star rating as well. And just spreading the word. Share it on your social media. Share it to new traders who need help with the psychology aspect of trading. And just, I don't know, I'm trying to be a little bit different here and talk about things that a lot of people aren't talking about. So anyways, guys, check out my YouTube channel as well, FX Telepath for forecasts, and my Twitter, X, whatever you want to call it as well, at FX Telepath. And I will see you guys in the next episode. Welcome to another episode of the Stoic Trading Psychology Podcast, where we dive deep into the world of trading psychology and what it truly takes to become a consistently profitable trader. Joining me today is Bash, a trader who has mastered the mental game and has really developed the resilience needed for success. Today we will be exploring the mindset shifts, emotional challenges, key habits that truly separate the winners from the losers in this highly competitive trading space. So stay tuned for the episode. That could definitely help you transform the way that you approach trading. All right, what's going on, everyone? I'm here with, what is your name, man?
Bash,
whichever you prefer. Or Bashi. Nice
Yeah.
to meet you, man. And where are you located?
Yeah, nice to meet you too. I'm located in the UK, central England, not London.
Okay, nice. Yeah, I've never been out that way, but how long have you been trading for?
Not long at all, to be honest. I went live in April, so only been 5, 6 months.
Okay.
It started my studying of my content technical wise probably in February. So I did about 2.5 months worth of studying before going live. And my first type of exposure to trading, like from the first time of ever placing a trade, that was around December time.
Okay. Like you placed a live trade?
Yeah, because I had a personal account. I got caught up in one of those online gurus you come across and stuff.
Oh yeah.
Um, so got swindled into making an account, with the broker that they use. So obviously, it's that whole linking with the broker. They get financial benefits from it, that type of thing. Um, and this person, talks about trading and stuff and how you can make a lot of money, right? So I was like, cool, seems like a good way to go. And he's kind of offering it as he's kind of teaching you, like a mentor. It wasn't really clear to us if it was signals or not because this is my first type of exposure to trading. So I was like, not too sure what was going on, but they said that, oh, you can trade, we teach people, etc. Right? Um, so I signed up with a broker, deposited money. Basically, he made me place a trade with him, a certain lot size for a couple of minutes, lost like $150 in the space of a couple of minutes.
Wow.
Um, yeah, he made me place like 4 or 5 lots on Euro USD with no stop loss on 7 lots. On an account that had like $300 in there. That's that's a
Yeah.
lot.
So why did he
Yeah,
do that? Like, was that just part of the scam, or that was like one of his signals that he was taking?
no, so what he does is when you join his Telegram group, you got some person behind the general customer service stuff. He gets you to sign up and go through all the KYC, deposit money, etc. Then you get passed over to the guy who actually does the trading himself or the guru himself, and then he places that trade with you. He doesn't tell me what stop loss is or anything. I had no idea. I was
Yeah.
completely first time experience, bro. No idea what an SL is. I didn't even know what a lot was. I was just like,
Yeah.
okay, cool. I'll do what he says, right? Um, Price dropped like I think it was like 10 pips or something like that. I remember it dropped, and we were looking for buys. It dropped 10 pips. I lost like $150 in like a couple of minutes, and then I was told to close the trade out. The person said, "Oh, it's a slow day. Don't worry, we'll get there another day," and that was it. After then, I kept messaging him, asking him about where the content is, the education, if there's signals. I asked him everything. He just kept me on red. Didn't do nothing. Yeah.
Wow.
And then later on, I come to realize about the whole process of why they make you sign up with the broker and stuff. And for that person to get paid by that broker, you have to deposit a certain amount of money in the account
Hmm.
and then place a live trade with a certain amount of lot sizes. And it has to be open for a certain amount of time for that broker to then say the accounts are valid or the accounts are being used or whatever for that person to then get the kickback of the money to that person. After I did my research, I realized, wow, I've been scammed.
Yeah. So literally, they get you to sign up for the broker. They can't
Yeah,
just get a bunch
deposit
of random
money.
signups to make an account because they'd make a bunch of money on the commission. So they have to have somebody actually place a trade. That's crazy.
Yeah, it's really, really bad. And when I spoke to a couple of the people, they were telling me, I'm not too clued up on it because I've never, sold signals or done anything like that. But I was told, like, even with other brokers where you get loads of people signing up, you get a kickback from the broker themselves, like some sort of financial benefit when people sign up to them. And obviously when they blow accounts and commissions and stuff like that as well. Um,
Yeah, I always get really suspicious of people promoting brokers and stuff like that. That's nothing I do,
mm,
unless it's like that's interactive brokers. There's some actual popular broker that everyone's heard of, and they're just getting a commission from you joining. That's different. But if it's a broker
yeah.
you've never heard of, that's pretty crazy. So let me ask you: when you joined this guy's group, what did you come across him on YouTube, Instagram, like Twitter? How did you find this guy?
So I myself, I'm a petrol head. I'm a car enthusiast. I actually drive and build race cars.
Oh, okay, cool.
So one of the YouTubers I follow, he's got like 1 million followers in on YouTube in the UK, a British guy, right?
Yep.
And I've always followed him on Instagram and YouTube and stuff. And I thought I'm one of his followers and stuff like that. He just does his car content. And then he started pushing this person as a guru, saying that, oh, I'm a trader now. Sign up to this guy, you get loads of money, sending screenshots of people making money. He's like, oh, guys, you guys should do it. I'm going to leave the UK now. I'm going to go Dubai. I've made like 100K today because of trading, because of this guy. So he was kind of like the social media influence behind this other person. And his Instagram right now has 1 million subscribers, followers.
Wow.
And yeah, so he's kicking back the money to this dude. And I've even messaged him saying to the YouTuber that, oh, you know, how do you place the trades? He said, I don't place them. My account's linked to his and he places the trade and it automatically financially benefits him. And I was like, well, why is it that you're not doing that for your followers or your subscribers? Why is it that you, as a very wealthy, financially stable person, as a YouTuber, are getting that financial benefit when we're just a common working class people trying to make a buck and survive, right?
Yeah.
And that guy, the guru, isn't even teaching us. He's not giving us any value, but you, the YouTuber, are getting all the value, all the money because you're basically the social media person for the guy. You're giving him the clientele.
Seems like a massive scam. Sorry to cut you off, but it's
no, it is. And the funny person is, because that person's a car guy, we actually butted heads on social media because when I go to the racetrack, there's a community of his, and people started to call him out, the YouTuber, for his scams, and I brought up, you know, he's a scammer and stuff. And, you know, after I joined that guru group and then all this stuff happened, I started to come across loads of other people getting scammed by him. So we actually made a little tiny group about it. And honestly, so many people have been scammed by the YouTuber. I even had a bit of a argument with the YouTuber and stuff like that. So yeah, like I don't want to expose names or anything, but
yeah, no need to name names, but and that's the thing. There's so many of these guys out there too. It's crazy. Like the schemes they come up with. It's so like not. It's funny. It's not funny, but it's just unbelievable. Like
I don't get how it's legal in the UK. Like,
they probably
the world are quite advanced, you know, security wise and stuff like that. It was absolutely shocking, but the dude's left the UK now. He's made enough money to go live in Dubai.
Oh yeah.
So yeah, but what's annoying is that all of us followers, you followed him for his car content. You're a car enthusiast. You look up to him as a social media type person. You know, someone that you kind of enjoy watching their content. To then start pushing trading and scammers, it really hurts, bro.
Oh, it does.
It's like someone that you idolize takes advantage of you. It hurts really bad.
Definitely, and it sucks too because trading is, you know, a viable way to make money. I always recommend it should be like a side hustle kind of thing. Like you should never really fully rely on trading, but it's sad that you can actually trade profitably, and then these guys, maybe they scam people and then they just probably give up. But it seems like you didn't really. Seems like you just kept going and you wanted to learn, right? So.
Yeah, that's what it was. Because I kind of knew about Forex and stuff anyway, because I dabbled in setting up businesses like in the UK. I set up a couple of businesses here and there, just trying to figure out how the system works, the algorithm, the corporate algorithm and stuff. So
yeah,
and a lot of my business was related to importing, exporting car parts for the performance cars, because, you know, I build motors and stuff like that for cars.
Yeah.
So I was always aware of GBP USD conversion and stuff like that.
Yeah, because a lot of the business had to hedge currencies and stuff like that, right? So.
Yeah, because my suppliers are from the USA, I kind of had to work out the conversion, the freight cost, the taxes, and it kind of made me realize, you know what, I've kind of had an exposure to Forex, just tiny bit of an exposure over the last few years. So I think that's kind of what made me think, you know what, I'm going to follow what this guy does say about the signals and all that stuff. So being scammed, it's one of the worst things ever. And I just want to send a message out to everyone. When you're looking to trade, don't go for the guys who have loads of followers, loads of, you know, views and followers. Don't go for those guys. Go for the traders who have a small amount of following, because they're actually busy working and trading.
Yeah, I couldn't agree more. I mean, I not to say that about myself, but I don't have too many. I think I have 21 or 22,000 subscribers on YouTube right now, and
including me.
including you. Yeah, appreciate that. But yeah, and I mean that's not a super small following, but it or not super big or super small, but it could get larger. But I'm trying to actually provide value, and one thing I like that I do is I have my weekly forecast on YouTube. I've never deleted any of them. I do it every week. I only miss them around Christmas time. And all that analysis is there on YouTube for people to critique. They can go back to last April, on the April 15th, or what I mean. They could see, and they can go back in the charts and see the evidence of how accurate it was. And a lot of these guys, they just have their cars and their most likely fake P&L. And then that's how they scam the beginner traders who are desperate to make a quick buck, right? But we all know
they showed the lifestyle. They showed the lifestyle, and that's what entices people at the moment. The whole social media lifestyle. But yeah, I mean, your content's great because you're not looking for anything. You do plug your course and stuff like that, or your community, but that's fine because you're still providing value regardless if people join or not. You're still providing the weekly analysis. You're talking about supply demand. You're talking about rally-based rallying, stuff like that. So you're talking about candlestick anatomy, what supply demand is, trend. You're adding value regardless if people don't or do sign up to your community. So from my perspective, I've not signed up, but I've taken value from your weekly analysis alongside my own, of course. But I always look at it as a extra. Oh, he's thinking the same thing. Cool. That makes me a little bit more confident, type thing.
Yeah, that makes sense for sure. I know people that maybe they just use my stuff for like higher time frame analysis or whatever. But I always tell traders come up with your own strategy. Maybe you like supply and demand. Maybe you want to combine it with trend lines or RSI indicator or whatever. I'm just making things up. If you want to combine it, that's great. But it's all I don't know if you said it to me earlier, but the holy grail is in your own mind. It's the strategy that you come up with. It's not going to be the exact same, right? So, anyways, more about you. Are you a swing trader? Are you a day trader? What are you doing currently?
I'm intraday. Yeah, I'm intraday. So I normally trade the 1 minute chart.
Okay.
I normally trade London Open. So 8 a.m. UK time to like 10:30 UK time. I'm not so good with New York because the setups are more clearer for me in London Open because I use Asia as a liquidity pools. So I look at where the liquidity is, and Asia is kind of ideal for that. I do trade New York, but most of my setups and data-wise and stuff like that, most of my setups are normally in London Open. But London 8 till 10:30, New York 2 till about 4 p.m. because after 4 p.m. London banks close anyway, so then the volatility dies out.
Yeah, that's good. I can already tell you're probably doing all right because you clearly have. One of my next questions is what session do you trade? And you've already seems like you have a set structure of what you're doing. So what strategy what strategy do you trade? I know you probably have your own, but what technicals are you using?
So technicals, I use basically market structure, breaker structure, change of characters, supply demand, that type of thing. But I say my strategy mainly focus on liquidity points. So where is the liquidity within the market? So I use a higher time frame analysis for the overall bias, but then I do all my trades on the 1 minute to kind of catch if I could catch the move of the day and you get a New York continuation, I might end that day at 50 risk reward.
Yeah.
So it's very high risk reward based, but the win rate is low because you're entering on a 1 minute time frame, but you're trying to capitalize on the higher time frame bias, right?
Yeah, I know exactly. You're turning basically an intraday day trade into a potential swing trade, right?
Yeah, but I never really hold them for more than a day because I'm on prop firms, charges, swaps and stuff like that. But I kind of have that mentality so that when I do start getting payouts and funding my purse, I can afford to then hold for 1 or 2 days and get the crazy 100 risk reward trades that you see.
Yeah.
And stuff like that.
So
I just target liquidity mainly.
That's cool. So one of the next questions I had, you kind of touched on it. Is your win rate? Would you say your win rate's above or below 50%?
It's in and around the 50% zone. It depends. When I was doing my back testing, I was getting around 50 to 60%.
Yeah.
On live data from April to now, I didn't really trade July or August because the market conditions weren't ideal, and I am a very restricted trader.
Yeah.
So to me, discipline is key. So I didn't really trade July, August, but in June, I think I only took 2 losses out of 16 trades.
Wow.
So that was a really good month. But as traders, we know you get good months, bad months. So I'm not gonna say I have a generally high win rate, but yeah, it's around 50-ish%. On a good month, you could probably get about 70% on a good month.
Yeah, but that's like above the mean, right? That's good that you. It's good that you've identified that it's this month where you've only taken 2 losses or whatever. That it's a rare month, and you could almost even expect a month full of losses, right?
Of course.
I even talk about that on the. We do these Sunday meetings in the group, and I kind of touch on psychology at the beginning for a bit. And I like the analogy of golf. I don't know if there's any golf out in the UK, but going golfing, there's like your average score, and then sometimes you'll have a really, really bad round, and then sometimes you'll have a really, really good round. And there's like it's just that fluctuation. So like for example, a couple month ago, maybe I had a really good round, the best round I've ever had. And then I already went into that next round of golf knowing I'm probably not going to shoot what I shot last time. If I do, perfect. If I shoot better, even better. But I went into it expecting not to play as good, and that happened. But then it didn't surprise me, right? And it's just about having that preparation to prepare you for, when the downturn comes. So it's good that you are aware that that month that you had that was super good it's probably not going to be like that next month, right? So that's good.
Yeah, I mean, but July and August, I hit nothing but SLs.
Yeah,
So,
yeah, exactly.
but obviously, it comes down to understanding the market conditions. It comes down to understanding your strategy. It comes down to understanding what it means to trade and what it means to be a trader. Just because you have 1 month of a high win rate, that doesn't mean your next month's going to have that. And you should go into that month with an open mind of your data is the average is this. So if you do get a losing streak, don't start revenge trading because you've had a good month. Because people kind of get caught up in the whole, I'm having a winning streak, and then a losing streak starts to come and they just lose. The psychology just crumbles because they can't, keep their mentality. How can I put it? They can't be honest with themselves, or they can't remember that trading you're gonna have losing streaks. You just gotta humble yourself with it.
Yeah, 100%. So when you're going through a losing streak, I know you're relatively new to trading, but like what are there any tips you'd give other traders like when you're going through a losing streak? Like what do you do? What do you say things to yourself? Like is there anything you change? Like what does it look like when you're going through a losing streak?
So in terms of support for losing streak, I mean, you have to have a big loss. As a trader, you have to have that one big loss that really makes you feel sick. So then you think, wow, I really need to stick to my trading plan. Because the trading plan is in place to protect you because it should be data driven. And I say that because a lot of traders make trading plans based on how they feel, not based on statistics and data. So for me, what I would say to a lot of people is if you've got good batch of data, 200, 300 back tests in market conditions of various different types, trending, consolidating, breakout, market conditions. As long as you've got your data and you've got your losing streak from that data, you should then expect you're going to have that as an average. So for me, psychologically, having the data makes me confident because I'm a very rule-based person. And coming into trading, I understand that this is a data-driven job. So what I would say to people is when you get a losing streak, if it's part of your trading plan, take it on the chin. It is what it is. You should be using correct risk management in line with your losing streak so you're not going to lose your capital or blow challenges.
Yeah.
And that should mentally make you more rigid during that losing streak period.
Yeah, I couldn't agree more. Like I've tell people all the time, I might have probably mentioned in the last couple podcasts I've done too, where there's almost nothing you can do. It's your first bad losing streak. It's going to be tough. You're going to be like, what the heck am I doing here? Like, is this even profitable? But like you said, if you have the data to back it up, if you have the back testing to back it up, you'll remember, okay, this can happen, right? And if you're just randomly like, oh, I haven't back tested it, but I'm gonna buy every 1 hour demand zone in a daily trend. Maybe the win rate will be like 50-50 on that, but what's the risk reward, right? But if you have that back tested data, you can understand like this is going to happen. Even there's a great website, I think it's called winrate.io, and you can just plug in your account size, your average risk reward, and just what your risk on every trade, and and how many trades you want to take, and it'll just run through and you can just keep hitting it. It'll run through different cycles of like different outcomes, right? So like you can plug it in, let's say 3-to-1 risk reward, I don't know, 40% win rate or something like that. You can plug it in, like sometimes your account will start off like where you take 7 losses in a row, but then and then it eventually evens out sometime, and then you hit refresh, it'll start a whole new sequence over again, and it'll be like 5 wins in a row followed by 10 losses in a row, and then 2 wins, and then 1 loss, 3 wins, right? Like, so it'll just run you through different types of outcomes, but it all ends with the same results. And even just seeing that definitely just helps build your confidence. So I suggest anybody, even you, check out winrate.io. It just gives you like a good visual like of it. And even if you know, oh, I'm going to lose, yes, I'm going to have like 7 loss drawdowns depending on your win rate. You can know that, but once you see it kind of playing out in a simulated thing, it could definitely just help with that, with your mindset and your discipline. So I highly recommend anyone check that out. I'm not affiliated with them at all, by the way. I think it's a great tool. So
no, that makes complete sense, and it's the same thing with backtesting. When you get the data, it makes you feel comfortable. When you see the data of your losing streak, it makes you feel comfortable. Like with me, I know my losing streak on average is 4 trades average.
Yeah.
What I do is my risk management is far less than that, because I mentally can't stomach a bigger risk on a prop firm challenge, right?
Yeah.
Me personally, I risk anywhere from 0.2 to 0.35%.
Right.
But I'm targeting high risk reward trades. So I can have a losing streak of 10 trades and it won't really hinder the account. And I prefer that for me personally, because I use a trade copy and it's linked to all of my accounts. So I would rather risk what I'm comfortable losing. So that's another thing I say to people. Learn what your losing streak is and risk what you're comfortable losing. Like, you're happy with these losses. If they're happening, you're completely not phased. Trading should be data-driven only. The minute you place a trade and emotions come in, you've already lost.
Yeah, I couldn't agree more.
Yeah, exactly. And it's the whole 1% risk thing as well. I think that's very misconstrued. Because, you could take 1% risk and pass an account in 2-3 trades or whatever, but then can you stomach that? Because when you see 1% risk, some people, they can't handle it. For example, I can't really handle seeing 1% risk, $2,000 drawdown when it hits an SL plus commissions and stuff.
Yeah.
It's like 2,500 drawdown. So for me, when I do 0.25 or whatever, because I have a high risk reward, it's going to work out financially beneficial anyway to take less risk. Mentally, I'm not strained anymore because it's small risk. It's a minute percentage of the account. The risk reward covers me to pass the accounts, so it's just slow and steady wins the race. I'm not trying to pass accounts in a day.
Yeah, that seems to be a big push now. Oh, pass your account in like a week. It's like, who cares? Who cares if it takes a month? Like, then you have a funded account and you're good. Like, you know what I mean?
Exactly.
Yeah, it's this big rush to make money, and when you're rushed and when you're risking more than you want, that's when you start making stupid decisions. And the whole 1% thing, I think it's fine. The 1% risk thing is like, it's more for beginners, so it's like you don't end up risking 50% of your account, because a lot of the times the problem is people will just deposit like, I don't know, $200 in their account or whatever, like $500, and they'll be like, oh, I'm going to risk $250 in this trade or something like that. And it's just because it's not like $250 it's a lot of money. Maybe it's not to some people, but you know what I mean? Like, so the risk 50% of their account, and they don't even really realize, right? So it's like the 1% thing makes sense, but you're right. There are times where, for example, I'll risk more if my higher time frames are all aligned and it's with a trend and things are looking great. And I also want to touch on, we were talking about losing streaks, and how if you have the data and you have the back testing to build confidence, it's just going to make the drawdown a lot easier. And for example, I've been just experimenting with intraday trading the S&P 500, and it's basically, I'm not going to go into detail on the strategy, and I'll be straight up honest with you guys, I have not back tested this. It's basically me, like, I'm confident in it enough where I'm not going to lose like 10% of my account or 5% of my account doing it, because I'm actually only risking a quarter of a percent on every trade. But
of course, yeah.
It's basically, I'm live trading, back testing essentially, and it's worked out great, honestly, so far. But it's basically just buying the S&P trend line breaks on a lower time frame, just because they're designed. I'm only doing it on the S&P because it's designed to go up. Usually will go up. I know it sounds crazy to say, but it's just something that I've been basically back testing, and it's true. If I were to take, I don't know, five losses in a row, I wouldn't feel comfortable with it's not my normal trading strategy where 5 losses for me in a row is pretty much nothing. And then I'm confident that the next trade could be a winner. I'm confident long term. But for this back testing, it's like, who knows, right? So that's just two different sides of the story where I'm. And remember, guys, what I'm doing, I'm basically just back testing on a live account because I'm confident enough, I'm experienced enough where I know my account's not going to get blown doing this. So don't try that at home. I'm just trying to give you guys a good example of, the back testing. You don't really know, and I don't really have confidence if I start to go into that drawdown. But when you have your system and play in the data, the losing streaks just become easier. And like, you can have all the data. You could sit there one Saturday, come up with a strategy. You only buy demand zone, whatever the strategy is. It doesn't matter. You could have 300 to 500 trades worth of data, and you know that your max drawdown or your average drawdown is going to be 5 trades in a loss. Maybe your max drawdown is going to be 7, and then you could be trading a live account, and then that drawdown comes, and you're still not going to like it. You're not going to be comfortable with it. It's just going to take a few times of you dealing with that to get used to it. And it's just, with time, the discipline and the patience and not worrying about the losses will eventually come. But it's going to take, you, like I said, you're going to have all the data in the world on how many losses you can take in a row. But until you actually experience that a few times, you won't really be used to it yet. So just wanted to touch on that as well.
I completely agree, and one thing I want to say off the back of that is the advice I want to give to people starting out trading is learn what it means to be a trader and learn what the job entails and truly accept it. And what I mean by that is a lot of people come into trading and they just think it's only wins. And the few that do understand those losses, they can't truly come to terms with those losses when they come into trading. So one thing I want to say to those people is when you do look at trading, look at what it means to be a trader. Look at the difficulty. Look at what it means to accept losses. You need to really be comfortable with seeing your drawdown at 4%, 5%, or on your personal account, you might see you've lost a majority of it. You need to be genuinely comfortable and be in that situation where you're not mentally affected. If you can't do that, this is going to be a serious struggle for you because psychologically, you're going to get up and down on your P&L. If you can't control that emotional range, as I like to call it,
oh yeah,
you're probably this isn't for you. You need to seriously be like a stone or like a brick wall when these things happen. You got to be no emotions, stick to the trading plan. It's data driven. It's gonna work. You back tested. You've seen it work. If you become emotional, you're just doing yourself damage. So advice to those people, just truly learn what it means to be a trader and what the job means and really come to terms with the losses. Like genuinely, if you can stomach losses, like in your heart, in your stomach, you can take it, then you'll be good. If you can't, then you're really going to struggle.
Yeah, I couldn't agree more. And I love that you use the term emotional range because I actually touch on that a lot. And I don't know, this is an analogy I like, but it's just, the idea that people they work Monday, Tuesday, Wednesday, Thursday, then Friday comes and they just get all excited. It's Friday, it's the weekend, yeah, and then they go from like maybe a 2 to a 10. But when you have that excitement, it just makes Monday even worse. It's like a huge swing where you have to go back to work on Monday. And I'm not saying you can't be excited about Fridays or about a winning trade, but it's about maybe don't go to a 10, maybe just go to like a 5 or something. Like, you know what I mean? Like, don't get, you want to trade, that's great. Get excited about it, but you know, get pop right back down to like that even level like I don't even emotional. What did you call it again? It was a great analogy. You called the emotional
range.
Emotional range. Yeah, back to that medium range, right? Like, I don't know. I like that analogy of the Fridays thing.
Just that neutral zone. That zone of just being neutral. That's perfect, man. That's perfect.
And you're gonna have little spikes up and down, like, you know, when you see somebody's heart monitor, right? It's like it's wavy, something like that. And then when it starts to get spiky and stuff, it's, you know, things aren't really good at that point. And you know, even taking losing streaks is not fun, but even winning streaks can damage people. Psychology as well, because then they think they're unstoppable, and then when that losing streak comes, they're like, oh, what the heck happened? Like, I can't do this is terrible. Maybe they lost all their profit, right?
I have a funny story about that, actually, because my main focus is on psychology. Like, to me, when I started trading, I had a couple mentors, right? Not people that I've paid for to join groups or anything, but one of them was I joined a signal group after I got scammed by that person. And I spoke to the person who does the signals, and he's a very open, honest person, yeah? So when I deposited the money, I got access to his Discord, spoke to the person, withdrew all my money, so I don't get scammed.
Yeah.
And I was in the Discord, and I was talking to the person, and we become quite good friends, and he's my mentor now. And he's the one who's taught me about psychology, the understanding of it, and I do believe he's a genuinely profitable trader, but his signals aren't the best, but that's not the point. The point is that he's the one who taught me about psychology, the understanding of it, taught me about a couple of books to read and stuff. So, one of my friends actually had this issue a few days ago, because amongst me and my few trader friends, I'm kind of the psychology guy. Like, whenever any of my buddies has problems, they're like, yo, go to Bash, man. You need to talk to Bash. He's going to sort you right out.
Yeah.
Because a lot of traders, they go straight to technicals and they don't focus on the psychology like most traders. And some of these people that have been trading, that are traders now, just a few group of friends, some of them have been trading for 5-6 years, and they still struggle with psychology because they never really delved into it. They spent 4 or 5 years just looking at technicals, right? So he had that issue. He had the 9 wins, yeah, and I think the average risk reward is about 9 risk reward. So you imagine he's in his feelings, he's happy, he thinks he's the king. You know, he's took 9 wins, win after win after win. And his average risk reward is 9 risk rewards, so he's doing really well.
Yeah, that's crazy.
And then the market turns on him. He's doing a strategy as he is. He starts trading more. His trading frequency has gone up, not part of his trading plan, because he's developing a bit of ego. He took a loss. What does he do? I'm right. I can't be wrong. That SL is unacceptable. Trades again. He lost 4% in one day.
Yeah, that's not acceptable.
Exactly, because the winning streak made him feel like he was a king, like he couldn't lose. And I says to him, I goes, look, dude, because he reached straight out to me, he goes, Bash, we need to talk, bro. I'm having some issues. I don't know what happened to me. Anything. I goes, did you deviate from your trading plan? He said, yeah. I said, that's your first mistake. And then I goes, did you revenge trade? He said, yeah. I goes, you lost control of your psychology. And I said to him, that trading plan is the one that gave you those 9 wins. That trading plan is what made you that huge level of profitability over those 9 trades. 9 trades, average risk reward 9. That's insane. That's like fantastic.
Like almost unheard of, yeah.
Yeah. But he's a really, really good technical trader. Fantastic technical trader. Like, I respect the guy. But psychology, yeah, he is not the best in terms of psychology. He's always struggled with that.
Yeah, it might have.
So I had to say to him.
Go ahead.
So I had to say to him that you just need to stick to the plan. Remember this losing streak. Remember what it felt like for you to put all that work in to make all this money, to then lose all of that profit. just never forget the feeling of what it's like when you go wrong and why you go wrong. You have to hold yourself to account when you're trading, because it's you versus the markets, and it's you technically versus yourself. So you have got to be honest, and you have to hold yourself to account.
Yeah, I 100%. And it would have almost been better for him to have a win, 3 losses in a row, and then a win instead of like the 9 in a row, or whatever you said he had. It would have been better for him. But like I said, you live and learn. So hopefully now he's not going to do that again. If he does that again, then it's on. The first time you can maybe blame it on. It's always yourself, but you can blame it on the inexperience. But the second time, it's you really, like you said, you gotta hold yourself accountable 100% of the time. It's so important.
And this is his first time he's had that issue. So I said to him that it's happened once, it shouldn't happen again if you stick to your trading plan. And I say to a lot of people, like all of my friends, always know your losing streak. The average of your losing streak, you have to know that.
Mm-hmm.
So when the losing streak comes, you're ready, or you're prepared, or you should be ready. You should be prepared.
Yeah, exactly. Like maybe your average losing streak is 5. That third loss in a row, you should be expecting 2 more. Really, right? And if it's not, if the next trade's a winner, even better. It's just a bonus, right? You're like, okay, I'm not going through that drawdown. Probably get the next one to be a winner, and the next one will be a loser, most likely, or something like that. But yeah, you're right. I've always, told people, like I said, that website earlier, check that website out. Put your average risk to reward and win rate in there, and you can see how many you're going to, expect it to lose. But even, maybe if you have your trading plan, write that down on your trading plan. Expect a average of, your average drawdown is going to be 5. But then there's actually like the top range of your drawdown as well, like where it could be like the top end is like 7 or 8, which maybe comes every like 500 trades or something like that, right? So that's
you should always give a bit of leeway. So if your losing streak is 5, just give yourself 7 or 8. Just be smart, be wise with trading. If you're gonna have a 5 losing streak, give yourself 7 or 8.
Makes sense.
There's no harm in protecting your capital. With trading, we have to protect the capital. Not like there's people who risk 2% or 4% of trade and blow accounts. If you want to be profitable, you have to protect your capital, and you have to think statistically.
I completely agree. And that's, one reason I'm doing this podcast, interviewing people like yourself, is because unfortunately, there needs to be more education on trading psychology. And if people, even just listening to this, if somebody's like new to trading today, they just found out trading, I want to be a trader, and they listen to this exact episode with you, hopefully they probably wouldn't get scammed by somebody offering signals with a 95% win rate and massive profits, right? Like that's kind of my goal with this podcast, is to really prevent what happened to you, prevent that from happening to other people. Fortunately, it never happened to me. I have been in groups. Exactly. Like I have been in groups, and I do remember maybe 3 years before I even knew what trading was. So I'm talking like maybe 2012 or 2013 or something like that. I had a friend say like, yeah, there's this guy. He's on Instagram, rich guy, has like Lambos and stuff, and I guess you just sent him money, or you just copied his trades and stuff like that. And I was like, what? Like it just, I don't know. Like I had red flags going off my head. I'm like, that sounds too good to be true. And a lot of the times, anything, I'm having a kid next year, and one thing I want to teach my kids is just the idea of like, there's no free lunch if it's too, like, just these simple things. There's no free lunch, and there's no free lunch. What was the other one? What was I just saying? No free lunch. And if it's too good to be true, it probably is. And I think if you just have those 2 ideas in your head, it might be easier to go through life and prevent getting scammed and stuff like that. But even getting scammed, like you got scammed and now you're doing good, right? So it's a lesson learned, and that's all that matters. So
yeah, as much as I hate the person who scammed me, I can also kind of want to say, like, not say thank you, but I owe a lot to him, because now I've learned trading, I've learned psychology. I'm helping other traders out with their psychology who've been trading longer than me. So like I've learned a lot, and I'm on the verge of passing all my accounts.
Yeah.
But I'm taking it slow and steady, so I'm not trying to pass accounts quick or anything like that. But yeah, for me, from this podcast, I just want to give people value, get them to understand what trading truly means in terms of the losses, accepting the losses. Um, Also, be careful of these gurus, definitely, and get a mentor. A mentor is the best thing. Whether this is the case of my scenario where I joined a signal group, I don't advise doing that because a lot of them can't really trust them.
Yep.
But the dude that I joined, he's genuine, he's authentic. Every time I message him, he always messages me back. He even asks how am I doing, how's my life and stuff like that. So he's an actual genuinely honest person. But find a mentor who's gonna show you their P&L, prove that they're profitable. They're not gonna hide anything from you.
Right.
These types of people are people that you actually want to learn from because they're honest people, right? They're going to guide you on what it means to be a trader. They're going to help you psychologically. They're going to help you technically. A mentor is the best thing, whether if it's yourself or anyone else who is authentic. But definitely get yourself a trader, and you're going to learn a lot faster, and focus on psychology first before technicals. Technicals are easy to pick up. I learned technicals in 2 months. That's not hard.
Mm-hmm. Yeah, the hard part is like sticking to your plan, and once you have the technicals are important, but yeah, it's all just gonna take time. Like that's like you said, you didn't rush. Maybe you tried to rush into it at first when you joined that guy's stuff, but then you realize it's not. It's a slow race, and that's what I did as well. And it's worked out for me perfectly. And I'm sure anybody who's ever been a successful trader, maybe they took it fast at first, but then their success came with, slow progress and just, time, right? So I think this was a pretty good discussion. Is there anything else you'd like to say to any beginner traders, any intermediate traders, anything you'd like to add? You touched on a lot, but...
Yeah, sure. I want to talk about my risk and the reason why I'm taking such a small risk, yeah?
Yeah.
I have a high risk reward. But the reason I risk small amount is because when I pass my accounts, I want to trade the exact same way I'm trading now. Why? Because the way I'm trading now is going to get me past those accounts and is going to get me funded. I'm not looking to risk 1% pass quickly, because with trading, it's about being consistently profitable. The word is consistently, not making 10% every month. If you can get 1 million in capital, and you can do 1, 2, 3% a month, you are ahead of most traders if you're consistently doing that. That's why I'm risking small amount. I want to let the strategy do all the heavy lifting. My psychology is free because it's a small risk. My losing streak isn't going to be affected by the small risk. And when I pass those accounts, nothing changes in terms of my risk. Everything's exactly the same.
Yeah, I think that's great advice. And also probably because there's probably max drawdown rules and stuff like that too, right? Yeah. Where... if you have a lower win rate, you can't be risking the 1% with their rules, right? So
exactly. So because I have a 50% win rate, my win rate is lower than most people. So because of that, I understand and I accept, like truly accept, I'm gonna have more losses than most people, but my wins are gonna carry those losses far ahead. I'm gonna have to have at least 10 losses to get one win to break even, and statistically that's not going to happen. I'm going to have more wins than I am, or even wins, I'm going to have losses, so I'm overall profitable. But the point is, when you get funded, don't start over trading, don't start going against your trading plan, don't start over leveraging, over risking because you're funded. That's what so many traders do. They risk a lot, get funded, they blow their account straight away, or they aim for a 50, 100k payout.
Yeah,
that's crazy. That's gambling. You'd rather go casino and just play blackjack or something.
Yeah, that's the problem with these challenges and stuff. Is like you could technically you could just have the worst strategy ever and just go through like a 5-win streak, get funded, and then you lose the account because you're risking 2% or whatever. Where you are taking what you're doing, and you're gonna do the same thing when you're funded, right? So, yeah, I think that's definitely very valuable advice. I think you're definitely on the right track for sure.
Yeah, as I said, if I risked more, I could have passed all of my accounts just in the month of June.
You're right.
But but I was completely happy with the fact that I haven't done that, because that's setting the wrong standard.
Yeah, and
It's encouraging the wrong type of ethic in trading. That's encouraging greed and impatience. Whereas in trading, it's a slow and steady. This is the story of the rabbit versus the hare, or whatever you call it, versus the turtle. Slow and steady wins race in trading. Patience and perseverance is what's going to get you funded and consistently profitable. All I'm looking for from trading is consistent money. I'm not looking for $100,000 payout. If I can get 5,000, 6,000 every single month, even 2,000 every single month, that is more than enough for me. And if you got, as I said, 1 million in capital, and you make 2-3% a month, dude, you are making bank.
Oh, you're laughing.
And you have to respect that.
Oh,
you have to respect
100%. It's also great that you, like you said, whatever that month, June or July, like you could have passed it right then. And it's nice. You're obviously you're bringing it up, but you're not salty about it. You're not like, oh, I should have did that, right? Like I hear so many people like, oh, I should have bought Tesla, or I don't know, Nvidia, or whatever the hell the stock is that's up right now. It's like, oh, I should have bought that. And it's like, I never think like that. I never think like, oh, if only I did this. And that's good that you don't do that either, and understanding it's a long-term game. Like, yep, you could have passed your account there in July or June, whatever month you said, but you also could have blown your account if you would have done what you, if you would have been risking whatever it would have taken to pass. So that's just, I think, yeah, that's definitely, you're clearly very mindset oriented, and I think that's fantastic. And you are a prime example of what it takes to become, a trader, and you've gotten there pretty quick, I gotta say. But if anybody's listening, it could take years for you guys to get to that, and that's fine, right? Everyone's different, everyone's wired differently. So like for me, I've grown up just kind of with an anger problem, I guess you could say, but I've slowly just worked on it. And I've just slowly worked on it, and I've had to, because relationships get destroyed, accounts get destroyed. Luckily, I've always been disciplined in my trading. You mentioned earlier you have to have that one big loss that makes you sick, and I'll be, whether you guys believe it or not, I have never had a loss like that ever once, because I've always been disciplined with, when I first started trading, I'd risk. Again, I never really talk about dollar amounts, but to me, $5 is not a lot of money. $5 to some people is a lot of money, but I will say for my personal background, $5 is not a lot of money. So I would risk $5 a trade and just day trade, and just to get familiar with the market and see how it feels. So, and the $5 was like, I don't even know what the percentage of my account would be. That it would be so small where it basically had no effect on my overall account. And I've just always been disciplined like that, and it goes a long way. It keeps you in the game, right? That's another thing. It keeps you in the game. So,
I had a big loss, but I paid respect to that loss, man. Like, that loss really humbled me, and it was bad. I'm happy to mention how much it was. So across all of my prop firm accounts, because I've traded with a trade copier, one day I lost 45,000 across all the accounts.
Yeah, wow.
Yeah. Now this is in challenge phase, right? But to me, as I said, I'm going to trade this way now when I'm funded. So I accepted that 45k as if I was live, that was 45k lost. And I swear to you, oh my God, the pain I felt, the sadness, my stomach was churning. I felt like I was going to be sick.
Yeah.
And that wasn't even money, but it's for me, it's like I understood that I'm trading this as if it's my live account with the risk and everything. I don't want to change anything because I don't want to be caught by greed when I become funded.
Yeah.
So honestly, you need that 45k loss, because I went on tilt, bro. I didn't stick to my trading plan. Well on tilt, took a revenge trade after revenge trade, almost hit my max daily loss across all my accounts, almost blew all of my accounts. Yeah, I needed that. I really did, because all that made me think is I never want to feel like that ever again.
Yeah.
After all the hard studying, the psychology, I put so many hours into reading books, the back testing, all the work. It was for nothing if I don't follow my trading plan. So
100%.
that really humbled me, and I don't want to say to everyone, but you need a big loss to really make you respect trading.
I agree. Now that doesn't mean anyone listening you should just go make a bad decision and take a big loss, but I definitely I've never experienced that, but I could see how that could, be a life changing moment. There's so
Yeah.
many different examples of that in real life too. People that are, addicted to drugs or something, and they have one bad day where they almost, things almost go really south, and then they,
Mhm.
from there they recover. So it's a kind of a similar. I like analogies like that where people can, I don't know. I find I learn a lot from that. So, but yeah, that's definitely good. At least you took the loss like a man, and you learn from it. That's a big thing. A lot of people just give up and take it as an excuse to just give up. And I'm glad that you didn't, because clearly now you're on the right path. So that's fantastic.
Yeah, yeah. Or they blame the markets.
Yeah, yeah. Oh, the moneymakers, man, they're on to me. Yeah, that's a
Yeah,
funny one too.
honestly,
The only time you
yeah,
can
that's
really blame the markets is the only time I ever blame the markets is if I'm in a trade and then some economic. Now I'm a swing trader, so I don't really care about when economic data is coming out, because if I'm buying a 4-hour zone and price the euro US dollar drops 1.5% and it stops me out, so be it. It doesn't bother me. Like, I will be like, oh, I got stopped out because of the economic data, but I also don't get angry about it. I've accepted that that's going to happen sometimes. So, there are times when the market goes wild and it stops you out when maybe it's not a normal price action, but that's just another aspect of trading that you have to accept. You can't get upset at that and all rattled and riled up because some economic data came out. But I will tell people, if you're a day trader, you have to know when that stuff is coming out. It's very, very important.
Oh my God, yeah, definitely, definitely.
Yeah.
I trade the 1 minute, so for me,
Oh,
yeah,
yeah,
I stay clear of news. I close out positions 30 minutes before,
yeah,
or take entries after 30 minutes of news. But yeah, I mean, if you are in that scenario, just accept it as one of the losses you're going to take as your losing streak. Don't hold it against the market. Don't hold it against yourself. Just take it on the chin. It's part of my SL. It's part of my strategy. Unless you're deterred from the strategy, then take it as a learning lesson.
yeah. I could not agree more. As we wrap this up, are there any advice you give to new traders? Or we've given a lot of advice here. I think it's all been great. But is there anything else you'd like to add? Or
No, I can't think of anything. But if you guys want to reach out to me, I'm more than happy to help people out with psychology, because I think for me it's one of the most important things is psychology. Just try your best. I've learned at a really fast pace, but it's because I've genuinely had no ego in the markets. I've looked at myself as, how have I done right, have I done wrong. I've tried to grow as fast as I could by taking everything as a learning lesson. When you come into trading, every loss you take, even the wins you take, study, analyze, and grow. Never stop growing, because if you do, you're never going to become or progress to the level of profitability, because you have to learn every single day to get to that point. So accept the losses, accept where you're wrong, hold yourself to account, review your behavior, review your performance, journal your trades, journal yourself and your psychology, and genuinely don't be, how can I put it, egotistical. You have to have no ego in the market. As long as you review yourself, you hold yourself to account, I think you learn probably faster than me. And I do mean that for a lot of traders. If you're honest about it and you're really genuine, you'll be good if you get the right mentor as well. Good luck to everyone. Honestly, good luck to everyone.
well, I think that's a good way to wrap up the podcast. I think that was a great closing statement, and I appreciate you coming on. I think you definitely. I think we both gave some really good insight today, especially to some of the beginner traders, and I appreciate you being honest with your journey before and getting scammed. A lot of people don't want to admit that, but again, it's good to admit where you've been wrong, and hopefully, I'm sure a lot of people listening to this have been scammed already. So, guys, take this. He's a living example of somebody who got screwed over, and they ended up, getting past that and becoming profitable. So that's I'm really happy to hear that that's been working out for you. So.
Yeah, thanks, man. It's been a pleasure.
Yeah,
Thanks for having me.
have
It's an honor to speak to you and get a chance to have a conversation with you and kind of even learn a bit from you and stuff on this in this podcast. It's been great. Thanks, man. Appreciate it.
for sure. Yeah, I think it was. We'll have to do it again sometime for sure.
Definitely. Cheers, man.
All right,
Thank you.
yeah. Have a good day. All right, guys. Thank you for listening. And if anybody wants to come on the podcast and basically do what we just did today, and just even if you guys aren't, maybe you're a struggling trader and you're not profitable yet, and you still want to discuss things, I'd be happy to have you guys on. So.
On the show in a couple of weeks' time, and he'll run right through that. Very, very smart guy. So keep your ears out for that one. Now, also, the package is for sale on their website right now for $2,699. But we've got one to give away. So to enter, just go to chatwithtraders.com/giveaway. There'll be one question there. You've got to answer it. It's very simple. You won't get it wrong. Trust me. Enter your email address following that, and once you do this, you'll instantly be entered. This will give you one entry to the giveaway. It'll also give you a unique URL, and the idea is you need to share this like mad, and I'm going to tell you why. The more you share this URL and the more people you can get to enter from clicking your URL, the more entries you get. So for every one person you get to enter through your unique URL, you get 10 entries. So let's say you get 10 people to enter. Then your chance of winning is actually 100 times greater. Pretty cool, right? All right, now the competition will end at 7 p.m. on the 8th of March, Eastern Standard Time. So get busy, guys, and don't wait on it. Awesome prize. And again, in case you missed it, go to chatwithtraders.com/giveaway to enter. All right. Awesome. Thanks a lot, guys, for tuning in. And I look forward to speaking to some of you in the meantime and again next week. Peace.
Chat with Traders is brought to you by Trade the Pool. Did you know that every decade the market reinvents itself? Online brokers opened the doors. Mobile apps made trading seamless. And commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool, limited risk trading. And now you also have unlimited time to reach the profit target. From now on, your trading risk is capped, and your trading opportunities are limitless. Trade the Pool funds home-based stock to trade the
futures and more. Tasty Trade has everything you trade all in one platform. Get low commissions. Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're
Welcome to episode number 8 of Chat with Traders. As always, it's great to have you here, and thanks so much for tuning in. Now, I'm going to try to keep this intro short because we have a lot to get through in this episode. So let me give you a quick rundown on today's guest. Back in 2006, he stumbled through the doors of a prop firm with absolutely no trading knowledge. He mashed keys for a few years until the firm later shut shop during the GFC. From there, he was pretty much out on his own. And that's when he really started to grow as a trader. After gathering around about $50,000, he traded it for 2 years and rapidly compounded it to the tune of $2.4 million. But in perspective, this was really just the warm-up. His name is Anand Sanghvi, aka Lucci, and he's now best known as the head trader at sanglucci.com. Throughout this interview, we go into much more detail about his journey, about some of the hard lessons he's learned along the way. And Lucci also talks a lot about the psychology of trading, so make sure you pay extra close attention to this. It's pure gold, trust me. But before we roll into this week's interview, there's something I'm really excited to share with you. Actually, I'm excited for you guys. After recording this interview, I was able to sweet talk the lads at Sanglucci, and they've agreed to give away their most comprehensive trading course to date, which is called the Lucci Method. In fact, it doesn't even feel right to call it a course because it's just so much more. Here is what's included. Firstly, you get an online course with unlimited access to over 75 training modules, with videos, written material, charts, and more. This takes you right through from the basics of options to the finest details on how to trade the same method as Lucci himself. Also included is 2 months access to the Sang Lucci chat room, which has an incredible sense of community and everyone gets the same respect regardless of your trading level. Plus, Lucci is in there with you throughout the day, talking through his trades and things he's watching. As part of the chat room, you also get the market regime report 2 times a week. On top of this, you also have 2 months access to the weekend sessions. This is 2 hours each weekend when Lucci reviews his trades from the prior week and goes over any interesting tape movements he's picked up from that week on a live webinar. And just when you thought there couldn't be any more, the guys are also going to throw in a 1-hour coaching session with Zach Hurwitz. This guy is a beast when it comes to VWAP. I'm actually going to have him on the show in a couple weeks' time, so keep an ear out for that one. Now, this package is available and can be bought from the Sang Lucci site for $2,699. Now, that's no made-up value. That's actually what it's selling for right now. But we have one to give away, and it's super easy to enter. Just go to chatwithtraders.com/giveaway. You'll need to answer one very, very simple question. You won't get it wrong. And then enter your email address. This will give you 1 entry to the giveaway. When you do this, you will be given a unique URL. Take that URL and share it on Twitter, Facebook, just anywhere you can imagine. Because for every person you get to enter, you score another 10 entries. So let's say you get 10 people to enter through your URL. Then your chance of winning is actually 100 times greater. So get busy, guys, and don't muck around. This competition will close at 7 p.m. on the 8th of March, Eastern Standard Time. And again, in case you missed that, go to chatwithtraders.com/giveaway to enter. Now clear your head, because the next 60 minutes are loaded with genuine insights that I'm certain will help you on your own trading journey. Here is this week's monster interview with Lucci. Lucci, what's going on, man?
What's up, man?
Not too much. It's just sort of early morning here. How about you? How's your day been?
Good. Good day, man. Good day trading. Could have been better. Always could have been better.
Yeah, fair call.
Did you go to the Brisbane? Are you a tennis fan?
I'm not, no. I know you are, though.
No Australian Open for you, bro.
No, but I believe, yeah, it's all happening in Brisbane, yeah. But no, didn't attend. So, are you off to a good start in 2015?
I mean, okay, I guess. I mean, I'm up 50 grand. I would say good start for me is like, if I'm up at least like a $500,000 kind of thing, So, I mean, I'm making money.
Nice. Well, that's always a good start.
Yeah. I'm making money.
Awesome. All right, well, man, I've got like a bunch of notes to run through, so I'm pretty pumped about this interview, actually. So, what I'm thinking is we'll probably just break it down into 3 factors, or sectors would be a better word. So let's talk a little bit about how you got started, and just sort of run through your journey from when you got started to like now. And then we'll talk a little bit about how you're actually sort of trading the markets, and your sort of approach to them.
Sure.
And I also want to pick your brain about sort of the emotions and psychology side of things, because I know you're pretty big on that. So
Yeah, definitely.
all right, sweet. Well, let's just kick things off by telling us a little bit about your background. Just give us a brief overview on your trading, and then we'll zoom in and start getting into the details.
Yeah, dude. I mean, that's kind of a broad thing. I have no idea. Honestly, it seems so long ago. How did I get started trading, man? I mean, I hated my job as a financial analyst. I absolutely hated it. I was doing like, what was I doing? I was doing like accounting, journal entries, creating pro forma financial statements, end of the month kind of thing, balance sheet adjustments, stuff like that. So I did that for like 9 months, and then I just couldn't take it. it was why I walked into the same, this dry cubicle looking at the same spreadsheet every single day, and I just couldn't take it. And I remember at the same time, I had a funny story about that. There was like a weekend, PlayStation 3s just came out, right? And it was PlayStation 3. And I paid a bunch of kids to camp out in front of the Best Buys, to make sure that, because everyone had like a certain allotment. So like Target would get like 6, Best Buy would get like 8, Walmart would get like 2. So I paid a bunch of college kids to I gave them a tent, and I just made sure they were there, had food and everything. I paid them $300 to get me a system, because you could pre-sell them online for like $2,500. And this was all over the weekend, and I remember this was like the third Monday I was late, and I told my boss, like, dude, I was making money selling PlayStations, and he didn't believe me. He was like, dude, are you kidding me? You got to be joking, blah blah blah. He gave me all this shit. And I was like, that's it. I'm out. I didn't take it. I hate, I have a thing with authority, and to me, I was like, I was doing all my work on time and everything. I was like, dude, what does it matter if I'm 10 to 15 minutes late? He was like, you're irresponsible, this and that. I was like, all right, that's it. I'm out of here, and prior to that, I was always like the side job kind of guy. I always had something going on the side. So I wasn't really worried about it, and again, it was a piddly salary, 45, 50 grand a year. And I was selling tickets. I just stopped like selling tickets, running sort of a brokerage service for tickets for like Red Sox and things like that. So that's what I just came off of. So I always had cash sitting around. So I was just perusing like Craigslist at that point, just looking for jobs, and I was looking for something exciting, something. I'm 22 at this point. Just had a child, she was 1 year old. I'm at home with her all day. I think I was 23, and I saw this job for an equities trader, and it was like commissions only, and then I walked in. It was somewhere in New Hampshire, and I don't know if you know Massachusetts or New Hampshire, but New Hampshire is like the slogan for New Hampshire is live free or die, and it's a very like, I don't know, it's a very weird town. Everybody's very liberal there in New Hampshire. And I walk into the office, and it's a bunch of like 25-year-old kids that look like you, honestly. They all look like you. And they're just sitting in front of their computer, just banging away at the keyboard and just yelling obscenities the whole day. And I'm looking around. I remember one kid made like 15 grand that day and bought everybody pizza. And I was like, all right, this seems like where I belong right here, and that's kind of how it started.
Nice, man. So you walked into this prop firm, and it was around about 2006, right?
Yeah, 2006, beginning of 2006. Yeah, beginning of 2006, walked into this place, and then started trading every single day, and the start is very difficult. Like the start of it is probably one of the most difficult parts. I wouldn't say mentally, but just figuring out what you're doing. And like, it's a very daunting task when you sit down and you're like, okay, this is what I'm going to be doing. Like, you don't really realize it until years later. Like, okay, this is what I do for a living here. In the beginning, you're still kind of getting over the fact that you're doing this cool job and blah, 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 but you still have no idea how to make money. So yeah, it's very daunting in the beginning. Yeah.
Yeah. Because I presume that your background and your job beforehand didn't really provide much sort of
college, the job, whatever your degree is, even if you have a degree in finance, it does not prepare you whatsoever for trading at all. It doesn't it has there's no realities of the stock market that you learn in college. Even in your investments class, you learn zero realities of what the stock market actually is and how to play it and how to do things in it. Investments, you just learn theories. You learn what is an option, but you have no idea how to use it. You have no idea how it's priced. You have no idea how it moves, so you don't know how to make money from it. So some people that go a little bit further and actually study, investment management and things like that, they have a little bit of a better understanding. But, most finance degrees or business degrees or whatever, it doesn't prepare you for a damn thing, especially the mental aspect of it. That part of it, there's no preparation for that.
Yeah, they missed out the good bits. So,
Indeed.
Yeah,
Indeed.
So you walked into the prop firm, right? I mean, you had like zero knowledge of how the market even operates. Like, how did you know what to do, and where did you even start?
Yeah, that's It's a good one. It's a good one. And you know what everybody always does, especially if you're young or however old you are and you're starting out in the markets, what you do is you go out and buy books, right? So you go to your Barnes and Nobles, right? And you go to your self-help section or whatever the hell it is, and you look at all the investment books, and you go to these beginner day trading online and all this nonsense here, and you start reading through this, and you start understanding what technicals are and what candlesticks are and how to look at a chart and possible entries and exits and things like that. And then you start testing this stuff out. So there has to be a long period in time where you're testing out all this nonsense here and you really don't know what you're doing. You don't know what you're doing. You don't understand what you're doing. The firm, when you join a prop firm, they're supposed to give you some education. My firm, they didn't give us much. It was all about the tape. It was all about bid and ask. But at that time, prop firms had a distinct advantage with technology and certain use of tools that you couldn't get. And then once 2007 and a lot of regulations changed in the market, everybody became sophisticated. It was a level playing field, and most prop firms shut down. So if you look out there right now, there's not that many prop firms out there. There's a couple big shops, and that's it. All the little mom and pop shops, the place that I started at, all of them closed. Those people ain't making money anymore. So to answer your question, like, the daunting task of understanding how it was, for me, it was bid and ask. It was the tape, so it was just looking at where buyers and sellers were. It was going over tape after the market closed. So looking at entries and exits from all the top traders in there, I would look at, okay, what did they see that made them want to get into this? What did they see that made them want to get out of that? And, I did this for like 6 months for 4 hours a night. And finally, you start creating a strategy for yourself. But that's what it was about. It was about creating a strategy for yourself, not taking somebody else's stuff and trying to duplicate it, because it was too hard to do. His personalities were too different, And again, the psychological aspect of it changes a lot.
Yeah. So once you actually did start sort of trading some money, what were the sort of things you sort of struggled with the most? And then how did you overcome those issues?
Yeah, so I struggled the most with, and you know what? Everybody has a personality disorder, I would say, when it comes to trading. So it's like you might do something great, but there's something that just holds you back all the time, and it just keeps coming back and keeps coming back. So for me, it was, I figured out how to make money, but I always had an issue doing, making dumb trades, making trades that I shouldn't be in, taking losses that I shouldn't be taking. So I always ran into the issue of, pulling out a $40,000 month, and then the next month I was down 20 grand, or, and then the month after that I was up 35 grand. The next month after that I was down 15 grand, So I was always very volatile. And one of the best things that I did, and the best things to date, was start swing trading and focusing just on one or two names versus the hustle and bustle day trade every single day, every single second of every single day, trying to make more trades to account for bad trades, whatever it was, and just the real hustling every single second. Like, that can get you into a lot of trouble. It can get you into over trading, a lot of kinds of things, that making decisions that you don't want to make. So that was one thing. In 2009, I stepped away completely, and I was like, you know what? If moves happen in all these stocks, like, I don't care. If I catch my one move that I've been looking for 2 months, I'm good. I'm gonna make 500,000. I'm gonna make $1 million. It doesn't matter, So it was like the dumping of the ego thing. And it's always up and down with me. Sometimes I have the ego, and sometimes I'm able to, push that ego back and make smart decisions, and then it just comes back. It comes back. It's like, it's like these psychological issues that you always deal with, not even outside of trading, whether it's not being motivated to go to the gym. You might be there for 3-4 months and you got gains and everything, and then all of a sudden you get lazy, and then all of a sudden the motivation comes back. So it's the same kind of thing.
Yeah, no, those are some really good points you make there. Really, really valid, I think. So how long did it take you to develop some sort of system or method that you were reasonably consistent with in terms of being able to pull out a profit from the market?
Yeah, It took me a year and a half, bro. It took me a year and a half of not making like any money whatsoever, you know, and that hurts. That hurts for a lot of people. For a lot of people, that hurts, and a lot of people can't do that. You know, let's face it. Everybody's got family. Everybody has bills. You got this. You got that. You know, so I always had my thing on the side that I was trying to make money on. So whether I was selling tickets or flipping PlayStations or whatever the hell it was, you know, I always had my thing on the side where, you know, I was okay. You know, I could make ends meet while I hustled and studied and everything with the market, because the market is crazy because you can see the money every single day, and that was the thing for the first year and a half. Like, I saw the money every single day. You see it being made every single day. But when you look at your account, like, you're still broke as shit. Like, you can't figure it out. There's some disconnect between all that money that you see and your account. It's like, why isn't that here? You know what I mean? Like, what am I not doing? What are the decisions that I'm not making? And most people can't get past that because it's a psychological thing. You know, it's more you against yourself versus your particular strategy. You know, most strategies out there can work. They just have to be done and employed at the right time, which most people, you know, they don't get. Why? Because they're motivated by making money every single month, you know, and they're rightly so, because you got rent, you got this, you got that, you got all kinds of things to pay for. So most people are motivated to make a trade for the wrong reason. And that's why most of that cash doesn't pile up. So it took me a year and a half, dude. It took me a year and a half of not making a single dollar. You know, which hurt, man. Which hurt. It was depressing at times, dude. I wanted to quit so many times, man. You know, so finally, after a year and a half, the epiphany I came to was like, it's not about the money. And that's the worst. That's the hardest part. You know, I was too fixated on the money, making $100,000 a month, making, you know, whatever it was, 10 grand a month, 20 grand a month, 30 grand a month. I was so fixated on the dollar amounts every single day, every single trade. And that's all bullshit. It's just about the trade. It's all about the trade. It's all about what the action is, you know, and then making the right decisions based on the action that you see. But you get so motivated by the money because, again, it's money, you know, it's real money. So that was the epiphany that I kind of had after a year and a half. Most people don't even get to there until, you know, 4 years, 5 years down the line after they've blown out so many different accounts.
Of course, yeah. So, I mean, that side hustle sort of helped you get through the struggle period while you were sort of learning your feet.
Definitely.
Yeah. So, following a stint at the prop firm, what was your next move from there?
Yeah. So, funny thing, man, with the prop firm was that was at the time where the markets were crashing in 2008. That was at the subprime blow up, the subprime meltdown. And in 2008, you know, markets went from skyrocketing to absolute shit. And what happened was that prop firms back in the day, like, there was no regulation on proprietary trading firms back in the day. So as long as there was, let's say, an account with a few $1,000,000 in it, you know, there was a relationship with a brokerage that would allow you a significant leverage on that money, but it all worked on pooled accounting. So basically all that leverage was doled out to however many traders that was in the prop firm. The problem was that if one trader took like a bad hit or a bad beat or something, it would affect everybody else. So the head traders were buying banks on the way down. You know, they were buying Bear Stearns on the way down. Bear Stearns opened one day at $60, and then the next day it opened up at $10. These guys were long at $60, you know, so they got crushed. They didn't tell anybody about it, and I had to figure this out years later. You know, they didn't tell anybody about it, and then all of a sudden I came in one day, expecting to, you know, crank it out, make some crazy money, and I'm cut down to 100 share lot. Okay, so prop firms, your head trader has you down to restrictions as far as lot sizes that you can trade. You know, I was nobody gave a damn about me because I was making money at the time, so I could trade whatever the hell I wanted to. And then all of a sudden I come in and I'm only allowed to trade 100 shares. You know, 200 shares. That means like my max P&L could be like $200. And I was like, dude, what the fuck is this? What did you do to me? What happened? What's going on? And then everybody was like, oh, you know, the head traders were like, no, we're not shutting down. We're not shutting down. 2 days later, we come into work, doors locked, and nobody's there. Doors locked and nobody's there. And then, you know, the whole thing shut down. The whole parade shut down. Every single trader out there filed out, and, you know, most of them weren't making money at that point anyway. You know, so it was only me and this one other guy that were making ridiculous money on the way down, just shorting everything. And then I was like, all right, screw this. I'm going to go swing trade. I'm going to take this money that I have, which was about, I don't know, like 70 grand in cash maybe. And I combined it with my pops' money. And I was like, all right, that's it. I'm going to start swing trading. At that point, I didn't even know anything about options. So I was just buying low price stocks and flipping them, buying 50,000 shares, 100,000 shares and flipping them a couple of weeks later for double, triple the money. It was a great time to swing equities at that time. So this was like beginning 2009.
Okay, and I believed you sort of compounded that pretty quickly within the next 2 years.
Yeah, man. 2009 was unbelievable. I mean, it was a place where Las Vegas Sands was like $2. It was like $1. Citigroup hit $1. All these names just washed out to nothing. So you could trade equities and double your money in an equity in a big, large cap stock in like a day or like a week. So it was nuts, man. I would rack up 50,000 shares, 100,000 shares of these things and just collect. I remember one month, I had a $500,000 month, and then, and then I started trading options. Then I started trading options aggressively, trying to figure out options. And it took me a while. It took me a good portion of the beginning in 2009 to figure out what the hell an option was and how to use it. And then finally, summer 2009, I amassed a huge position in some bank options and crushed it. Made a good couple million in a few months.
Nice, very nice.
Yeah, man. Yeah.
Are you ready to get serious about trading? Then join Tasty Trade, Investorpedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including 0 commission on stocks, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, risk analysis tools, and more features to help you trade smarter. See equities and derivatives with high trading volumes, dividends, upcoming earnings reports, and more with their pre-built watch lists. Or create a custom watch list to keep an eye on the companies and sectors that matter to you. Manage your positions with speed and precision using active trader mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Visit tastytrade.com/chat for more info. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC. Have you ever watched a stock explode and thought, if only I had the capital? Or sat on the sidelines because your account balance felt too small to matter? Good news, with Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, even the newest IPOs, and short anything you like with zero locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. And now you can also even pay a cent. Click the link.
Yeah, man. I mean, so I would say after 2009, you're on a high. Remember, I was only 26, right? And I made a boatload of money, so you couldn't tell me anything. My ego was like at an all-time high. You know what I mean? So at that point, I think I took a big loss. I took a big loss. It was like 400 grand, and this was like the worst loss that I've ever taken. And I'm just sitting there, like looking at my computer screen. I'm looking at my P&L down 400,000. I'm like, dude, you are the biggest piece of shit, on the planet. There's no reason that you should even be alive right now. So I kind of just buckled and I just gave it up for a little bit. I was like, you know what? I made a bunch of money. That's it. My father retired. Basically, he didn't have to work anymore, and that was it, man. So, dude, I just had a bunch of money and traveled and enjoyed myself and everything. And I invested in all these stupid businesses and made all kinds of stupid decisions with my money. And needless to say, I came to an epiphany again after looking at my bank account and looking at my lifestyle and being like, all right, how are you gonna do this for the rest of your life? You need more money. So then I was like, all right, that's it. I got to go back to work. So I created sanglucci.com. And I always enjoyed writing, dude. I mean, one thing that I always enjoyed was writing. And I always had a knack for it. And I always had a sort of – mine was always humor. It was always like sarcastic humor kind of thing. That was always my thing. And I would look at all the financial news, and you remember this is like back in 2011 or 2010 even. And most people used Yahoo Finance and maybe MarketWatch or Minionville or places like this. And most of the articles that you read it was just horrible to read anything that was going on in finance. And then I always felt there was so much manipulation from what was being put out there and what was actually happening in the markets. So I was like, all right, this is ridiculous. I got to make some comments here. I gotta show finance the way that I see it and the way that I see it in the trading world every day. So that's what I did. I just started writing, and people enjoyed it. And but building a website and marketing and all that kind of stuff, I was picking that up on a fly. I remember sitting in the library just reading like HTML books and CSS books and figuring out how to put a website together, So the first versions of SangLucci.com were absolutely miserable. Nowadays, like you can't even have a bullshit website. Like you can't even have a whack website. If you have a whack website now, like people just click right off of it. 2010, 2008, like you could still get away with having a blog spot, of a website, or just some blogger type website that look like shit. People would still go to it. Now, like you can't have websites like that. If it's not glitz and glam, or it's not functional, and it's not so quick, then people don't even want to be on it. And if it's not mobile friendly, like nobody's even going to spend any time on it. So anyways, that's how it started. I just started writing randomly and built a good following, and then realized that I could basically, just like the side hustle that I was doing, back in 2008, I could do the same thing with the website. Keep some cash flow coming in, as far as chat rooms, as far as education, as far as things like that, while I try to go hit it again, in the markets, hit it big again in the market. So I started back with $100,000. It was really tough, man. That first year coming back trading was tough. Was so tough because, dude, when you take a break from trading and you come back, you already expect yourself to be winning just like you were before, and it doesn't happen like that. Like you gotta understand the markets again. You gotta understand how to move again. You gotta understand the emotions again. So it takes a while to get back in the game, man. So that's basically how it happened. That's how SangLucci.com started, and that was just me. So now. It's evolved to so much more. I have partners. We were out in New York. We moved out to New York, and I'm sure we'll get into that story soon enough.
Yeah. Well, let's dive into it now, man, because, you've partnered with Haim Bodek, who is pretty much like the authority figure on high-frequency trading and automation.
Yeah.
So tell us about how that came about. Like, what are you guys working on?
Yeah. So, fast forward here, I had a website, was doing pretty well. I went through a couple of different business partners because, having business partners is difficult too. Finally linked up with these two guys that I met at a Tim Sykes trading conference. And this was like back in 2011, maybe. Or maybe to end of 2010 or something like that. And there was a guy named there. His name was Peter Zhang. He worked with the Bulls on Wall Street crew. And, we're just taking sake bombs and nonsense. I have this dope room at the Venetian, so I'm balling out over there in Vegas, just doing dumb shit. And, we're sitting there, we're having sake bombs. And Peter's like, yo, we should start a hedge fund. I'm like, yeah, all right, whatever, buddy. And so he linked me up with a friend of his, Charlie, who lived out in LA with him. And, we got on the phone, and these two were really sharp individuals. And I was like, listen, if you can put this together and you can put this in front of enough people here with this track record that we have, let's do it. Screw it. I'll do it with you. And they did it. They put in the back end work on, the legal work on setting up the hedge fund and all that kind of stuff. They showed a lot of promise as far as what they could offer for the website, and all that kind of stuff. So we decided to move to New York because to set up in New York, there wasn't as many hedge fund sort of restrictions, that you find in Boston or a lot of other cities across the nation. So New York was like the best place for us to go. So we were like, screw it. That's it. We all packed up, left where we were, and rented out this dope loft downtown Manhattan, which cost like $9,000, $10,000 a month kind of thing. We all just split it up. and it was a really dope place. We threw a ton of crazy parties. We'll get into that. And then we just started trading there. I was just trading there. We started running the site together, writing articles together, bringing new people into the loft from New York, from the New York trading scene and everything. And then Haim came around because we had just finished reading that book, Dark Pools. And I don't know if any of you guys have read it, but this is a book called Dark Pools by Scott Patterson, and it's all about the move and the shift towards electronic markets. But deeper, even deeper than that, it's how the creation of all these ATS systems came about. You know, all these dark pools, all these ECNs, and it just kind of really showed the back end of the trading world, which nobody ever talks about. And these were all the answers that so many traders were looking for, myself included. And there was this guy in there. It was about a lion's portion of the book was about Haim Bodek. And I'm like, dude, this guy is awesome. This guy is great, man. Charlie was the one who read it. And all of us were like, dude, let's hit him up. And we found him on Twitter. You know, Peter started emailing him, calling him. We said, hey, listen, just come by the house, come by the crib. And he came by and he just talked our ears off. And eventually, you know, he was at that time where he was looking for something, and we were also looking to partner up with him as well. So that's how it started, man. Just from Twitter, man.
Yeah, that's awesome, man. I first discovered Haim Bodek in that documentary, The Wall Street Code.
Wall Street Code, yeah.
And that's actually
so that came after. You know, that came after.
Yeah,
you know,
right.
and we had, and Charlie had the deals and everything to make that happen. You know, for Haim, that was a huge documentary that went down. Really explained a lot to a lot of people about the markets, about high frequency trading, about how it worked, about the deceptive practices and all that kind of stuff. You know, so Haim came in and really just blew our whole world up and showed us the other side of the market, which we've been wanting to know about and understand for the longest time.
Yeah, that's an incredible documentary. I'll put a link to that in the show notes, actually.
Definitely.
Yeah. I mean, that's actually how I first sort of heard about yourself and what you guys are doing over there at Sang Lucci. In that documentary, because you featured in it for like, I don't know, 5-10 minutes at one point.
Yeah, we're in there. We're in the mix, you know, and we're like the other side, you know, we're the other side of the game. We're the side of the game that knows that it's there. We understand that high frequency trading is using our order flow to create opportunities and arbitrage opportunities for fractions of pennies. And I see them doing it to me all the time with a lot of the orders that I send out, you know, so this is like us now finally understanding, and this is now the sophistication of people like myself, of other traders, of even retail guys who don't necessarily know or have that much experience in the markets. You know, everybody is slowly becoming more sophisticated because the access to this information is huge now with dark pools and with the Wall Street Code. Michael Lewis, the Flash Boys book that he just came out with. You know, so all this is going on right now. Everybody now is in tune with the actual structure of the markets, which nobody ever was, and still you find a lot of retail guys that are clueless completely, but now like everybody is getting more sophisticated in their knowledge of how the market works, which is great that we're here.
Yeah, it's crazy stuff. Like I've watched that documentary like a couple times, and I'll probably watch it a few more yet. Like I'm still trying to get my head around it.
Yeah, definitely.
But it's really interesting. So I mean, now's probably a good point to sort of zoom in a little bit on your actual approach to trading. So how would you define your style as far as trading the markets? Like you mentioned earlier, you sort of were leaning towards swing trading. Is that still the case like today?
No, man. But again, like I always try to go back there. I'm always trying to get back there. And it's weird in trading. Like you go through these different evolutionary patterns within yourself, within your abilities, within your mindset. It's just trading is it's very connected towards your lifestyle as well, you know, how you're living at that current time. Like me out in New York was pumped up with ego, man, we had this giant loft. Everybody was coming to us for information. Everybody was coming to us on Twitter. Everybody was coming to us just to be a part of the movement. So I was driven purely on ego. Dude, I was going out every single night, coming home at like 4:30, 5 o'clock in the morning, and waking up 2 fucking hours later to trade. You know what I mean? And it didn't faze me. It didn't faze me at all. It was just what you did. So that was me in New York City, as far as me trading, what happened was in 2010, they came up with weekly options. And this really changed a lot for me, especially, and for, price movements on actual equities. It opened the door for a lot more manipulation as far as sentiment and perception manipulation on options, where to buy it, where to sell it. So there was a lot of games that were being played that I wasn't used to as soon as the weekly options came out. And then they provided this sort of lure of crazy money within very short time frames. So I went back to day trading, and now, needless to say, I wouldn't say it was the best decision here, because swing trading, and when I'm looking at just 1 or 2 or 3 names, and I'm sitting there just waiting for that big picture move to happen, it might be a couple of months, it might be 2 months, 3 months, whatever. That's when I'm at my best, I would say. But as far as trading and my style, it's all tape. Everything is tape. It has nothing to do with charts. It has nothing to do with fundamentals. It has a little bit to do with price levels and things like that, where a lot of people are trying to buy a stock or sell a stock or whatever. But everything is about the tape. And what I mean with the tape is what is the interaction between the buyers and sellers currently within this stock? And then how long can it last? So, for example, like if I see a lot of buying taking place on a particular name, it's assessing how much demand there is and how long that's going to last. And then also combining it with what's going on in the market, what's going on as far as the economy, global economy, all that kind of nonsense. You combine that all together to give yourself sort of a time frame on how long you want to hold something. So everything to me is buyers and sellers. It's all simple supply and demand for me. I don't use anything snazzy, no moving averages, no technical indicators, none of that mumbo jumbo, because now, like I said before, the sophistication of the players that own this market, meaning the market makers, smart money hedge funds, all these guys that literally run the markets, these guys are using all those things that the retail mindset goes to trade, like candlesticks, technical indicators, all that kind of stuff. So they use all that stuff against you now. They're that sophisticated. They are that sophisticated. Their programs are that sophisticated. To literally crush the retail investor who doesn't know what he's doing. So that's the game that's being played now. So that's why I always come back to what's true, and what's true is price, is tape, is bid and ask. That's it.
So are those sort of indicators and those sort of other different, things you mentioned there, are they things you previously used to use and now you've just sort of cut it right down to the tape? To be honest, I never actually used them. But I did look at a lot of charts and things like that, but I never actually used them. I was always against them. I never could understand like the crowd mentality. It was always to me the herd mentality. But there was a great period in time where it worked. That worked. Back in the 80s and back in the 90s, technical analysis worked. That stuff worked, because everybody was behind it and there wasn't that much manipulation. There wasn't that many computers, algorithms in the game at that time. Now, most of the time that you're trading with a computer. You're not trading somebody else. You're trading with a computer, whether it's a computerized market making system, a smart money hedge fund or whoever it is. That's who you're trading against. You're not trading against some other freaking human. You're trading against a sophisticated system. It's taking the other side of your trade. And you got to think about that. So 2007, that's when regulation NMS came in, and all of the whole structure of the markets changed completely, and that's when the computers took over. It was like overnight, man. The computers took over, and you could see it in the tape, man. Everything changed. Yeah, that's nuts. So, what's the sort of info that you're actually pulling from the tape that's actually influencing your decision on to place a trade?
Yeah, this one's a tough one. This one's something that you have to see. You know what I mean? You have to see it being done. It's like that same thing. With tape, everybody says tape is like a lost science or a lost art, simply because like there's no information about it. There's no books out there that you can really sit there and read about the tape. It's more of a feel thing. It's more about understanding buyers and sellers, how they interact with one another. And when you have a large player that is accumulating, let's say, blocks of shares or 1 million shares or 2 million shares, they have footprints. They have footprints. They have a distinct way that they're going about buying those shares, and that's kind of what I'm watching for. I'm watching for the bigger players building into a position, and then finally they went ahead, they let it go, and that's when you see the stock either going to the moon or going down to the depths. It's where these big breakouts and big breakdowns can happen, where really sharp price movements can happen within a short period of time. I'm looking for those spots. That's what I'm looking for, and I'm trying to assess buyers and sellers, and again, who's involved, who's manipulating that tape, and trying to figure out, okay, who's behind it, why are they behind it, and what are they doing? That's basically it.
Okay, cool. So what sort of influence does things like news releases and rumors have on your trading, if any, or do you just sort of stay focused on reading the tape, like it's all factored into the tape already?
Yeah, it's a little different now. Like before, 10 years ago, like you could trade a news release, you really could. There was enough time for you to be able to do it. Now, anytime there's a news release, like the news algorithms pick it up so quickly and make these moves happen within fractions of a second that anytime you try to get involved in this, you're the last one to the party. You're the last one to the party, and there's no way you're making any money here. So I always trade after the news release. I'll always trade after the news release. I will never try to anticipate some kind of a news release being in my favor or whatever, because you never know how it's going to affect the markets. You could look at a simple earnings call. You could take out most earnings calls that came out. Like you take Alcoa, which kicked off earnings season this year. It was positive earnings, great earnings, and the stock absolutely tanked. It opened up, a little bit higher and then tanked 2 points over the next 2 days just because of the timing of where the market was. So oftentimes news releases and things like that, they don't matter. They don't matter. They're used more as a place to manipulate people into believing a certain direction, So I'll trade that after, once I understand what they're doing with that particular news release, So I'll try to stay away from it and trade after.
Yeah, you got to be careful what you listen to. So by following the tape, you're pretty much getting as close as you possibly can to the current price action.
That is the closest. That's the closest that you can get. And that's why I always come back to it. Most people are using all these other indicators. These things are lagging indicators by God knows how long. When you understand the tape and you understand buyers and sellers, that's when you understand how the market works from a fundamental level, how buyers and sellers have to interact with each other to get an order filled, and to get a significant amount of orders filled. There's certain actions that need to be taken. And when you can see that happen, that's when you're really in tune with the markets. You're not looking at some nice looking picture here on a chart formation and saying, okay, this is what's going to happen. That stuff is nonsense. The real information is in being able to read the buyers and sellers.
Okay, cool. So just so we're clear, the tape is the same as level 2?
Yes. So tape is level 2 and time and sales. So level 2 being your bid and ask, and time and sales being your the actual transactions and orders that take place. Tape can also refer to options as well. So oftentimes you'll see action in the options, big buyers and sellers of the options that end up moving the markets too. So it's vice versa. So tape includes all of that price action as well.
Okay, awesome. So once you're actually into a trade, how you determine your exit point / risk, and if things go sour, and on the other hand, how you deciding where you take profits?
Yeah. This is always the tough one, and one of the things that I'm great at is my entries. One of the things that I'm subpar at is my exits. You want to know why? Because exits often get a little emotional, right? Because let's say I'm up in a trade, up 100 grand or something like that. I'm looking at my P&L up 100,000, and I'm saying to myself, maybe I can scratch another 10,000. Maybe I can scratch another 20,000. Maybe I can scratch another 50,000. And your mind all of a sudden gets glued or fixated on making the 150,000, on looking at your P&L at 150,000. And all the while you're looking at your tape and it's telling you to get the hell out, and you're not doing anything because you're still fixated on your P&L being a certain way. So exits can really get botched when emotions come into the picture, or you add your own soundtrack to the trade, which you can't. Because the trade doesn't give a shit about what you think. The trade doesn't give a damn about, how much money you want to make out of it. The trade is just the trade. So exits, I'm at my best when I'm slowly limiting out into strength. And then by the time it's the top of the move, I'm pretty much out of the option completely. If I wait until that last moment to sell my options, that's when the bad things happen. Because if you wait until the last moment, you're fixated on that P&L staying the same. There's no way it's going to stay that same. And if you wait until the last moment, whatever price on your option that you're trying to get, you're not going to be able to get that with the full size that you have. I never do. And that price disappears real quickly when everybody else is running for the exit too. So they'll push the price of that option down like crazy and have you looking at a P&L that you didn't want to look at, So the way that you have to do it best is to sell out into the strength, So whether if you're on the short side, slowly sell your options as it's working in your favor, so that by the time, the stock is moved to, its final low or high or whatever it is, you're out of most of your position. This is a difficult thing to do because, again, emotions are there the whole way. How do you not know it's going to keep going? How do you not know that, the thing's going to pull back? So there's so many different things that you have to account for and be dynamic and act dynamically as a result, which most people, again, they can't do.
Yeah, man, exactly. Valid points. So having the skill set of being able to effectively read the tape, is that what you would say gives you an edge in the market?
Yeah, absolutely.
Yeah,
absolutely. 100%. 100%. That is my edge. And dude, it's funny that you say that. Is that U.S. equity markets are so mature. They're so mature in the sense that there's anybody who says I have an edge, chances are they might have an edge for a couple of months where they're making some money, and that's it. There's no real arbitrage or that edge left in the markets unless you're looking at it from the computer perspective. So if you're just a regular human, you're a retail guy, there's no true edge left in a mature market like this. There is on the computer side, because the computers, again, they're not swayed by the emotions. They can pick a certain type of situation, account for all these other conditions, and make sure that they're only doing that. Make sure that they're only doing that. Whereas retail guys, we are swayed by our emotions, which make whatever edge that you might have discernible. It might make that edge completely disappear. Whereas the tape reader, I feel like, still has that edge. The retail guy who is still who understands how to read the tape, he still has that edge because he can still find where that money is going to be and how to get it just simply by reading the tape. So I still think, that's where the true edge, as far as just a human manual trader is, still left in this market. Everything else is accounted for. Every other strategy you can possibly think of, whether it's options, equities, or whatever the hell it is, that shit is accounted for. It's documented. Somebody has computerized that strategy. Any edge whatsoever has been taken and it's spoken for.
Okay, cool. So just sort of going back to your trading more specifically. So you're trading pretty much every day, sort of day in, day out. Are there ever days when you feel like you should not be in the markets because nothing's really lining up or looking like a good opportunity? Like, how do you avoid forcing trades?
Right. Every other day this happens. And again, this is the human aspect. This is the human failure when it comes to trading. When you know in your head, like, hey, listen, there's no opportunity here. There's nothing for me to do. But you are motivated. And remember, where this goes back to us saying the motivation for making a trade is most of the time, the at fault of the human. And because what are those motivations? What are those motivations? Those motivations are, I need to make my rent money. Those motivations are, I have losses to make back. Those motivations are, I want to buy a house next year, so I need some money for a down payment. Those motivations are, I want to get a better apartment. Those motivations are all kinds of dumb things that the market doesn't care about. It doesn't care about. But we add that soundtrack to the market, which causes us to force trades. And this is one of the biggest flaws of any human trading, any human trading. And again, you have to hit that root, the root of why you're making the trade in the first place. And most traders need to fail before they can see the light. You know what I'm saying? They need to fail several times before they can realize, like, oh my God, if I just cut out these bad days or these days where there's no money to make, I'm sitting on millions here, But it's so difficult to do that in the heat of the moment. And this is one of the big flaws of human trading, which computers have solved that. Computers have essentially solved that situation.
Yeah, that's great. I like the way you sort of sum that up. So
yeah, so as far as me being able to do it, like, dude, sometimes I'm good at it, sometimes I'm not. So sometimes I can look at the market and say, dude, I ain't going to make shit. And I can step away and I can go do other stuff. But other times when, let's say I got, a month of losses to make back, I'm there plugging away at the keys. And then all of a sudden I look at the end of the day, I'm like, dude, why did I do that? So it's still back and forth for me as well. That's still something that I'm struggling with too. I'm not ashamed of admitting that.
Yeah, cool. So we sort of touched on this a little bit before, but I just sort of want to expand on it a little bit. And that's sort of like, I've heard you talk about the need to adapt to the new market and the importance of remaining flexible. So yep. I'm keen to hear more about this, as in, what do you mean by the new market? And if possible, could you give us an example of how you've had to change your own day-to-day trading to be able to adapt?
No doubt. I have so many different examples for this. I'll do the one where the weekly options came out. When weekly options came out, price moves and the same breakouts that I looked for before, they happen so much more quickly. Everything is happening so much more faster. And again, there's another reason for that too. And it's a little bit sophisticated here in theory, and it's tough for people to kind of understand it. But let's just say that in 2009, when I was trading my one stock, two stocks, I had weeks to develop a big position in a stock. Before I'd get my move. I had so much time on my hands to be able to do that. Once the weekly options came out, I had maybe a day. It cut me down to a day where I needed to get this position. Because there was so much more manipulation. There was so much more manipulation of price action. There was so much more fake outs. There was so much more false activity, false breakouts, false breakdowns. And I had literally a fraction of the time to amass the size of positions that I wanted to get. So me building $250,000 in an option is so much more difficult now than it was in 2009 and 2008. I could do that in 2009, 2008. Now, when I try to put that size out there in an option, market makers know me. They can see me coming a mile away. They know exactly what I'm doing. And then the games start. Then it's me against these guys who have more money and more time available to them to shake me out of my position and to literally give them the contracts for 50%, 60%, 70% discount. And then all of a sudden, my move happens that I've been waiting for. I'm not in it anymore. They own my contracts. And they literally waving at me. They're literally waving goodbye to me, while all this money is on the table. So there's so much more that goes into what I do as far as fighting against, smarter players, people that have more money, people that have more time on their hand. There's so much more to it now from the changes in the market than before. So you have to grow. You have to become more sophisticated. You have to start playing the games with them. You have to get sophisticated as far as how you execute your orders, where you send your orders to, how you send your orders. So that's a great example right there.
Yeah, no, I like that. That's a really good example. So, I mean, I couldn't have you on without digging into the psychology of trading, the emotional roller coaster many of us ride, and the mental side of things. So, let's dig into a little bit more on that side of things. So, what are some of your best tips to sort of keep a handle on your emotions? Do you have any sort of advice on the subject that you wish someone shared with you when you're starting out?
Yeah, and that's the thing. Like, you go through so many different emotional stages of your life, you know. So you got to remember, like, whatever environment that you have around you, that's what's going to influence your decisions, and that's what's going to influence your emotions. So, for example, when I was 23, 24, you know, I just had a baby. You know, my thing was all about, you know, how do I make sure I got rent and all that kind of stuff covered every single day. You know, so when I went about trading, it was all about, okay, how do I make $4,000 a month? How do I make $4,000 a month? How do I make, how do I make this kind of money a month? And I wasn't looking at the big picture. I was never looking at the big picture, simply because, like, what my environment decided how I was going to live, how I was going to make decisions. You know, so whatever you're going through at the time, you always have to be bigger than that. You know, you always have to take a step outside and look at what you're going through and realize that in trading, none of that shit matters. None of it matters. And it's so difficult to do this. It's so difficult to do this, to step away from having to make money, to step away from, living a certain lifestyle or requiring a certain lifestyle. It's so difficult to step away from all this stuff. And I would say the one most important thing that I wish somebody told me was that to not think about the money when I'm trading, you know? And again, you know, this is not something that you learn overnight, but it's something that if you have it in the back of your head when you're starting, you know, you're closer to the bigger picture than I was, you know, so it took me years to figure that out, you know, and it was always about your lifestyle. Like, trading can consume you, and does consume a lot of people, to the point where they don't leave their houses, you know, they don't go out, they don't talk to people. You know, they become very secluded and lonely and loners, you know, simply because, like, they're slaves to their P&L every single freaking day, you know, and that's all it's about. And that's not what it's about, you know. So living a healthy lifestyle and you know, enjoying time with friends, whether you're down on your account or down on the year or you're up or whatever, you know, having a life is so important to being on an even keel. You know, when you're sitting there in front of the computer, in front of the trading screen, you know, so always thinking about that big picture, which, again, most people stop thinking about it the second they have problems trading, or the second they have problems in their environment that they have to deal with. And then subsequently, those problems affect their trading decisions. And that's all it is. You know, most of the bad decisions that you make are a direct result of your environment, or you projecting the problems that you're having in your environment or in your life onto the market, onto a market which doesn't give a shit about it. We're just talking pure probabilities. Market doesn't care if you got issues, you know, it doesn't give a damn. But you're going to project that onto the market simply because that's what's going on in your life. That's what you're thinking about. You know, you're thinking about rent. You're thinking about this. You're thinking about, you know, how shitty your life is maybe at that time, or how great your life is at that time. You know, you're thinking about all those things, and you're projecting this onto a probability mechanism, a market which doesn't give a shit. You know, so that's the biggest thing I could say. You know, keep thinking about the big picture. Don't fall into the day-to-day, you know, hustle and bustle of the market all the time. Realize that the market's not going anywhere. There's going to be money to make tomorrow, the next day, the day after that. You know, so don't get too wrapped up in every tick of the markets. You know.
Yeah, man. Top advice. So still tying in with that emotions and psychology sort of thing, how do you keep the confidence up to push on and pull the trigger after a run of losing trades?
This one's tough. Man. It's tough. It's like taking a bad beat. It's always like taking a bad beat. It takes time. Everything is about time. You know, so let's say you get a run of bad cards, or you get a couple shitty months where you take a bunch of losses. You know, it just takes time. It takes time for you to step back and realize what happened. And then it takes time for you to stop being depressed. Like, humans have this this innate sort of ability to what is the word I'm thinking of, self-doubt, or to beat themselves up, after something bad happens. Like, humans always go through a period of time where they beat themselves up about it. They're like, dude, I shouldn't have done this, I shouldn't have done this, I shouldn't have done this, right? They kick themselves in their ass too hard, and it takes a while to work out of that process and to start feeling more confident about yourself, to start feeling, like you actually can do this. You know what I mean? I mean, during a period of bad losers, there's nothing in the world that feels as bad. I mean, again, obviously there's worse situations everywhere, but it's a horrible feeling in the pit of your stomach. You're just like, dude, can I even do this anymore? And it takes time. It always takes time to come back out of that scenario. And that's, again, why it's so important to stay on that even keel, to continue to live your life and enjoy your life, and to continue to have other things around you that you're motivated by as well. It can't just be about the markets all the time, So that will help those, those periods of self-doubt and, you're beating yourself up, depression and all that kind of stuff. That will help making those periods a lot smaller, so you can, automatically bounce back and jump back into the game. For me, it's like 2 months or 3 months where I sort of like size down. I'm like quiet, and then finally, once I get a couple of winners, I'm ready to get back in there.
Awesome. So let's just jump right to the other end of the spectrum right now. And that's, I've heard you in the past sort of talk about when you did start to make it as a trader, the people around you began to change a little bit. So, they weren't necessarily supporting you when you were coming up. And sort of going through that struggle zone, like they'd sort of be like, what are you doing? Why are you trading? Waste of time, get a job, like that sort of mentality. So, how did you deal with that sort of scenario? And I mean, sort of what happened with you?
Yeah, man. I mean, that's a great thing that you asked that. And I'm sure you probably asked that to, a lot of other successful traders as well. And I'm sure like everybody has a different way of answering this, but there are some people that are more self-confident, self-aware than others, right? And you take a trader that has some success, right? Sitting on a few $1,000,000 or sitting on however much money. And all of a sudden, like everybody around them changes. Everybody around them starts looking at them differently. And you can see it in their eyes, the way they look at you and the way they talk to you. They talk to you with this respect that, you never saw before. And you start getting used to that. You start feeling more powerful. You start feeling more important. You start feeling, all these things that you never really felt before. And to some people who, let's say, are easily swayed or might have sort of an addictive personality, that ends up taking them over. And you start to realize like they change as well. They start to only have these people around them that want something from them or say yes all the time to them. Or let's face it, at the end of the day, they're not real. They're not real. They're just there because you're the power guy. You're in the power position. They're just there. Women especially, women that won't talk to you before, and all of a sudden you got a little money in your pocket. These women now want to know your name and they want to hang out with you and all that. It's bullshit, at the end of the day. But a man or a woman who is not, let's say, that self-aware and knows, that this is a bad road to go down, they get sucked into that life real quick. And we see it on the news every day. We see a new person on the news every day that goes down that road. And then all of a sudden, 6 months later, they lose all that money because they're motivated by all this crap, women, drugs, blah, 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 all this nonsense. And all of a sudden, like, you never hear from them anymore, So what I'll say to that is that I ate into it at some point, especially when I was in New York. When I was in New York, we were living a crazy lifestyle. I am telling you, man. The people that you'd see at this loft on a daily basis, it was absurd, absolutely absurd. The things that happened at this place were absurd. But it was a great experience. It was all great experience. But it really does teach you a lot about yourself when presented in that situation, because most people don't have to deal with that. And it's so easy for other people to look at you and say, "Oh, you should have done this, or you should have done that." It's like, dude, you never had that. You never been in that position to be making any kind of statements about what you would or wouldn't do. And I always said it in one of my posts too. It's like, people are hypocrites. It's so easy for a poor person to look at a level somebody who was rich, who was sitting on a couple $1 million or $10 million or whatever, and say, oh, he's doing this and oh, he's doing that. It's like, dude, if I put that kind of money in your pocket right now, you would turn into an even worse person, but you don't know that, because most people haven't been in that situation. So, dude, I would say I gave into it for a little bit. But dude, I realized pretty quickly that, it's all bogus. It's all bogus, and it's more about what you want to do with your life. How do you want to spend your life? What makes you happy? And if it's all that nonsense, going to the club and spending money and, being in this sort of public eye and all that kind of stuff, yeah, that's great. But that shit is not going to last that long, and it's not going to feel that great when, 5 years from now, 6 years from now.
Yeah, it's funny, like you hear of this sort of thing happening sort of all the time, like you mentioned, but you sort of never really think it will happen to you. I mean, I can't speak from experience where I'm at right now, but, did you sort of get that, like you never sort of pictured that would happen to you as you were coming up?
Oh yeah. Oh, absolutely. Absolutely, dude. Like I never knew that was going to happen to me. I never accounted for it. I never understood it, and I always boldly stated like, dude, I'm not going to be like that. I remember always telling myself like, I'm never going to be like that. And then all of a sudden when it's there, it's in your hands and you have that power and people looking at you like that. It's like a drug. It's almost like a drug. And you can see how people are easily addicted to feeling that way. And if you give into it, like that is always, I would say, 99 times out of 100, it always ends up in a shitty situation somehow, some way. It always does. It always does. And I can say that from firsthand experience too.
All right, man. This has been awesome. So let's we're sort of getting towards the end of the interview, but I've just sort of got one more question and then we'll take it to the closing bell. So why do you believe the majority of traders never see the huge success we set out to achieve in the first place?
Yeah. And I will say purely, and trying to come up with the root of that. Like, dude, I've been thinking about that a lot. Like, there's so many different ways to attack that question, So some people might say ego, some people might say this, some people might say that. And I think it's people never truly know what they want out of life, right? And if you're going to be a trader and you want this success, right? Most people just say, "Hey, I want $1 million," or "Hey, I want $2 million." And I can say firsthand that, making $1 million, it didn't give me any purpose in life. It didn't achieve it. I didn't make it and all of a sudden been like, yes, I'm good now. I've achieved this and I'm fine. Like it had nothing. There was nothing there. I felt nothing. I felt absolutely nothing. In fact, I felt pissed off because I didn't make the 4 million on the trade and I made the fucking 1 million. You know what I mean? This was bullshit. It's complete bullshit when you have these dollar amounts that you want to get to. Because when you get there, it's not about that. So people, everybody has a different evolutionary cycle in the sense of how mature they are and where they hit that certain point where they really know what they want out of life. So if you, for example, want a freedom from having to work, that's something that, okay, now you can go ahead and break down what it's going to take to achieve that. So maybe it's, okay, making $1 million and then stashing that $1 million, living a sort of a very easy lifestyle, 50 grand a year type thing, making small investments, and then you never have to work. That's something that you can pull off. But if it's something where you just want to make money, remember, it goes back to the motivation for making the trade. And that's what I will always come back to. What is your motivation for making that trade? And if that motivation is not defined and it's not, it's not true in its purpose, then it doesn't matter what you do. It doesn't matter how much money you make. You're going to end up fucking losing it. You're going to end up losing it, or you're going to end up doing something else stupid. Simply because like you don't know truly what you're after. You don't know what you're going for. So most traders are just like, dude, I just want to make money. I want to make money. I want to make money. And that is a debilitating way to go about trading. Because if all you're motivated by is fucking money, then guess what you're going to do? You're going to make horrible decisions in the market all the time because you're motivated by, oh, I got to play this earnings call, which is horrible, which is a gamble at the end of the day. Oh, I got to make money today, even though there's nothing going on. So you're just going to rack up all these losses. All of a sudden, you got 2 blown accounts. Now you got to go back to work. And what are you going to do? You're going to stash money here for a trading account on the side because you want to get out of work? What makes you think you're going to make better decisions? Because now you're under the gun and you got a fucking job and now you want to get out of your job. You know what I mean? People don't make good decisions when they're strapped down and they don't understand what their purpose is. And that's what I found out through so many years of up and down trading and through so many years of wanting different things, you know? So ego got me pretty far. But there's no way ego is going to make me $10 million or $20 million. There's no fucking way ego is going to make me that much. You know, the maturity now and the understanding of what kind of life I want to live, that's what's going to get me there. That's what's going to get me there and stop making, rash decisions in the market. Again, making decisions playing stocks from bad motivations. You know, so that's what I would end that with.
Yeah, man, that's awesome. So much good advice through this interview. I really appreciate you coming on again.
No doubt.
So let's just take it to the closing bell, which is just about 4 questions, and we just sort of ask them to all the guests. So first one, what's the best piece of advice you've ever received?
Man, this is I hate questions like this too, man. Best advice I'd ever received, man. Man, I would say relax, be patient. Actually, yeah, that's the best advice I've ever received. Be patient in all forms, in all walks in whatever you do. Be patient. If you sit there and just bang on the desk keys, whatever it is in life that you're trying to do, if you force any situation or you go after it too aggressively, it has unintended consequences. So be patient, man. You know, it's going to come to you no matter what if you're true in nature and purpose.
I like it. Awesome. So what is the number one trading resource you rely on each and every day that you probably, would struggle without?
As far as like news, as far as what? As far as like a platform or something like that?
Yeah, anything. I mean, something that you rely on the most. So, maybe a trading platform, sort of.
Yeah.
Maybe the tape in your case.
Yeah, tape for me. That would be it. That's what I rely on every single day. I wake up in the morning and I look at tape. I go to bed at night and I look at fucking tape. So that's it. If I didn't have a time and sales in my life, I wouldn't be able to make money.
Fair call. So, what is one book you believe would be a good read for sort of an entry-level trader? Maybe something around the topic of understanding market structure better?
I would say Dark Pools. Dark Pools is it's such an awesome story. It has suspense, it has characters, and it is so cool. It is such a cool book. Now, for the newbies, there might be there might be some stuff that goes over their head, but again, it's written so well that it's just right on, man. It's perfect.
Awesome. That's definitely what I'm going to check out for myself, actually. I'm keen to read that.
Absolutely.
So knowing everything you do now, what would you have done differently come day one again?
Man, I would have been more patient, bro. This goes back to number one. I would have been more patient. And again, when you're young, like being young is rooted in ego. It's rooted in, is thinking that you know more than you actually do. And you know this as a younger fellow. And my daughter is almost 10, and I look at her and her ego is fucking ridiculous, man. It is ridiculous. It's blind. It's so blinding. So when you're 20, 21, 22, 23, all that kind of stuff, you don't know anything, and you think you know so much, and you literally have to get beaten down, and then you finally come into who you should be. Well, when you get beaten down, that's when you finally come into who you should be. So I would say, the person who gets beaten down earliest, meaning, if that happens at 19 or 20 or whatever, those are the guys that are really going to make something happen. And so that happened to me too. So,
Awesome. All right. Again, Lucci, man, thanks so much for coming on. Before we go, do you just want to share with listeners where they can find out more about you, more about Sang Lucci, and, where they can connect?
Yeah, of course. I mean, we're at Sang Lucci everything. You know what I mean? So you find us on Twitter. You can find us on Facebook. Everything is at Sang Lucci. The website is also sanglucci.com. But honestly, the Twitter feed is the best place to just get an idea of who we are, what we talk about, and the culture. Because we're a lot more about lifestyle. We're not just about trading, and that's one of the things that we diversify ourselves as far as everybody else out there. We're so much more than just traders, and that's one thing that we're trying to bring to fruition in 2015 and going forward. More of the lifestyle thing, like who we are as people, and who you need to be as a trader. You can't just sit behind your desk anymore and just flop around. There's a community out there, and there's a lifestyle behind it. So that's kind of what we portray. So yeah, at Sang Lucci everything, man.
Awesome, man. Well, all those links will be in the show notes anyway at chatwithtraders.com, cool. So you'll be able to find everything there. All right, thanks again, Lucci. We'll keep in touch and speak soon.
All right, Aaron. Sounds good, man.
All right, guys. I hope you all enjoyed that interview. Lucci gave a ton away, as I'm sure you heard. Very, very smart dude. Now, I just wanted to do a quick recap on the giveaway we're running at the moment. So it has actually kicked off, and what we're giving away is the Lucci method. So one person is going to win this. Now, what this includes is unlimited access to over 75 training modules in an online course. In each module, there is videos, there is written material, there is charts, and there's more as well. This takes you right through from the basics of learning options to the finer details on how Lucci actually trades in the markets today. Also included is 2 months access to the Sang Lucci chat room. This is an incredible community. Everyone gets the same respect, regardless of your level of trading. Lucci is in there throughout the day, talking through his trades and things he's watching. And also, as part of the chat room, you also get the market regime report, and that's a video you get 2 times a week. On top of this, you also have 2 months access to the weekend sessions, which are really cool. This is 2 hours each weekend with Lucci, when he reviews his trades and goes over any interesting tape movements that have come up in the past week. And it's all done on a live webinar, so you can ask questions at any point, and he'll explain it in greater detail if you don't understand anything, or there's something you're getting stuck on and want to know more about. And then finally, the guys are also going to throw in a 1-hour coaching session with Zach Hurwitz. And I mentioned at the start, like, this guy is just crazy when it comes to trading VWAP. And that's volume weighted average price. I'm going to have him on the show in a couple of weeks' time, and he'll run right through that. Very, very smart guy. So keep your ears out for that one. Now, also, the package is for sale on their website right now for $2,699. But we've got one to give away. So to enter, just go to chatwithtraders.com/giveaway. There'll be one question there. You've got to answer it. It's very simple. You won't get it wrong. Trust me. Enter your email address following that. And once you do this, you'll instantly be entered. This will give you 1 entry to the giveaway. It'll also give you a unique URL. And the idea is you need to share this like mad. And I'm going to tell you why. The more you share this URL and the more people you can get to enter from clicking your URL, the more entries you get. So for every 1 person you get to enter through your unique URL, you get 10 entries. So let's say you get 10 people to enter. Then your chance of winning is actually 100 times greater. Pretty cool, right? All right, now the competition will end at 7 p.m. on the 8th of March, Eastern Standard Time. So get busy, guys, and don't wait on it. Awesome, awesome prize. And again, in case you missed it, go to chatwithtraders.com/giveaway to enter. All right, awesome. Thanks a lot, guys, for tuning in, and I look forward to speaking to some of you in the meantime, and again next week. Peace.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Lucci.com. That is my team. That is my home. You can find out all about what we do, the funds we operate, the media we get access to, all of it.
Awesome. All right, Pete, thanks again. It's been real, and let's talk soon.
All right. Have a good one, Aaron.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way.
Chat with Traders is brought to you by Trade the Pool. Did you know that every decade the market also can trade today?
Are you ready to get serious about trading? Then join Tasty Trade, Investopedia's best platform for option charting tools, a pre-built strategy selector, risk analysis.
Everyone else. However,
Tuning in to another episode of Chat with Traders. This time it is episode number 10. Can you believe we're up to episode number 10 already? These weeks are just flying by. It's nuts, but let's talk about today's guest. So today's guest is Tim Grittani, and many of you may know him also by Croy Runner 89. That's his Twitter handle that he goes by. And this guy is a very, very talented intraday trader. He originally started with roughly a $3,000 account, and over the years, he's transformed that into well over $2 million and getting close to that $3 million mark in just a few years. So he originally sort of kicked things off in 2012 when he first ventured into the jungle of penny stocks. After catching on to how these markets operated and really got an understanding of the manipulation that goes on, he was able to master a few setups that he could identify very well. And obviously they paid him quite generously over and over again. But eventually he hit a few limitations, and now he's predominantly a short seller of NASDAQ stocks, which makes for a very interesting segment during this interview. What's also interesting is the 5 key factors that Tim contributes to the majority of his success to date. And he really breaks down each one of those throughout this interview. So definitely some great insights you'll pick up from there. You'll also hear about the events that led up to his gigantic single trade loss of $290,000 during October last year. This will definitely give you a great appreciation of just how bad things can get when you go against your trading rules, because as you'll hear, when the ongoing problem surfaced, it got ugly very, very quickly. And just before we roll into this week's interview, I'd like to remind you guys that the Lucci Method giveaway is still rolling on. So we'll actually be wrapping that up this Sunday. So that is the 8th of March at 7 p.m. EST. And if you have missed it, what that does include is it's a product offered by Sang Lucci. So these guys are selling this product at the moment for $2,699. That's actually what it retails for, no made-up value. And what that includes is an extensive online course taught by Lucci himself, which has over 75 training modules. You also get access to the Sang Lucci chat room, which is a great community, plenty of traders of all different levels. You'll also get access to the weekend sessions. Now, the weekend sessions are really cool. They're actually like a webinar that goes for about 2 hours every weekend, and Lucci's actually running through his trades and any interesting tape movement that he's spotted during the week, and really sort of runs through all of that with you. And it's also a good opportunity where you can hit him up with any questions you might have about your own trading. Included in that is also a one-on-one session with Zach Hurwitz. And this guy's just crazy when it comes to VWAP. I think I might have mentioned that before, actually. So you'll get a one-on-one coaching session with him for about an hour. And I'm actually got him on the show next week. So look forward to that one, guys. Also, you'll get access to a truckload of videos, like hours and hours of footage that the guys at St. Lucie have put together. So much packed into this giveaway. So make sure you enter. Just head over to chatwithtraders.com/giveaway, and it's all pretty self-explanatory. All right, guys, let's roll into this week's interview, and I hope you enjoy it. Tim, how's it going, man?
Good, how are you?
Good. How's trading been going for you in the first few weeks of 2015?
It's been pretty good for the most part. I had a really hot start to last week and then kind of just fell into some dumb mistakes and emotional trading at the end of it and gave it back. But solid start to this week. I'm building it back, so that's good.
Nice. Good to hear, man. So let's just jump right into it, eh? So what sparked your interest in the stock market back in 2011 when you sort of first got started?
I guess it was that I was a finance major, and I had gotten most of the way through my major at Marquette, and I was already going a semester long in school because I had transferred schools midway through, and kind of got most of the way through the major and figured out I didn't like a whole lot about finance, or there wasn't a whole lot I felt like I could do with it that would be interesting to me. So what I did was I kind of stopped and thought about it and was like, well, if I'm going to stick with this major, which, was the goal, one thing, like the one area that interests me the most is the stock market. And I think I was kind of drawn to that just because it was the idea of, take money and turn it into more money. I'd kind of been into like the whole poker scene and, betting sports a little bit and stuff like that before. So it was kind of like along the lines with some of the more risk averse stuff I had enjoyed beforehand. But this was just, a bit more legitimate. And so, I got into studying stocks because I just kind of figured, okay, if I'm going to come out of school and be looking for interviews for some kind of trading job, I should try to at least have some idea of what I'm talking about and maybe have a little experience on my own.
Okay, sure. So just before we move on there, how'd you go with your poker experience? Did you have much luck there?
I think it, was one of those things where there was some beginner's luck. I'd been playing since I was in high school, really, and I guess first couple of summers I did pretty well, and then after that, really not that much success. And I never made any kind of serious money off of it. But I enjoyed it. I enjoyed the game greatly. I really did have fun with it.
So you still play in your spare time, right?
Oh yeah, I still play here and there. Mostly just like free poker at bars or stuff like that now, though.
Yeah, nice. So I sort of take it that what you're learning in your degree didn't really sort of teach you how to trade the markets.
No, it really didn't.
Yeah. So what were the first sort of steps that you took once you decided that the stock market was sort of something you wanted to look into a bit more?
Well, I guess the first thing I did was I wanted to open a trading account and just trade on my own a little bit and just sort of see what I could pick up along the way. And so I think I funded some broker called Share Builder or something like that. It was just some small broker that really wasn't all that great for anything in particular. I think it was probably just the first one I found. And I just was really randomly trading, and that was about it. I had taken part in this class activity back in high school that I remembered, where it was everybody in this economics class, I think it was, basically had a virtual trading account, and there was a semester-long competition for whoever had the most in their account at the end of the semester would win. And so, I don't remember doing all that well in that, but it was just something that I had kind of found fun and interesting along the way. And back then I was just kind of randomly buying and selling. So I think I just kind of wanted to go in with the same strategy where it's just, practice executing trades, see if I can make a little money. And it really was just kind of the naive idea that, I can just buy this, 30-cent stock, and within a couple weeks, I'll try to sell it for a 10% gain or a 20% gain. And it's just that easy. And within a couple weeks, I had lost half my account and had to kind of take a step back and stop trading and reassess what I was doing.
Okay, sure. Yeah, it's funny you mentioned that. Actually, I interviewed Matthew Owens, Triforce trader, and he had a similar story about trading in high school in a class he had there, and told me he won the competition by just loading up on shares in Apple, and came out on top at the end of the semester.
Oh wow!
So I've heard you say that the first 6 months were quite a struggle for you. So what were some of the things that you really sort of struggled with during that time?
Well, I guess the first 6 months I actually traded. I was a member with Timothy Sykes. I was on his penny stocking silver package, and I had spent a few months watching video lessons and paper trading a little bit and trying to get comfortable. But then once I dove in and actually started trading for real, it was a combination of factors. One being that there was so much emotion for me, at least those first few months, tied into entering a trade, and just the fear of having money on the line. And it was really different to experience it like that compared to when I had just been paper trading, because when you're paper trading, it's the easiest thing in the world. But when your mind is clouded by those emotions of having money on the line, you're not thinking as rationally, you're not making smart decisions. And so I had a lot of trouble with that. And then also I was trying just to blindly follow trade alerts at the same time. I was trading my own ideas a little bit, but anytime I saw a trade alert by a guru that I was following, I wanted to jump in and try to do the exact same trade as them, because, again, by my kind of naive thinking, it was, oh, well, they're a guru, they know what they're doing, so I should just follow them and I'll make money too. And it really wasn't practical because I just couldn't match entries and exits.
Yeah. So what would you say to someone who is following, say, a so-called guru's sort of alerts? How should they be trading them instead of trying to follow them into each trade?
I mean, what I would recommend doing is just learn the reasoning behind the trade. I don't think, other than maybe trying, if the guru has a big following and he knows their alert can move the market, maybe you can try to scalp along based off of that. But that's about all I would do with it. Otherwise, the whole idea for me, and kind of what helped turn me around a little bit, was starting to focus more on the why behind the trade and the thought process, and then I could learn to do it on my own with other setups.
Yeah, no, I think that's really important. That last bit you said there. So you also mentioned there the emotion side of it. You sort of struggled with a little bit. So what sort of things did you do to overcome your emotions, or at least sort of keep a cap on them?
Well, one of the first things I did that I noticed made a big difference, and it probably took me about 4 or 5 months to do this, and that was around when I started to turn things around. I hid my unrealized profit loss column on my brokers, because I kind of realized that I'd be sitting there in a trade and I'd see, oh, I'm up $100, or oh, I'm down $100. And just having that number staring me in the face, that would kind of feed the emotional side of it a bit. And I'd get either scared of losing a profit, or scared that, my loss is going to get worse, or whatever. But I'd start thinking about the money instead of the trade and about the setup. And really, I'd lose sight of why I was in the trade in the first place. And I would really just close trades out randomly based off of the money, rather than off of, what I thought was going to happen based off of the chart. And so once I hid that, it was, I still kind of knew in the back of my mind how the trade was going, and if I was up or down, and a general idea of how much. But just to not see it in front of me constantly made a huge difference. And I noticed that really got the emotional side of it down for me.
Okay, so by hiding that sort of the P&L column, you could just sort of really focus in on the price action and sort of stick to your plan a little bit more.
Right.
Yeah, cool. So you've obviously day trade full time now. So at what sort of stage did you feel confident that that was going to be it and you were going to trade full time?
I'd say it was about 6 months into trading, right around that time where I had 6 months of struggles. I had dug myself into about a $1,300 hole in my accounts. That was a lot of money for me at the time, but it wasn't an insurmountable amount by any means. I had worked a summer job and made 3 times that. So it wasn't like it was an unrecoverable sum. So it took me a couple months to dig out of that hole. And then in November of 2011, I got back to the break even mark and then hit my first big trade, which was buying a promotion early and selling it 10 minutes later into a huge spike, and made about $2,000 on that. And once I got past that break even point and, you know, I had seen a couple of consistent months of results and I felt really comfortable that I knew what I was doing finally, that was kind of my moment where I said, you know, I'm graduating in a month, but I don't want to get a job right out of college. I want to give this more time. I want to keep trading full time and really see if I can turn this into something.
Yeah, awesome. So that 6-month period, I mean, that's really not very long at all. So how do you think you were able to sort of pick it up so quickly?
Well, I think that 3 months of preparation time before I started trading was very helpful to me. I mean, I still made a lot of mistakes during that 6 months that I started trading, but I think that I made far fewer because I did have a little bit of, you know, a background in it at that point, I guess. Like I wasn't just diving in blind on day one. I had a little preparation time to learn some of the ins and outs. But really, I kind of just remember along the way, especially, you know, I feel like there was like a solid month in there where every single day I just felt like I was learning something new or making a new mistake or just like figuring out something I could improve upon. And it really was just that I was very self-reflective about what I was doing and trying to take away from every single day any improvements that I could.
Okay, so were you maybe like writing these down, recording them? I know you've got a blog now, but were you sort of writing about it or journaling this in any way when you were sort of starting up?
The only journal I really kept was, I guess one of the big turning points for me was I decided I wanted to focus in on just a couple of setups because early on I had traded a lot of different setups and was having very mixed results. So I chose to focus in on what I was good at, which was over-the-counter stocks, the pump and dumps, and it was buying promotions early, and then it was buying multi-week breakouts or 52-week breakouts or something like that on the daily chart. It's like big-time daily chart breaks. And so I wouldn't so much journal like my emotions and stuff like that or just like little lessons, but I did start tracking those setups and putting them into a spreadsheet and just sort of keeping tabs on how they performed and what typical returns looked like. And just, you know, having some idea of past performance so that when the next one came along, I could try to like put my plan together a little bit better.
Okay, cool. So let's dive into that a little bit more and just talk a little bit more about your actual trading style. So
okay.
I know these days you're right into your NASDAQ listed equities, but I'm really keen to get into that also. But before we do, I mean, you obviously started out playing penny stocks and the OTC markets. So what was it that really attracted you to these particular types of stocks?
Well, it was partially, you know, after I'd had a lot of experience and I'd tried trading, you know, the listed stocks that are earnings winners, and I tried pretty much everything. And I would get really frustrated with some of the listed stocks because I'd be trading a setup that looks great. I'd be buying a stock breaking to the new high a day, and then something like the overall markets would dip and the breakout on my stock would fail because the overall markets dragged it down. Or there were just so many more factors it seemed like would influence those more expensive stocks. And it really was frustrating to me. So in watching the OTC stocks, they kind of traded in a world of their own. And they didn't tend to follow the overall market, at least from what I could tell. It was just more about who was promoting it, how effective the promoter is. And really it was just purely based off of technical analysis because these were companies that had no fundamentals whatsoever, and everybody knew that eventually they're going to zero. But the question is, you know, the people who are manipulating it and controlling it, how far are they going to let it run first? And so the only way to really play off of that and figure out what their intentions might be was just to try to anticipate the chart patterns and learn, you know, which patterns repeated themselves.
Okay. So you mentioned in there about promoters. Can you just give us sort of a brief rundown on how these sort of promoters work?
Yeah, absolutely. So I guess the best way to put it is, especially with some of these big time promoters, the guys who were really running some huge plays back then, what they would do is basically they would create a company from scratch. And all of the free trading shares for this company would be insider owned. So they could control at what pace they sold their shares, and whether they're going to drive the pick into the ground or if they're going to support it and keep the stock moving up. But basically they were taking these stocks that were very easy to manipulate. They had millions and millions of dollars, so they were completely in control of the action. So it was really more of a game of trying to follow what is the big money doing. And so they would come out with a new pick, and send out an email blast to all their subscribers. They would have these email newsletters with thousands and thousands of subscribers and say, our new pick is XYZ or whatever. And then usually what you would see is a really big, strong spike on day one of the promotion, most of the time ending the day up 50% or more. And then after that, it was just a question of whether they were going to turn it into a multi-week promotion or not. And that really, again, was just, you could predict that based off of the chart patterns and how they were controlling it.
Okay, so once you sort of saw these things, could you give us a bit of an overview on how you might have traded that, or if you weren't trading that, what you were looking for, like what setups you were watching for when you were trading these OTC stocks?
Yeah, okay. So, the two big ones for me early that kind of turned me around, like I said, new promotion releases. And the idea behind that was, as these promoters, with every successful pick they put out, more and more people became aware of them, and more people wanted to play the next one, because the idea was, oh wow, the last one went up 1,000%. Well, this next one should be great too. So I really tried hard early on to make sure I was one of the first people to get an email. So that came down to knowing all of the connected promoter websites, signing up to multiple email addresses. And basically, as soon as they sent out an email and said, this is our new pick, I was buying. And I was trying to get in as quickly as I could and to beat that rush in of people who wanted to get in. And I mentioned earlier, my first big win was a stock that spiked huge in about 10 minutes. I think that was a 70% win in about a 10-minute window, because I was one of the first people to get fills, because I got my email set up in an efficient enough way that I was getting the emails quickly. So anytime a new promotion got released by one of these guys who had a good reputation, I guess you could put it, I was trying to get in quick. And then beyond that, it would just sort of be a matter of letting the chart develop. So after a few up days, or after maybe a week or two of promotion, I'd look and I'd see, okay, what is the high that the promotion has reached so far since this stock started getting pumped? And if it started to break past that high and reach new all-time promotion highs, that was a breakout on the daily chart. And that was another setup that I really liked. And I would buy it as the stock was breaking those new highs in anticipation of it having another up day or two or three, and really running and squeezing.
Okay, so you talked about getting in early there. Pretty much like as soon as you got the email, were you just diving right in, or were you sort of waiting for a confirmation that something was going to come out of this?
No, I really would just dive right in, because the email was the confirmation.
Okay.
Because once I get that email, everybody else who signed up to that email list is going to get it as well. And because these guys, that's why promoter history was really important to me. I wouldn't do that with just any random promoter. It was the fact, though, that these guys had put out, a few good promotions in a row. And all of these, it really was just a very predictable spike where you get 10, 15, 20 minutes of just straight up spiking action, because everybody's trying to get a fill and trying to get in early because they think this is the next big promotion.
Okay, and how legitimate are these promotions? Like, is what they're doing there, is this sort of a legal operation they're running there?
That's kind of tricky to answer. I'd say, because there's a lot of very fine lines that they toe. Technically promoting is not illegal. I think what's illegal is if you're promoting a stock and you're selling shares without disclosing that you have those shares to sell. Or it's a very fine line, and I'm not really clear on the distinction. But basically, as far as legitimacy goes, these were all worthless companies. And I think pretty much every single one I've ever traded is probably at sub-penny levels now, or very close to zero. So, I mean, these were just, this was, just promoters trying to dupe people and trying to take their money. And that really is all it was.
Yeah. Okay.
Are you ready to get serious about trading? Then join Tasty Trade, Investorpedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including 0 commission on stocks, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, risk analysis tools, and more features to help you trade smarter. See equities and derivatives with high trading volumes, dividends, upcoming earnings reports, and more with their pre-built watch lists. Or create a custom watch list to keep an eye on the companies and sectors that matter to you. Manage your positions with speed and precision using active trader mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Visit tastytrade.com/chat for more info. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC. Have you ever watched a stock explode and thought, if only I had the capital? Or sat on the sidelines because your account balance felt too small to matter? Good news, with Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, even the newest IPOs, and short anything you like with zero locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. And now you can also have unlimited time to reach the profit target. It's a game changer. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you even pay a cent. Click the link in the show notes to start trading with Trade the Pool's capital.
So last year you sort of started leaning towards the NASDAQ listed stocks. It was clear that you're already having great success and making really good money trading penny stocks. So what influenced the change there?
Well, a couple things. One is that NASDAQs are a bit more scalable. With the OTC market, one thing I learned along the way is that volume and liquidity is very, very important to being able to enter and exit trades. And so, a lot of these patterns, even though they repeat and even though they're predictable, there's just simply not enough volume traded in them to be able to take very large position sizes. With NASDAQs, the volume and liquidity is much, much higher. So I think there's more opportunity there in that sense. And I was kind of interested in it for a while because of that. But I was kind of forced over there a little bit sooner than I had planned on. And that was because first the SEC started to crack down on some of these promotions in the OTC market. And you started to see some of these plays get halted. And when an OTC promotion would get halted, it would reopen 2 weeks later. And most of the time it would be down 50% or more from the price it was halted at. So that scared a lot of people away from the OTC market because nobody wants to play these stocks that get halted at any minute. And that really dried up the volume and liquidity over there. A lot of the major promoters that I had been playing for those first couple of years, either the people who were running them got arrested or the sites got shut down. But basically, most of the major promoters went away. And so the OTC market, aside from a lot of the crappy marijuana stocks running the first 3 months of 2014, really has not had much activity in the past year.
Okay. So when you did start trading these NASDAQ stocks, did you bring the same approach with you, or did you have to make a few changes to adapt?
It was It was a similar idea. I was trading, at that point, I was mostly a short seller. I'd gotten away from buying some of these promotions a little bit, and more towards short selling them once they had really spiked a lot and seemed like they were overextended to me. So I took that same sort of approach over to these NASDAQ stocks because I felt like I would see it a lot on those as well, where you'd have, maybe some good news hit a stock or good earnings or something like that. And for a few days, the stock would just go vertical. It would, maybe go from $2 to $5 or something like that. And then it wouldn't collapse as fast as an OTC promotion would. But a lot of times you would just sort of, if you look back on some of the old ones or the old spikes, you would see that over the course of the next month or two, it just slowly faded back to where it had come from. So it was pretty much the exact same pump and dump pattern as I had seen on OTC stocks. So that led me to believe, okay, it's happening to a degree with some of these listed stocks as well. But I did have to adjust how I traded a bit. I had to start looking for a smaller profit window because, again, I wouldn't hold short for a month or two. It was, I would try to trade a couple days when the stock was the most volatile and the most liquid, and then just move on to the next one.
Okay, so one of the big changes would be that you were sort of holding for slightly longer, even though it wasn't a month. You might sort of hold it overnight.
Sometimes I would go overnight with these. Although usually if I did, it was because I'd gotten stubborn with a bad entry. But no, I think it was just more that I would, if I shorted an OTC that went from $2 to $5, I would expect a 50% gain in probably a day or two. With these listed stocks, I wouldn't have that wide of a profit window because, like I mentioned, they came down a lot slower, I noticed. So I'd really be looking for more like 5%, 10%, or 15%. I'd just try to find the predictable part of the move where I could take my piece, of the easy profits and then just leave it alone after that.
Okay, yeah, no, that makes sense. So here's something I want to ask you, and that is a lot of traders will say that you need to have an edge to succeed as a trader, right? So how would you define your edge?
My edge, I think, is really just that I understand chart patterns, or at least I feel like I do. And I have, basically I could call it a list of setups where if I see a certain pattern forming, I immediately know what to do because I've seen that pattern time and time and time again. So as I've gone on, I guess my edge is experience, I guess you could say. That now I get a better idea of what to look for.
Yeah.
But I guess that also comes from the fact that I am able to recognize chart patterns and recognize, which ones are predictable and repeat.
Yeah, so it's just sort of getting really good at picking a sort of particular or specific chart patterns that you recognize. And, time and time again, they've proved that this is generally what follows if you sort of see that setup come together.
Right.
Yeah, right. So as a day trader, I mean, you're pretty well connected to the market while it's open, but I'm keen to know how much time would you say you spend researching and studying the market after hours?
It usually fluctuates a bit. If I'm at a point where I'm comfortable and I'm trading only setups that I'm familiar with and have been doing for a while, really the only time I'm putting in aftermarket hours is just to put together a watch list for the following day. And that takes me maybe 15 minutes a night. Now, if it's me trying to learn a new setup or trying to improve on a new area of the market, then the time goes up a bit because then I'm usually putting data into spreadsheets or saving charts and studying charts or just doing a little bit of, extra after hours work trying to, familiarize myself with that next setup that I'm trying to move on to. And then I'd say, it's more like an hour or 2 hours a day after market.
Okay, cool. Now here's one thing I wanted to speak to you about, and I hope it's not too much of a touchy subject, but October last year, you took a whopping big loss on, I think it was about 270,000 on
290.
290.
Yeah,
okay. trading lake when the bowler stocks were really hot and they were all sort of surging. But I mean, in relation to your trading capital, it wasn't crippling, but nobody could say that isn't a huge amount of money to lose. So I wanted to hit you up about it because there's definitely lessons in there for everyone. So,
Oh, for sure, yeah.
tell us what went wrong and what were the tough lessons that you walked away from this one with?
Well, with what went wrong, it was really almost a year-long problem that just had taken that long to surface, and it was that I was refusing to cut losses. I had transitioned over into these NASDAQ stocks, and I think it was, I guess, May of 2014 that I transitioned over. So I'd been trading them for about 5 months at this point. And I'd always kind of had the attitude with these that they're a lot choppier and there's a lot more fake outs. And I just, they were a little trickier than the OTCs. And a habit that I had gotten into, mainly short selling these big runners, was if I mistimed my entry, I was just going to hold and, let it squeeze me and look to add higher. And, that would be fine. And so I started doing this in May or June, I think. And every now and then I'd get stuck in a stubborn trade, and then it would squeeze me and I'd be down, $10,000 or $20,000. But it always ended where it would come back in my favor and I would take off for either a small gain or a small loss or a break even. And basically it worked out okay every single time. And so by the time Lake came around, I took my entry in Lake on the short side, and I think it was probably about 990 or so that I entered my short at. And I had a small gain on it. Some kind of press release came out midday and spiked the stock a bit. And I was pissed that I couldn't cover my position for a gain. Like I had, maybe a $3,000 gain on it, and I watched that disappear and I was ticked off. So I just figured, okay, screw it. I'm going to hold it till it comes back down and fades again. And then it started breaking out. It started going to new highs. And because I had conditioned myself with that bad habit of not cutting losses, yeah, I was getting squeezed and I was really uncomfortable and I was down unrealized a pretty ugly amount of money. But I just kind of figured it would end like every other one, where I would either add higher and get my average up, or it would just, maybe squeeze for a day and fade back off and I'd be fine. But this one, it didn't work like that. And I made the mistake of adding too early to my position and then getting stubborn on my ads as well. And really, it was just a snowball effect where I took a bad situation and I kept making it worse and worse and worse because I couldn't let go of my short bias, and I couldn't admit that I was wrong and take, what would have been a very manageable loss. And instead, before I knew it, I was down this huge sum of money, and it really was mentally tough to deal with in the trade and then the days following.
So what were some of the lessons that you took away from that? Like, was there something you made like a mental note of like, I will never do this again sort of thing?
Yeah, it taught me that I had to cut losses. And the big one for that one was that is that I held through as it was breaking out to new all-time highs. Or I guess all-time in the sense of since it had started trading with volume when all the Ebola news had started coming out. I kind of looked at that as like the period of the pump, I guess you would put it.
Okay.
And so the high it had gotten to in the previous 3, 4, or 5 days or whatever, when I was first starting to short it, was somewhere in the $10 range. And so once it started to break past that, I should have just been done and should have been out and respected that it could go higher. So that was my lesson. My never again lesson is I'm never going to let myself go on all these rides like I did over the summer, where I'm just holding through big unrealized losses and trusting that it will come back down and everything will be okay. It re-taught me that I have to cut losses and I have to respect the trend.
Yeah, good one. So you actually did a really awesome write-up about that on your blog, so I'll make sure that I put a link to that in the show notes.
For sure, yeah. I know that's a lot more detailed than I can get into over this.
Yeah. So listeners, definitely make sure you check that one out. It's awesome write-up. So let's get a little bit more advice for sort of traders, because I know you did a presentation towards the end of last year in Las Vegas, and you spoke a lot about sort of advice for entry-level traders and sort of on the subject. So at the presentation, you gave out 5 factors that you sort of linked very closely to your success. So I know we don't have, an hour, 2 hours to go through them in depth, but would you be able to briefly run us through each one of those 5 factors and why it's so important to get each one right?
For sure, yeah. The first factor was have the right brokers. And I think that is one of the most key things. You need the right broker for your trading strategy. You need to know what your broker's strengths and weaknesses are. Just an example of that, I've been talking to a trader recently. I was talking earlier here about how buying new promotions on the OTC market was a huge strategy of mine early on building my account. And for that, you needed a broker that would get you good OTC executions. And the best broker for that was Speed Trader at the time. And I think they probably still are now. And so I made sure that I had Speed Trader because I wanted, if I wanted to buy promotions, I needed to have the best tool for it. And it drives me crazy because some traders, like I remember talking to a trader who was trying to buy OTC stocks with a broker where it would take him 5 minutes to get an execution on one of his orders. And I was saying to him, like, even if you have a stop loss level in mind with your position here, if you are trying to get out of this trade when things are going bad, like if your support level breaks down and you want to sell, you're not going to get that fill. Like you might only want to risk, 2 cents a share, but you probably will wind up filling at the bottom of the panic because your broker just is not equipped to sell you in a timely manner. So it's really just the broker is your main tool for executing your trades. So you need to make sure that you're using one that fits what you need. The second key to success was focus only on liquid and volatile stocks. And I mean, I guess that's not for everybody because I do know some traders who are successful trading lower float plays or lower volume plays. But for me, it was very important for anything I trade to be liquid and volatile because I need the volatility in order to actually make meaningful returns. And then as far as liquidity goes or good volume, I've found that I'm far more comfortable and it's far easier to trade size and far easier to get fills on your entries and exits if the trade is going for you or against you.
Awesome. So what's number 3 there?
Number 3 was identify and focus on your niche. And what I mean by that is my big turning point, I think, as a trader is when I cut down the number of setups I was trying to trade. I went from trying to do everything to just trading those 2 OTC setups that I was comfortable with. And I poured all of my focus and all of my attention into those. I stopped trying to follow guru alerts. I stopped, doing random earnings winning plays. I was just looking at the OTCs and just looking at the new promotions and at the breakouts. And that focus on what I knew that I was comfortable with, what I was good at, that really made a meaningful difference to my accounts because I started to see far more consistent results. That's how I built back to break even. That's how I started to, build up my account a little bit and be profitable. And then once you feel like you've really mastered those and understand those, you can always branch out from there. But when you're first getting started and you're first figuring out who you are as a trader, don't try to do too much. It's okay if you miss, this huge short sale that everybody else is beating their chest about and saying, "Oh yeah, I killed it." If you're not a short seller, you're always going to miss stuff in the market, no matter who you are, no matter what setups you like. You're going to miss things, and that's fine. What you need to do though is you need to figure out where you succeed and just focus there and make sure that those are the ones that you profit on.
All right. And number 4, what have you got there?
Number 4 was don't believe the hype, trade charts and price action only. And that one was, that's also been pretty key to my success because I see, especially now with these listed stocks, I think, everybody kind of knows, okay, OTC stocks are usually garbage. But with listed stocks, the fact that they're on major exchanges, I think everybody kind of gives them a little bit added of a degree of legitimacy. and we'll just assume like, oh, well, this company put out news, so that's got to be great for it. That means it's going to go up. And yeah, maybe it goes up for a little bit, but when that chart momentum turns and it starts coming back down, far too many people just hold and hope and say and still think, oh, well, that news means that it's got to go up, it's got to keep going. And I mean, that really goes for both sides of the play, because also, I mean, that's exactly what I did with the Lake trade. Was I ignored what the chart was telling me. I ignored stock was breaking out. I just was so latched onto my short bias because I thought that the company was garbage. So whether it's a good bias towards the company or a bad bias towards the company, it really doesn't matter. All that matters is what the market is telling you, and that's best deciphered through charts.
Absolutely. No, I completely agree with that one. So, fifth and final, what's that one there?
That's cut losses intelligently. And I kind of specify there, not necessarily quickly. And it's really funny because I did talk about this in Vegas, and this was probably a week before my lake loss happened. And, looking back on it now, I still agree with that to a degree. You should cut losses intelligently. For me, an intelligent loss cut on Lake would have been when it was breaking new all-time highs. That would have been the intelligent move because I would have respected that it was a breakout. Now, what I think I meant more by that with cut losses intelligently, not necessarily quickly, is a lot of people will have preconceived numbers in their mind. Like, I don't want to lose more than 1% per trade, or I don't want to lose more than 3% per trade. And, if their stop loss gets hit, they're out. And what I mean when I say cut losses intelligently is don't base it off of some preconceived number necessarily, whether that's a dollar amount or a percentage figure. I like to base it off of the chart. So basically, if there's a huge support level on a stock that's 5% away from my entry, I don't want to be cutting my loss at 2% when really the chart never broke down and there was no real reason to get out other than I had hit some preconceived number in my head. I want to be trading off of the action and off of the chart in front of me.
Okay, so you can still predetermine where your stop's going to be when you enter a trade, right? So by looking at the chart and the price action previous to where you enter, what you're saying is you can still put your stop loss on as you enter the trade, but don't have like a hard and fast rule like it's going to be this far behind my entry.
Right, exactly. I mean, this is how I think about risk. So let's say you've got a stock that has a huge support level at $1 per share. If I enter that stock at $1.10, that means I'm risking 10 cents a share or 10%. Now that's 10% is a pretty big percentage loss to take. So I would figure out my risk based off of how much size am I going to take. So if I'm taking that $1.10 entry, risking off of $1, and that's 10%, I probably don't want to be playing large size. I probably don't want to be all in. I'd probably play smaller size because I'm using a wider stop loss. But if I get in at $1.03 and I'm only risking 3 cents a share or 3%, then maybe I'm willing to size up a little bit more. So I think in terms of, I guess, dollar risk and what it means to my account. But I would use the same stop in both situations. It's just a question of how much would I size in based off of how far away from that level am I.
Exactly, yeah. No, that makes sense. So, all right, Tim, well, this sort of brings us close to the end of the interview, and it's been really good. So thanks so much for coming on.
Absolutely, yeah.
But let's take it to the closing bells. So just a few questions that we asked all the guests. And the first one would be, what's the best piece of advice you've ever received?
I'm not sure it was directed personally at me, but the best I've seen is from Nate or Investors Live, and his little phrase, trade the ticker, not the company. And that goes along with what I was talking about earlier, where I want my trading decisions to be based off of what the chart is telling me, what the price action is telling me, not some kind of preconceived notions about how good or bad the company is based off of news or fundamentals or whatever other factors.
Yeah, cool. I like that. I really like that one. So, what is the number one trading resource you couldn't live without today?
I think it would have to be market scanners. For me right now, I'm using stocks to trade. but I've also used Equity Feed or Interactive Brokers, the scanner on their platform. But I think a market scanner is really key to what I do now, because that's just how I find my plays. I will punch in, my criteria of what I'm looking for. Usually it's just top percent gainers that have certain volume requirements. I look for the ones that have traded, I'd say at least probably $5 million on the day for listed stocks. And half of these I'd probably never even know about if I wasn't using my scanner at the end of the day and running through the list of these plays and then pulling up charts based off of what it finds.
Yeah, cool. So that's how you create your watch list for the following day, right?
Mm-hmm. Yeah, it's almost entirely scanner based.
Awesome. So I know you're not a huge reader on books and that sort of thing, but is there any one book you believe is a must read for any trader just starting out?
No, there really isn't, because I really haven't read many trading books. Actually, I don't think I've really read any. So, one thing I do want to check out this year, as I continue trying to improve a little bit, I want to get into some trading psychology books. So I think that's the most useful area if you're going to read books on trading. Is don't worry so much about a book that's trying to give you the holy grail of all trading systems, but maybe worry more about the books that will help you be psychologically right while you trade, and maybe learn to control those emotions better, stuff that is a little more practical and useful.
Okay, cool. That's probably a really good answer, better than a specific book. So yeah, thank you for that. Knowing everything you do now, is there anything you would have done differently come day one again?
Oh, definitely. Yeah. I would have absolutely dove in without trying to follow alerts. That's the first thing. I would have never wasted my time trying to follow trade alerts or mimic people's trades. I would have focused a lot more just on what I was doing and tried to, I think that's how you build confidence as a trader, is you make your own trades, you make your own mistakes. Yeah, you're going to take losses along the way, but then you learn from those losses. So I wish I had kind of gotten started with that a little bit sooner, with the, being a little bit more self-reflective and saying, okay, well, I just lost on this setup. Why did I lose? What did I do wrong? Or what did I do right? If I was just cutting a loss on a setup that just didn't work. But the other thing is I wish I had been a lot more mindful about volume and liquidity, because one of my earliest losses that I can remember, like my first big loss I took, was because I was trying to trade a very thinly traded stock with the same rules that I had been applying to some stocks that traded with more volume. And I didn't really understand the difference, and I took a huge loss as a result, because the bottom dropped out of this one so much quicker than it did on any of the others, because there just wasn't the volume there to support it.
Okay, awesome points. That's really good. So that brings us to the end of the interview, Tim. So thanks so much for coming on.
Absolutely, yeah.
It's been awesome. So before we wrap things up, do you just want to share with the listeners where they can find out more about you and connect?
Oh, sure, yeah. Well, my blog that we mentioned earlier is tradetheticker.blogspot.com, and I've put a lot of posts on there that I try to gear towards beginners and helping people along and get started. And then also I have a Twitter. I believe it's at CroyRunner89. I believe I have the 89 in there. Yeah, I do. At CroyRunner89 is my Twitter. So I'm on there. I'm somewhat active here and there. But yeah, those are the best two places to look for me.
Okay, awesome. And all the links and everything mentioned in the show will be on the show notes at chatwithtraders.com. So definitely make sure you check out Tim's blog. There's some awesome posts on there, and plenty to learn. So thanks a lot, Tim, and we'll speak soon.
All right, sounds good. Thank you.
Okay, now that brings us to the end of this week's episode. So I hope you guys found some value inside of that interview. Tim's a very switched on guy, as you can tell, and doing a great job, doing a very, very great job. So just a quick reminder, the Lucha Method giveaway is wrapping up this weekend on Sunday at 7 p.m. EST. So guys, make sure you're in that. It's a massive prize. Just go to chatwithtraders.com/giveaway. All the details are there. All you got to do is just answer a very, very simple multi-choice question and put in your email address, and that's it. You're in. If you want to increase your chances of winning, You'll be given a unique URL. Take that URL and just sort of share it around. Anyone who enters through that URL, you score another 10 entries. So very easy to dramatically increase your chances of winning too. All right, well, I look forward to speaking with some of you throughout the week, and new episode coming same time next week.
Chat with Traders is brought to you by Trade the Pool. Did you know that every decade the market reinvents itself? Online brokers opened the doors, mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool, limited risk trading. And now you also have unlimited time to reach the profit target. From now on, your trading risk is capped, and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade larger positions and scale your strategies without risking your own savings. It's time to trade with more capital, making it truly worth your time and effort. Ready to trade the pool? Click the link in the description and join the stock trading revolution today.
Are you ready to get serious about trading? Then join Tasty Trade, Investopedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade all in one platform. Get low commissions, including 0 commissions on stocks, so you can keep more of what you earn. Trade smarter with advanced charting tools, a pre-built strategy selector, risk analysis tools, and more features. Visit tastytrade.com/chat for more information. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
All right, what's going on, team? It's great to have you with me, like always, and I'm really stoked to be sharing this week's interview with a VWAP mastermind. This is also the longest interview I've recorded to date. But if the term VWAP, which stands for Volume Weighted Average Price, is completely foreign to you, then that's okay. You're about to be rapidly brought up to speed. And on the other hand, if you're already somewhat familiar, then I can promise that you will learn a whole lot more and really benefit from this week's guest, Zach Hurwitz. Zach is an independent equities trader, a trading coach, systems developer, consultant to emerging hedge funds. He's also a consultant to prop trading firms, and most of all, a VWAP mastermind. For Zach, VWAP forms the lifeline of his trading, and for good reason. This indicator is heavily relied on by many institutional and algorithmic traders. So over the next 2 hours, that's right, 2 hours, Zach delivers a thought-provoking introduction to VWAP and shares many insights around his trading philosophies, psychology pointers, and what it takes to code a trading system. And take note, Zach is offering a 30-minute one-on-one coaching session at absolutely no cost, exclusively to listeners of Chat with Traders. All you got to do is listen to the full interview for details on how to take him up on this very generous offer. All right, guys, hope you enjoy the interview and we will speak soon. Zach, what's going on, man?
Not much, Aaron. Thanks so much for having me on.
No, I really appreciate you taking the time to come on. I mean, I know it's Sunday night where you are right now, isn't it?
Well, if you're a trader, you definitely respect that you don't work typical hours, and that's something my friends, my girlfriend can attest to. It's Sunday nights, middle of the night, early morning. The only time I tell people I'm busy is 10 a.m. to 12 noon Eastern, because that's, prime time trading. And that's the only time I don't take calls or appointments. Pretty much every other time I'm on the clock.
Nice. So anyway, it's great to have you on, and I've really been looking forward to this one. So, you were saying beforehand that you're going to try and not get too carried away with your answers, but I know firsthand how deep you like to go on certain topics. So seriously, and I'm speaking on behalf of the listeners here, so we're hungry for good, solid knowledge, and I know you've got a lot to deliver, so don't hold back.
I was really hoping to just wrap up my answers as quickly as possible and give you just a few tasty nuggets and then get out of here. No, I'm kidding.
Just tease us.
Yeah, exactly. Right. No, this is not internet marketing. This is, I totally understand. And I'm eager for the exposure and to be talking to hungry traders. I like it when guys are in that intermediate, developing stage. And that's what attracted me to talking to you early when Pete and Lucci and the guys said, we've got the guy for you to talk to. He's a self-starter, not to, trumpet sing your praises, so to speak. But seriously, man, you've impressed the heck out of us too. So it's a good pairing.
I appreciate it, man. Thank you. So here's what I'm thinking. So let's go right into your journey. We'll cover your early experiences, things you've struggled with early on. And
yeah, plenty, yeah.
And then from there, we'll roll into your actual trading methodology and how you actually tackle the markets, which I know will involve a lot of discussion about VWAP and systematic trading. So I'm really looking forward to that.
Very cool.
And I know you battled with your trading psychology early on, so I'm going to bring this up as well because I think you've got some really good points to share on that topic.
I'm going to mistakenly refer to this proverb, but it's something like, pay attention or, take heed of others' misfortune so you may not have to learn the same lesson through experience. You can hear about it and kind of empathize, and happy to share that, this leads right into my trading journey. I graduated from Tufts University in 2008. I always tell people that's the best and maybe worst time to start trading. I think 2007 would have been the worst because you actually would have been trained just a tidbit on what the markets could be like when they're easy, and I think lulled into complacency. So I'm thankful that I started during a very volatile time. On the downside, it kind of got me prepared for making or losing $5,000 a day when the markets have obviously in the last 6 years or so evened out a bit, let's say. But 2008, what a time to graduate. Not only a difficult job market, I think it represented tremendous financial markets, obviously, opportunity. I remember I was writing a paper, I think this must have been March of 2008, actually, come to think of it, writing a paper about systemic risk to the banking system. This is right when I was transitioning from being an English major to an economics major. So for all of you aspiring traders out there who have a non-traditional major at university right now, it's all good, guys. You just got to transition at the last second. I'm kidding. But 2008 was, it was a real opportunity. I was speaking about the paper I was writing at the time, Systemic Banking Crises, and it was happening. It was unfolding right in front of me. I realized I was onto something, and I needed to participate in that instead of being an English teacher. So perhaps there's in an alternate universe, I've been focused on the written word instead of the technical, the chart basis. But I'm happy with this one. And so, I'm fast forwarding a little bit, kind of zooming through those first, I'd say 2 years, 2008, 2009, and a little early 2010. I feel like everyone in the markets was kind of lost. The specter of HFT was kind of on the rise. People perceived algorithms impacting the markets, but they couldn't really put their finger on it. I'm not much of a scientist, so I'm struggling with a proper analogy here, but it's kind of like dark matter. We all know it exists, but like we regular people, we non-scientists, have a really hard time conceptualizing what it is that's impacting the space around us. And so I think traders were going through a similar sort of awakening to, I'm trying to trade by hand. I know there are guys who are using the technology better than I am. How can I possibly get an edge if I'm not a quantitative finance PhD? What if I'm not Peter Zhang? And of course, I say that, Pete, lovingly. Obviously, we just listened to your last interview with him, by the way, which was great. And, everyone on the Lucci team is kind of a good example of the same thing. In the last 10 years, they've recognized that by putting in not only the screen time, but the code time, they can gain an edge as an independent trader, as a retail guy, advancing through to the advanced tiers, let's say, of retail into professional trading. So,
yeah. So just going back there, what actually pushed you into doing a major in economics?
I think it was the fact that everything on the news sort of happened around the economic space. No, it was a recognition that the people who were going and applying for, and I can think back to, I think it was like September of 2007. I had a buddy who was applying at Goldman. Of course, he got hired. Fast forward a year, he's out on the street. He's frustrated because not only is he, and of course he had family money. That's the type of guy who ends up at Goldman. But he was frustrated that he had put all his eggs in one basket. And while I liked the topic, the subject matter, I realized I liked the independence and the potential for trading that it offers. Not many other jobs can you put in extra time and really fairly get compensated. And of course, the downside, I mean, every trader knows this. This is one of the few jobs where you're really not paid hourly. You can go to work for 18 hours and lose money. And that, in a sense, excited me. It forced kind of a meritocratic, I think is the word, appreciation. I liked that what I put in, typically I got on the output side. So while other, my friends, and I do kind of regret this, so my Tufts friends, if you're listening, sorry, boys. I regret that I didn't party harder and have a more fun time the last 6 months, let's say, that I was at college. But I was locked into what the markets were doing. I mean, that was an exhilarating time. I know SKF, the 2X inverse financials, was just coming out at around that time. There was so much potential, so much inefficiency. I mean, this is where a guy like Peter Zhang would be great to speak about. The opportunity that was being carved out for people who understood the products and could trade them. Similarly, my kind of options education began at around the same time. I was taking a financial markets course, and the instructor, as many the instructors in these kind of stories do, he took me aside. He said, "Hey, look, you gotta stop asking about complex options trading, methods. Like none of these kids are going to be options traders. This is a financial markets course. This isn't a how to trade for a living course. Like, I'm happy to talk to you about it, but if you're trading now, the best thing you could do is put in the time trading. Seriously, go do it. Even if it's with $4,000 or something like that." And followed his advice. And I don't want to put it off on him like it's his advice. Something I'm very happy with is that I started with the absolute minimum. So I got to get my feet wet without, risking everything that I had accrued up until that point, because that money was gone in a flash. It was like 6 weeks. And I exploded the account, didn't understand what was happening. And that was, fortunately for me, the only thing it took. It was like a small car accident to make you realize you got to be a better driver. I'm very thankful I didn't start with my entire life savings. It was 2008. Money was moving quickly. Like I said, traders had no idea what the inverse or any leveraged ETF could do or should do or was designed to do. I think many traders nowadays don't actually still know what FAS or FAS are even pegged to, let alone how the daily leverage is calculated. So it was kind of an appreciation for having an academic edge gave me, a potential profitability edge in the markets, as well as I could put in the time. And it's something that, we didn't talk too much about. I was an English major before I was an economics major. Something about the qualitative, almost like visceral connection I had with chart patterns, that I understood that they weren't just pictures, but they were stories, that they were, how do I say this, like indicators of characteristics. Sort of like if you put a chart to how a party went. I know that sounds kind of ridiculous, but you really could. You could actually draw out, here's where, so-and-so got in a fight with so-and-so, and it kind of got awkward for a few minutes. And then by the end of the night, everybody was having a good time. So-and-so showed up. You're putting like a actual visual kind of basis for how to understand or synergize and synthesize, I think is the word I'm looking for, synthesize the world around us. And I realized that with markets, they were teaching us how to put maybe a name to something that we'd all experienced in other parts of our life. Not trying to make this visceral chart pattern connection too strongly, but rather it just spoke to me. Something about it connected with me that you could consolidate and display information on the chart in a way that would take thousands of words or even thousands of lines of code. But once the human mind picked up on that pattern, it kind of resonated very strongly with us. I've seen this framework before. I know how to operate in this framework. And whether it's quantitative or qualitative, that excites me. And it excites me to this day. I always tell people, because those who know me know that I'm really bad at puzzles and like Rubik's Cubes. It's like a Rubik's Cube that I will never solve. And I'm okay with that, versus a real Rubik's Cube where I hate those damn things. Anyway.
Yeah, so you would say that your economics degree didn't really contribute too much to you sort of learning how to trade. I mean, that's sort of what I've heard from other guests as well, asking they've said the same sort of thing.
I'll give a shout out. The two classes that helped me the most were not my financial markets classes. They were AP English in high school and drama. Of all of the classes that I took, those two have helped me more in trading. I tell people English because it taught me to synthesize rapidly, disparate ideas, trying to relate authors that were, existing in totally different time frames and never met and never thought about each other's work. But, what do they say about each other in a sense? I liked doing that with financial markets. They're obviously, whether it's just broadly, equities, options, any futures market or currency market, or stock to stock. I just, something about that, is triggered in me when I found the financial markets. It was just an even more straightforward way of doing it instead of having to read 12 novels to be able to discuss competently about the authors. And then secondly, drama, because it taught me how to read myself and how to read other people, as well as to learn signaling. So signaling is, I always think of like a stage whisper. If you've ever gone to a play and somebody has to pretend they're whispering, they whisper like this. It's really loud, but you can tell they're trying to seem like they're whispering, right? They're signaling to the audience, hey, I'm trying to let you in on the fact that I'm sneakily telling this to the other character on stage, but I'm also trying to say it loud enough so that you hear me. And that's just, one random example, but how markets will signal to ourselves, to us, the traders, the retail traders, how we can pick up on future market action from just a few key clues that also, has stuck with me. And it's something that I think when I speak about those early years, 2008, 2009, first part of 2010, I didn't even understand what it was that I had learned, in high school, in college, that could help me in the markets. I thought that everything that was out there, forums, YouTube videos, friends of friends, other quote unquote traders, meaning guys with an E-Trade account, right? That's a trader at our definition level of like when you're a beginner, it's 2008. It's a bleak universe out there. And Aaron, when you and I first met, I think I told you, God, if you had been around 10 years ago and I could have listened to this podcast when I was learning, this is everything that I wish I had had, because I was desperate to find sophisticated traders who would understand and appreciate that I was trying to put in the time, but I had limited, skill at that moment to contribute anything to them. They'd say, what trades are you watching? How are you doing charting? And I'm kind of like, well, here's some moving averages that are a good benchmark. And they say, yeah. But you're looking at it like checkers, kid. You need to be playing chess. They're played on the same board, but the latter is at a much higher level of sophistication. It made me realize that everything that we were taught was all to make us, this is a literal quote from, something I'd written for St. Lucia the other day, but it comes back to mind. It was all to make us feel better than it could ever make us trade. That a lot of the technical tools and the ways that this is taught, it's by tradition, not by merit alone. You know what I mean? Like it's not Darwinian. The things that we learn aren't taught to us because they are good. They are taught to us sort of like you give a kid, you give a little toddler baby food. You give them something easy and that they can handle. You don't give them, cognac encrusted filet mignon with like a nice side of it. Like they wouldn't get it, let alone could they even chew through it. When you're a beginning trader, when you're kind of an infant mentality, let's say, you need something that is straightforward enough you can wrap your brain around. Moving averages, pivots, basic support and resistance. These are the things that I totally understand and have an appreciation for why they're taught. They're a good stepping stool into more complicated analysis, and they definitely give you the framework of, I can understand that the concept of support and resistance will play out throughout my entire career, right? Whether I'm a beginning or sophisticated trader, something about that concept resonates with me, but how I look at it may be totally different when I'm a beginner, an intermediate, or advanced trader. So around that same time, around 2010, I had the good fortune of, and I'll tell you this story in a second, but I was introduced to the best trader I know, who is a quantitative trader and fund manager. His name is David. I have to keep him somewhat anonymous because he is an asset manager, but close personal friend. And the reason I say, serendipitously introduced to, were it not for random chance, I don't know if I ever would have met someone of this caliber. A friend of mine was actually in a Starbucks watching, drinking his drink, watching people around him. He saw another guy trading on his laptop. And he went over to him. He said, "Hey, my buddy Zach trades. You guys are a little side story. We're here in Ohio. So for those of you non-US listeners, we're in the middle of the country, in a fairly boring place that's not a major city, let's say. So I always joke there are very few traders nearby me. So when my colleague saw David trading in the Starbucks, he said, you gotta talk to my buddy Zach. You guys look like you're doing the same thing. You guys should get in touch." So we shot a few emails back, ended up grabbing coffee, started talking more. He said, "Hey, come up to the offices and work with me for a day. We'll see how it goes." Here we are 5 years later. And he has truly inspired me. I shouldn't give him too much credit. Many people have inspired me to approach systematic trading, but certainly David foremost amongst them. And it was, I think back to something that, believe it or not, a therapist said to me once. He said, "Trust in the process." And I think what he was saying is, you're a young guy. You don't know how the world is going to work out or how things are going to fall into place. And I always point out to him, because he was in his 60s, I said, well, of course you would say something like that. He was kind of my trading coach at the time, right? Of course you'd say that, though. You're in your 60s. You've seen the process. Us young guys, we don't trust the process at all because we have no evidence, to found that belief. And seeing Dave, a guy in his 40s, 20-year veteran in the markets who had been a hand trader and metamorphosed to this systematic trader that we all kind of envision and idealize today. What I mean by that is the guy who has great command of the technology in front of him. You and I, Aaron, we were talking about this, I think, last night. We don't dream of being inundated with information. We dream of having command over all the information currently at our disposal. So I think that we recognize all sorts of things about the universe in front of us that we can somewhat discretionarily, ascertain at a point in time. But we know, sort of like trying to, if you're, when you're young, you're trying to catch fireflies late at night. I always think about this. No matter how many you catch, you'll look back at the forest and realize how many more fireflies are out there. We as traders understand that there is, in my world, I always tell people there's about 18,000 potential equities, and that's the universe of trading. I know I'm not going to get more than, 100 trades in a day, and that's being exceptionally aggressive. So 100 out of 18,000, I'm sure I'm missing some. And that's where my own journey of, trying to force my way through the coding languages that I've slowly acquired tidbits of along the way. It has not been an easy journey, but it's something I think we all need to do. And whether it's soft coding or hard coding, so the kind of delineation there being soft coding is where you write in English, here's the logic that I'm looking for. And Aaron, you and I have definitely talked about this. You and I and Pete have talked about this a lot. Building, just broad systematic implementation wherever possible. Where can I turn my brain off and just, plug and chug, as mathematicians would say, where you've got a formula and you know what to put in and you just put it in and let the formula tell you what the formula is going to tell you. Similarly, wherever you can scan, sort, systematize as a retail trader, that's going to be, immensely helpful. Then you get to hard coding where you're operating in Python, C#, C++, one of the big boy languages, let's call it. that's where you're dealing with the stuff that Haim and Peter and guys like Ezra and Brian, also part of the Lucci team, are dealing with. I speak with reverence about them because I wouldn't put myself among them just yet. But the benefit of being in this kind of intermediary standpoint where I have a foot in both the trading and the coding realm is I'm not so far removed to where I've forgotten what it's like to not know code. I have a great appreciation for what it's going to take of the developing trader to grow and evolve into somebody who can systematically employ, let's just say, a scan, kind of like what we're talking about, where you're just looking broadly for things that meet your criteria versus the hard coding approach of, all right, here's my suite of algorithms. How am I going to deploy them? I always tell people, if you're using the word deploy, then you are probably at an advanced level. You know what I mean? Like when you're talking about it like a drone strike or some massive, architected move. But when you're just looking to do a scan or, make the technology work better for you, you think it's crazy. We have these billion floating point calculation capable, per second computers in front of us, and we use them to display the new highs or new lows or what news is ranking. I mean, that just seems counterintuitive that we couldn't get more out of them. And so 2010, 2011, 2012 was certainly my journey of appreciation of, how am I going to make that transition? And then the most recent 2 years, I would say, have been the actual, all right, let me start on the code. So as you hinted at early in the podcast, detailed answers from Zach Hurwitz live tonight on Chat with Traders. Sorry about that, man.
No, that's great. That's great. That's exactly what we want. So I really want to get into that coding and systematic trading a little bit further into the interview, but just taking it a step back, was there anything in particular that still sticks with you today that you picked up from David when he was sort of your trading coach earlier on?
Sure. I'll give you something that comes to mind and this kind of relates to what I was saying about English and acting as far as being helpful with trading. Learning to create simple stories for yourself about how you should operate as a trader. So David told me one where, and I think he got this from another old wise trader. He said, some days you have to be the mouse. You have to be detail focused. You have to live in the here and now. Some days you have to be the eagle. You must soar over everything and be visionary. And other days you must be the donkey. Shut the fuck up and do some work. You know what I mean? Like where it's really about just carrying the load, being your own beast of burden. And realizing that I'd never put a framework on it like that, but I was struggling to organize myself that same way. If I had career aspirations, but I also wanted to get, my trading system off the ground, but I got to get out of this Walter Energy position. Anyone who knows me knows that that's like my least favorite stock. But it's like at varying levels from eagle, donkey down to mouse, we must not only quantify that, but then start operating in that. So we must say to ourselves, like, I'm going to be the mouse today. This is what I really must do to get ahead on the other projects. I got to get the small things off my plate. I got to work on the details. Versus other days where you have to say, I'm going to go sit in a park and stare at the sky and dream about what, I want this business to be for me. I'm again making this up, but maybe you're a painter or maybe you're a kayaker or whatever you may be. Do something that for you allows you to kind of dive into that dreamer mentality. I think we as traders don't get to do that very often, and for good reason. I mean, we all definitely see that, make $1 million with just a $7,000 account working from home for good, or, something. We all can dream of that, but I'm talking about what is a dream that we can make tangible instead of a dream that, kind of like those trading tools from earlier in the conversation, they were designed to make us feel better than they ever could actually make us trade. I think once I awoke, or awakened, I think is the right word, to that, that was kind of the epiphany too, that everything we were taught was taught to us for a reason that is separate from the reason we think. And we're going to get that placebo effect of, hey, I'm well equipped to go handle these modern, fast moving markets. I've got my technical tools, my RSI, my moving average. And not to speak pejoratively about those in particular. I just mean the first things you learn in any subject probably aren't the best things to learn in that subject. You know what I mean? I'm thinking of scuba diving or skydiving, any other hobby or activity. It's probably the same thing. You are taught something early on because you are a beginner. And most traders don't want to feel that they are beginners in anything. I always joke that if you ask 100 traders, where are you on the spectrum of traders? I feel like 99 of them would swear they're better than that one other guy who didn't pipe up and say anything. But that one guy who doesn't, he says, I don't know where I am. I'm probably in the middle somewhere. I don't know. He's probably the best trader because he's become humbled, by the awareness of I'm just a person in the markets. I'm not the man. I'm not Superman. From my post on Lucci the other week, we're not Chuck Norris of the markets, kicking ass and taking names. I think it's an outdated way of looking at the markets in my mind. I really think about it that way. It's the 80s and 90s and maybe even early 2000s kind of heyday of I'm going to make a quick grand before lunch and then maybe 2 or 3 after, and who cares? Do some cocaine, fly to Spain for the weekend, whatever. That's just not the business anymore. Listen, maybe the financial crisis flushed that all out. Maybe I came into the business a couple years too late, but I'm kind of getting at that's still that when you tell a non-trader that you're a day trader, that's I think what they picture. And I don't think they realize that it's 20 hours a day of quiet, lonely struggle. You know what I mean? That's what I would tell people trading is at first. And it's hard. Another thing, Aaron, you and I were talking about last night, and I'm sorry if I'm jumping around a lot here, but the kind of poisonous self-talk, the terrible shit we say to ourselves in those dark moments. I always think it's like, 11:30 a.m. The morning session's just ending. You've screwed up. You're down $200. You don't know what you're doing here. You don't feel like you have a good read on the markets. You thought it was going up, then it went down. You thought it was going down, then it went sideways. You thought it was going sideways, then the markets just closed. You have no good read on the markets. And you say to yourself, of course I screwed this up. This is just what I do. Look at how I've screwed other things up. I didn't make it to, varsity soccer, and I did blah, blah, blah. And you're just like, you start compounding and commingling and falsely correlating all sorts of things. You will blame yourself for friendship issues, relationship issues, health issues. Oh, man. And it's only because we're struggling in a, let's call it non-rational or kind of, I don't want to say irrational because that implies that it's total nonsense, but just not quite the rationality we can ascribe to it. We're having a hard time putting some logic to this environment is what I'm trying to say. And when we do struggle, we try and correlate whatever we can to make sense of it. And when no one else, we can blame the market makers, we can blame the other participants, we can blame the news, I miss blaming Bernanke. That was easy because he was so easily hated. We just push the blame off on ourselves. I think that's the easiest approach, and it's unfair, and it obviously has trading impact on us. But when you're a trader, you are your own boss. You are your own employee, and you're the janitor, right? You're everything about that operation. And so you're going to be the guy frothing at the mouth, screaming, how could you possibly not put a stop in? And you'll also be the guy cowering in fear, worried you're going to get fired because you didn't put a stop in. And experiencing both of those emotions simultaneously, I think really confuses a lot of people. And then that comes back to where the signaling from drama comes in. Where once I realize, there are certain times when I can tell I'm being ridiculous, and learning to identify that and tell myself, hey, man, you didn't break up with your girlfriend because you're a bad trader. You broke up with her because it wasn't a good relationship. Separating those two things, while it may seem ridiculous, right? What does love have to do with the markets? Their common point is that, you're where the rubber meets the road. In both of those, right? You're the kind of common point between them, and your brain will correlate whatever it can, even when it's not fair, and even when it's rude and awful. We are our own worst enemies, and I think every trader has certainly experienced that, where they've, maybe being distracted in life on another front. Maybe it's their current day job. I know a lot of traders who are part-time traders who experience this. They say, how can I learn how to be a trader if I have to devote full time, 40 hours a week to my profession? And I say, well, I think that you have to ask yourself that. Is this something that you can afford to give up the time for? They just hope that it will kind of osmose into them over the years. And I'd say that it will for most people, but there's going to be that also silent struggle of, what am I even learning this for? and most people, kind of going back to trusting the process, most people don't have a clear example of where trusting the process would benefit them. So why should anyone buy into this belief or mentality? I don't blame the disillusionment of many traders on them, is what I'm trying to say.
Are you ready to get serious about trading? Then join Tasty Trade, Investorpedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including 0 commission on stocks, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, risk analysis tools, and more features to help you trade smarter. See equities and derivatives with high trading volumes, dividends, upcoming earnings reports, and more with their pre-built watch lists. Or create a custom watch list to keep an eye on the companies and sectors that matter to you. Manage your positions with speed and precision using active trader mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Visit tastytrade.com/chat for more info. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC. Have you ever watched a stock explode and thought, if only I had the capital? Or sat on the sidelines because your account balance felt too small to matter? Good news, with Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, even the newest IPOs, and short anything you like with zero locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. And now you can also have unlimited time to reach the profit target. It's a game changer. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you even pay a cent. Click the link in the show notes to start trading with Trade the Pool's capital.
Yeah, so would you say that the psychology side of trading was probably the biggest part you struggled with early on?
I always think mechanics, like risk management, position sizing, what an indicator is, how to code it, any of this stuff, it's all very tangible. It's the amorphous stuff that is impossible, right? That's where the Rubik's Cube approach comes back in, and kind of the challenge I think many of us are seeking, right? The fulfillment that we get from trading, believe it or not, is in the frustration. And that's because we know that it's forcing us along the path of life as much as it's forcing us along the path of trading. And so, yes, simple answer to your question. Hell yeah. I mean, psychology is what separates, I think, all of us. I'm going to steal a Dan Shapiro quote. So he's another guy who's working with Lucci's group. And he could certainly speak more about it. But he was talking about working at a firm where in 1 month, there's 2 guys sitting next to each other. They're using the same software and the same system. One guy makes $1.5 million in December, and the guy next to him loses money. What's the difference? And it has to be psychology. I mean, when you look at it, they've got the same interface with the markets. They're sitting literally, they're as co-located as you can get relative to each other, right? There's nothing to separate them other than the way they process the information at their disposal. And so what we can aspire to is becoming more honest and self-aware. That's step one. And then secondly is like the actual mastery or command or control. I think everybody comes to me as a trading coach looking for, how do I get myself, reined in, right? I know I'm a good trader, but I just seem to keep taking these big losses. And I would say, well, then how good of a trader are you? And they say, well, why are you doing this, man? You should be my cheerleader. And I say, no, I should be your coach, right? I mean, we joked about this the other day, right? I don't look very good in a cheerleading outfit anyway. And, being gruff and screaming at you is probably a little more profitable than me just telling you that you're going to make it. You're going to make it. We've got friends and colleagues and spouses, right, for that. I'm here to make you more money, and I'm here to push you along that path. I think with the trading psychology, it's also something that I don't blame people for being bad at. How often are we tasked with being honest with ourselves? I think in many different ways and at many different kind of philosophical levels, we are in charge of deceiving ourselves. Whether it's thinking that I don't want to, break this out to like politics or like religion or something, but I guess I'm broadly getting at, we are all trying to just feel better, not be better in our lives. And I mean that at every single, level and scale and scope. It's about time that we started looking in the mirror and being honest about what it's going to take to advance ourselves, whether that's financially or just, I think, professionally, meaning feeling more fulfilled with the job that we have. That's something, again, anybody who knows me knows that those early years were such a struggle because I had, the friends who didn't get bounced out of Goldman, let's say, but the friends who still had exciting, high-profile careers, I really admired them and I looked up to them. And I wasn't receiving the same kind of fulfillment because I was in a lonely, independent profession where I always think about, like, one of my worst years, I made $35,000 or $40,000. And I have friends who are making 2 or 3 times that. And when you think about it, you're trading $100,000, you make 40%. That's insane percentage-wise. But, like, really? To walk away with only, a kind of medium income in my mind, that's not really what I went to a top 25 school for. That's not what I'm spending 20 hours a day, 6 days a week working on. It's ridiculous. I'm sacrificing my time, my health, my psychological well-being. It was really pretty brutal there. And, I always think back to, like, I don't want to start speaking about my holy grail, volume weighted average price, VWAP, which I know we're going to get to in a little bit, but I really do. I speak about it with reverence because it's something I truly revere. Had I not found something that resonated with me, that made sense to me, I would have given up this business in 2011. You know what I mean? I don't know if I would have made it another year because I was so similarly disillusioned. I didn't believe that the things that I could pay for education. I could continue to try and scrape tidbits here or there. I could try and reach out to people on Skype. And it was a few other early mentors who recognized that I was putting in the time and I was worth kind of giving a shot to. Not so much that I wish I had I was Stevie Cohen's intern or something like that. No, I've never worked with anyone gigantic, a titan of industry like that. But even people who said, "Hey, come to Indianapolis and speak, at the seminar. We need a speaker this month, and you seem like you know your stuff. We'd love to have you." And even just standing in a room with 100 people listening intently to what I was talking about, it made me realize that I'm onto something. This isn't just me convincing myself to feel better. This is other people who are sharp and scrutinizing and evaluating this and saying, "Yo, you're right. I don't care that you're 24 or 25 years old. You look like my grandson, but I want to hear more about this." It intuitively, it mathematically, and it anecdotally, kind of evidence on the charts, day in, day out, resonated with me, and I've never looked back. I've never found anything else that has so strongly struck me.
Yeah, so let's get on to that VWAP topic now. So how did you first discover VWAP? Like, did you accidentally stumble across it, or was this something that actually filled a void and something that you were actually looking for?
So it's tough to think back that many years. God, I sound so old. I'm 28 for the record, almost 29. Aaron, you're what, 24?
24, yeah.
24, I want to say. So it's so funny. We're talking about getting old, like a couple 20-year-olds on a podcast talking about getting old. Kids these days. So I think it was a combination of Zero Hedge. Struggling to remember this guy's name. Give me a second. Brian Shannon of Alpha Trends. And also on the Thinkorswim basic platform, one of their beginner studies that they just had included in the platform was volume weighted average price. And so a combination of hearing a few other people talk about it, learning more about the metric on my own, as well as realizing I could put it on my own charts. I could explore it myself. That's the kind of hands-on thing that I think people need. It's why I always caution people whenever there's an opportunity to, hey, I could just follow this guy. I mean, he's got some great picks. It's like, yeah, but you're not really learning anything. And like the odds of you becoming a better trader from seeing good trades, but not being instructed as to how to find the good trades, I mean, it's just very low probability. So it was a mix of all three. Like I said, a little bit of, it was popularized because I think people were talking about Nanex and HFT and kind of like really granular view into market microstructure at the time. And so there was discussion of how often something would be quoted versus traded, let's say. And at the time, they would use VWAP as a benchmark. Now, VWAP has been around like almost as long as I've been on this earth. I think it's been around since the 80s or 90s at absolute latest. And it's an institutional way of benchmarking how a trade is filled. So for all of you who aren't familiar with VWAP, I'll give like the 30-second, and then I'll muzzle myself, primer on VWAP here, just so people can get up to speed. We've all probably seen a simple moving average before. So this is just taking some periodic assessment of price, where 20 bars, we look 20 bars in the past, add up all the prices and divide by 20. We arrive at a simple average price. We could also do an exponential average, meaning we apply exponentially more weight in that average calculation to more recent price action. So we're kind of trying to make it more responsive to more recent activity versus the longer dated, the older activity. So it's kind of like a Goldilocks. I don't know if you've heard the Goldilocks story. This is too hot. This is too cold. Well, this porridge is just right. Similarly, VWAP was kind of the moving average that was just right. It was dynamic when it needed to be, not responsive when it should be not responsive. And that simply comes down to how much volume is being traded for a given candle as a function of the total cumulative volume for the entire day. So another way to think about this is, we've probably experienced this with our grades before, Aaron, you and I. When you're taking an important class, it factors into your weighted grade point average very highly, versus when you're taking an elective class, as they're called here in the United States, kind of a peripheral class. Maybe drama might be considered this. It would only be weighted half of a credit into your ultimate calculation. This is applying more significance to more significant, accordingly, parts of your grade point average. So we've all experienced this math in our daily lives, but we've never really thought, hey, I guess that makes more sense. When there's more shares traded, that's a more important candle than when there were 300 shares traded, during lunchtime. And that really strongly resonated. I know that's the word I'm using the most during this podcast, resonate. But it really did. It struck a chord in me that I've seen large trades happen. I can very easily hypothesize why those might be more important than the tiny little 300 share trades in the after hours or something. I wanted my tools to reflect that same intuitive thesis. I wanted to understand not just what some periodic measure of the average price. This is a joke, Aaron, you and I've made many times back and forth to each other. You don't periodically ask any other question in your life. You don't ask your spouse, "Hi, honey, how have you been for the last 20 hours?" We're looking for like a kind of thematic question, like, how have you been since I last saw you? Or how was that trip? Or you know what I mean? We're asking thematic questions, cumulative questions. And so, trying to summarize all this, again, this is way more than 30 seconds. Forgive me. We're trying to put math around the trading experience. We're trying to build some sort of simple model that, and it's very hard to do. Anyone who's done systematic trading knows this. You can't really build one model to fit all market types. But by letting the market, as it goes on, determine the model, there's some benefit to kind of saying to the market, "Hey, you're smarter than I am, right? I'm just a guy trying to fit, some curve for understanding a true average price about the market. Could you tell me, Mr. Market, how I should set up this model?" And the market says, "Oh, sure, just go ahead and follow my volume as a function of the current volume, the current candle's volume versus the total cumulative." I mean, if only it were that easy. But I'm kind of saying that it is. The market many times will tell you how we should interpret or intuit the way it's acting. And that's a very counterintuitive way of looking at it. I mean, typically we're used to, here's an indicator. It lags price by a few bars. So therefore, I should, expect to always be a few minutes behind the market. I've never seen anything where the market reacts to this indicator as much as this indicator reacts to the market. And so that ties back in with kind of history of VWAP. It was built for large traders to benchmark their execution quality. Did the broker that I gave this order to wait until the end of the day and then buy at the very highs? You know, did he kind of screw me? Or did he use his investment acumen and his connections to get me a good price? Is he filling me at the true average price? Let's think about it that way. I mean, it's kind of a misnomer, but an easy way of thinking about VWAP. It's the more accurate, the more honest average price for the day. So it's neat that we finally got the tools to answer questions that we've always had, but never had the tools to answer. You know, when traders ask, how has this stock traded since that news came out at noon or whatever time in the middle of the day? We're not going to set up a periodic moving average that is X number of bars long, depending on how far away we are from that point in time, because that's impossible. We'd have to start it at 1 bar, and then the next bar, you know, a minute later, we'd have to set it to 2 bars moving average. Next bar, 3 bars. We constantly have to go back and keep changing it. That is unrealistic as far as what we're going to do in just a pure workflow perspective. I mean, that's just annoying to have to go in and edit your technical indicators all the time. But that question remains: how has this stock traded since some important event? Or how has this stock traded for the day? Who cares about 20 periods or 50 periods or 200 periods? Those are arbitrary benchmarks taught to you when you're a beginner because, like baby food, it's what you can handle at that time. And if you're listening to this podcast, I mean it, you are not a baby food consumer. You are at the very least an intermediate trader. And I mean that because if you're putting in the time, if you're spending an hour to listen to traders talk about the craft, then you know you're certainly not an infant in trading mentality. And those are the guys that I feel like you and I, Aaron, we're looking for. We're looking to connect with more traders like that. I always feel kind of bad. Let me go off on a little tangent here. I always feel kind of bad when an absolute beginner comes to me for coaching. They're very eager. They say, my buddy referred me to you. You say you're the best. I say, that's great, but maybe I'm not the best for you. Like maybe it's better for you to do the kind of legwork of getting what's available for free out there. I actually many times have referred in the last couple of weeks people to Chat with Traders, saying this is a killer resource for talking to traders and hearing what they have to say about what is my life manual? How can you learn from my experience and get further ahead today without spending 7 years stuttering through the markets as I have? I guess I should only say 2.5 years really, stumbling through. I've done a little bit better in the last couple of years, so I can say that was a smile. I don't know. I think about how often beginning traders are the ones most eager for education, but also the ones least suited for it. And so it's that kind of counterintuitive where if only we could talk to the people who feel like they're in a rut, the people who are, crafting their next strategy, but want to go about this one better than the last one. Those are the people that I love connecting with. And I honestly, I learned quite a bit from them too. We were talking about this. Sorry, I keep pulling back to our conversations from other days, Aaron, but I feel like any listener would want to hear this. We were talking about watching LeBron James, let's say, versus watching a collegiate athlete or an Olympian, even some amateur level, non LeBron James level. It's a lot easier to learn from the developing athlete. When you're watching them, you can see when their footwork is off. You can see when their balance or posture is slightly off. For a developing trader, it's much the same thing. The best traders make it look so easy. And I think there's a certain humility and respect for what it's like to be at the beginning and intermediate stage of that journey, that spectrum. Understanding that it is still a grind and a struggle, and why it is still a grind and a struggle. And if I had to kind of answer that own little question in a nutshell, I'd say it's traders don't do a good job of using the technology in front of them. And so that's been my kind of philosophical mandate. How do I convince people, whether it's on coding or just if they're still going to be a hand trader, how can I make their workflow better? That's where it will not only make you feel better, it'll make you trade better too. And VWAP independent or related to VWAP, that's something that I'm really proud of doing over the last 2.5, 3 years. So,
yeah, no, that's really good. You put that well. So, let's just make it really straightforward for the listeners, so they can sort of picture how a VWAP line is actually plotted on a chart.
Sure.
So what is it that pretty much moves that line and plots it on the chart?
No problem. So it looks just like a moving average. It acts just like a pivot. So I always tell people this is a positive transference of if you've learned support and resistance, you've done pivots, you've learned moving averages, you've seen moving averages, congratulations. You are pre-approved for learning volume-weighted average price because you've already got the requisite skills. It is a slower moving average than people are typically used to. So a lot of people, when they first put a volume-weighted average price on an intraday chart, they say, this thing is broken. It's not really following price. And I say, but that's the benefit. It is telling you an honest benchmark of average price throughout the day. Now, price's relationship to that and the some characteristics of the line itself are what we try and pay attention to as VWAP traders. But the simplest way to picture it is early in the morning, it's very responsive. In the middle of the day, it starts slowing down. Towards the end of the day, it'll slightly pick back up speed. And that's because of the nature of a volume profile of the day. You can all kind of picture this. I'm sure we've all traded enough charts to see this and visualize this. The first 30 minutes and the last 30 minutes of the trading session are typically the highest volume periods. And so because it's a volume-weighted average price, two things can impact this, right? We can separate VWAP into VW, volume-weighted. That's one way to impact it through the volume. And then average price. Through price, that's the second way to impact the VWAP. So if price moves exceptionally far away, many, many standard deviations from the volume-weighted average price, it will begin pulling the VWAP with it. Similarly, it doesn't have to be very far away at all, but if there's heavy volume being traded, then the volume-weighted average price will rise to meet that new information. So I always tell people, if you've ever dreamed of what are the big boys using, because they're trading millions of shares, what could they possibly be using? Are they using an RSI? Are they using something? What they're probably watching is something similar to this. They're trying to understand how other large traders are interacting with this average price. Are they aggressively trading higher and higher away from it, more and more eager to put their money to work, even though we haven't pulled back to a safe point to launch the trade from? Kind of an aggressive market, let's call it? Or are they more hesitant? Think of the Warren Buffetts on an even, I'm kind of assuming Warren Buffett is an intraday trader, but if he were, he would be trying to buy, I don't want to call it the bottom of the chart, but, a fairly valued, let's just say, we'll leave it very general and vague, right? Fairly valued investments. He's looking for safer pullbacks where he can put his capital to work and not feel like he's chasing something. There are many strategies that you can trade around this. And I like that even if you weren't a strategy trader based on VWAP, let's say you had some other system that you like to trade, it's a great interpretive metric for how should I be biased about this day. And so that's another thing that I don't see enough traders doing. It's sort of like, what do I need to wear today? Well, what's the weather? Well, you're not even asking if it's day or night. You should ask that broad delineation of is this something I should be trading or not? You know what I'm kind of saying? Traders don't do enough low-level assessment. They want to jump right into, well, where should I enter? Where do I put my stop? How many shares should I trade? It's well, what about, is this a market I want to trade? Does this meet broad criteria that even would put me into the right space? So I'll throw this out there, and forgive me for the meandering, the tangentials and stuff, but this strategy directs people, to better trading principles, like trading high liquidity names, mega cap securities, not to dish on anybody who can make money in small caps or mid caps. And I mean that. I am not good enough of a trader to be trading small and mid caps, so that's why I'm not trading them. But this strategy inherently leads you towards trading very liquid securities. I love trading the boring names that everybody else says, how are you trading JP Morgan today? That thing barely moved. Say, yeah, well, it moved 45 cents, during this one part of the chart. That's really all I need. I need something that is boring and predictable, not chaotic, news-driven. Forgive me, when people say I trade stocks that are in play, I want to slap them in the face and be like, why are you following along with where everyone else is when there are a million other opportunities. If this were a really dried up market where the only things that moved were things that had, news on them, okay, I understand, right? You're going, you're a hunter. You're going where the prey is, so to speak. We have thousands of equities at our disposal. There are patterns happening more than I can programmatically identify and capture and trade every day. I don't know how we aren't trying to trade more of the reasonable stuff. And I think that goes back to it's designed to make us feel better than it could ever make us trade. I think that's bullshit, and it is high time that people like you and I started talking reasonably about it. It's something we've all experienced. That's why I keep promoting this concept. Is we all know this to be true. It's like if you've ever seen good comedians, Mitch Hedberg, George Carlin, both of whom have passed away, but their style of comedy is, don't you know it when, or haven't you ever experienced it when? And people typically laugh along because they say, yeah, you're right. It does happen to me and my girlfriend. Or, oh yeah, it happened to me at work the other day. I definitely, I don't know. I have great respect for building a realistic plan rather than an idealistic plan. That's where you got to come down out of eagle mode and spend the other 2/3 of your time in mouse and donkey mode, so to speak. Again, not a really a glorified analogy to call yourself a donkey some days, but I think we all know what we're talking about. Aaron, a good example of how you do that, you put in the time going through hundreds, if not thousands of daily level charts to stay abreast of when things, especially those on your more selective watch list, are coming into an important zone for you. That's admirable. Most people don't ever get to donkey mode. They kind of fly around as an eagle, spend a minute as a mouse, and then never get to the donkey. You know what I mean? It's a fool's errand, is what I'm saying. So,
yeah, well put.
Thanks.
So, who would you say benefits most from this indicator? Is it most effective for intraday traders? Or what about swing traders? Can they also take advantage of VWAP? So, who would you say it's best suited to?
Well, it's okay. You hit a good point there. It's definitely best suited for intraday and equities traders. I've done commodities and bond futures with it. I've done Forex futures actually with it. The reason we can't trade currencies typically is the lack of centralized volume. So a volume weighted average price would be very difficult to create. On the futures markets, of course, where we have a volume that we can assess and create a VWAP for, it's amazing how closely those markets proxy the normal kind of VWAP trading you'd expect. So again, to answer your question more directly, if you are a mid cap, large cap, mega cap equities trader, if you're an intraday trader, and you are a technical trader, first and foremost, I guess I should really clarify. It does have some applications to swing trading, but I got to be sensitive to that. That's not a strategy that I've developed or put in practice nearly as much as I am an intraday trader. So I want people to recognize that the principles we learn, whether it's RSI or VWAP or lunar calendar or whatever, some other system is what I'm trying to say. The markets are fractal. So what we learn on an intraday level will apply to a multi-day or a week-long, let's say, level. It will apply to a daily level or a weekly level, even bigger, zoomed out. So it's something that can certainly apply to kind of all styles of trading, but definitely focused in on the intraday. That's where it was developed. That's where we're going to see hundreds. And I mean that, hundreds plural, more than I can handle. So that's why I'm trying to find other traders, to keep tabs on this. I think it's fascinating that there are so many opportunities. Usually when you find a trading system, it's frustrating because, the challenge is, well, how am I going to find this very particular setup? For me, it's like I'm trying to be an octopus, and each of my octopus arms needs a little octopus at the end of it to manipulate all the things that I would need to be watching. And this speaks to obviously how I grew into more of a systematic trader. I realized that my brain was never going to be good enough to deal with all this. I think very highly of myself, and I'm still too stupid to manage all of this. So, intraday traders mostly. I've definitely coached on the swing trading side with volume weighted average price, and it can certainly be applied to longer dated timeframes. I think the challenge is that, and certainly people who are familiar with a volume weighted average price, and when Aaron was asking just a minute ago about visualizing it on a chart, that's something that I hope to have ample examples of. Ample examples. Wow, I'm rhyming. Tons of examples. There we go. On Sanglucci's site, so that we can talk more about it and kind of add a visual, aspect to it. But people will understand that a VWAP moving slower and slower throughout the day, up until the very last 30 minutes or so, it's unfamiliar to most people. Why isn't it following price more closely? Why am I not getting 15 signals per day? I always tell people because you only need 2 or 3 signals per day to actually determine the major moves in the markets. When you extrapolate that to like a week or multi-week or many weeks time frame, you can go weeks or months without interaction with a long-dated VWAP, and that frustrates a lot of traders. So I tend to shy away from coaching on the swing trading side if I can avoid it, only because I know it's an inherently less kind of mentally rewarding approach. It's also something that is easy to extrapolate what we've learned intraday to swing trading, but it's very hard to go the other way. So to any guitarist out there, you'll appreciate this. I started playing guitar and I learned on an acoustic I learned on electric and then started playing acoustic shortly thereafter. And most people go that kind of normal transition of I started playing a little bit of acoustic guitar and then I learned how to play electric. I started a little too crazy and thought I was going to be, Van Halen and Jimi Hendrix and all this stuff. I needed to learn the basics. I needed to learn the fundamentals. And I would encourage people to not make that same mistake where they try and jump in at the crazy level. Start at the basics and, learn the history of volume weighted average price. I know most people, will not be disappointed with finding their own examples on the charts, the next day often. After I give them these studies. And that really excites traders too, because they feel like they are actively participating, not in just I heard about the study, it sounds cool, hey, here's an example, but a new method for interpreting when something is likely to go higher, lower, or sideways. Okay, that's something I could definitely use, you know what I mean? It's not asking them, but if anyone is taking a look or having an early conversation, I should have mentioned this earlier in our conversation, Aaron. Happy to do a free 30-minute consult with them via Skype, similar to how you and I met initially, Aaron, introduced by Peter Zhang, of course.
Awesome. All right. Well, there you have it. So just drop a comment in the show notes. So if you just go to chatwithtraders.com/Zach, that'll take you directly to the show notes page, and you can just scroll down the bottom and drop a comment there. And with any questions you have, and Zach will take care of you. Absolutely.
I always tell people I may sound very jaded or disillusioned, but I'm actually quite a personable person. I really love connecting with traders. I mean, that is, we talked about this, Aaron. The business is lonely, and having a trading comrade, let alone a colleague or a trading coach, is valuable. I totally know that. I was speaking to a trader in Hong Kong recently who said, look, man, I just need somebody to bounce an idea off of every now and then, and you seem like such a sharp guy. Could I sign up for a session here or there? I said, yes, that is exactly what I'm there for. Wherever you are headed next in your, progression, learn from experience. Don't waste your time. Don't waste your hassle. Don't go it alone. And I'm really looking forward to. You seem to have built an incredible community here, Aaron. And like I said earlier in the podcast, if you're listening to this, you're probably, a leg up over the average trader. I don't think the average trader spends his time listening to, other people go in this much detail. And I admire that, and I really respect that. And like I said, go back in time and save young Zach Hurwitz. It's like a Terminator thing. Let's go back and start Chat with Traders, 10 years ago, and maybe I'll have a little more of my sanity left. No, I'm just kidding. Fine. It was a great opportunity. Yeah, if you have any questions beyond that, I don't mean to cut you off, man. I got plenty of time. I'll talk your guys' ear off and turn into a 4-hour podcast.
Well, I've still got a bunch of notes here, and I'm keen to work through them if you don't need to run away.
No problem. Like you're saying, it's evening time on a Sunday here, but I love Sundays because they are, one day of respite before the insanity starts again. So no, I'm happy to, man. Plug away, and then whenever you want to wrap up, I'm good to go. So,
Awesome. So, I was going to add in before as well that we'll try and get maybe just like some screenshots and visuals that we can put in the show notes anyway, so that people can sort of visualize. Might sort of get you to put a couple notes with them and that sort of thing. But
absolutely.
Yeah. So, if someone is listening and interested in learning more about VWAP, like, where's the best place to sort of get like some sort of free info to sort of start the ball rolling, if you know what I mean?
Yeah, like I said, if anyone's interested in talking to me, obviously I'm happy to give a free half-hour consult. But I totally understand what you're asking, which is like, let's say they're just wanting to learn, they want to watch a YouTube video or something.
Exactly, yeah.
So first of all, this has actually challenged me to get a better VWAP video out there. I actually, just two nights ago, I was watching someone else. I won't name them because I'm going to talk a little smack about them. But they were talking for about 45 minutes about volume-weighted average price. I feel like they covered like 2 or 3 key topics. I was just really surprised that they took as long as they did to not really communicate very much. I don't know how much good free VWAP education is out there, but I think that's also because people understand it at a basic level, meaning they understand it is a benchmark for execution, meaning they understand the kind of historical context of VWAP. Not many people are using it every day to trade. So I think that's the level 2 kind of application that many traders really aren't going to be eager to share. I think Brian Shannon, I will give him a shout out because, he is excellent. I don't know how much free education he has on there, but alphatrends.net, I believe, is a great resource. And he's a wonderful educator and a nice guy. So can't speak highly enough about him. Obviously on Sangalucci's website, sangalucci.com, I will be writing, as well as some of the other guys, about this topic in particular. So we'll try and have some free resources there for people. The hardest part about this is that in the last 5 years, I think people are starting to awaken to this being a potential strategy, but many people aren't even sure where to begin with it. I think they're treating it like it's every other tool they've ever encountered, meaning they're pretending it's another moving average, or it's a special type of moving average, or they should put it on their charts with other moving averages. I tell people this is the broad framework that tells you where the market's about to head. You want to make this as minimalistic on your charts as possible. You want to put only the important lines on there. We're not trying to carpet bomb a range with support and resistance or, a million moving averages, because it's unrealistic. Why would you possibly think you're going to get, clear trading signals off that? So that's where, the consult comes in. I'm happy to get people set up. The platform that I still do actually a lot of my charting on, believe it or not, is Thinkorswim, TD Ameritrade. And though I am not a shill nor a referrer for Thinkorswim, I probably should be at this point because I've used their platform for 7 years and I like them a lot. But no, they're wonderful. They even on the paper trading, the free demo platform, that'd be a great way for people to have access to volume weighted average price on their charts for absolutely $0. So I'll tell you guys, anybody who signs up for a paper money account, please do reach out to me, because if you've gone to that much trouble where you say, look, man, I'll install the software, I'll go find this study, I'll take a look at this. You are, like I said, putting yourself a leg above the other traders. And those are the people I want to be talking to. I want the traders who are putting in the time and feeling like they're not getting enough out of it. I know that feeling well. I still feel that sometimes. I think we all do. But then we say, no, this is my time to be the donkey. I got to bear the burden. You know what I mean?
Yeah. No, that's really good. I appreciate you sort of offering that to the listeners. That's
no
really
problem.
good.
Well, I know you have like thousands of podcast listeners. So like, as I'm talking about this, I'm like, what have I just done? I've just offered free consults to like 2,000 traders each week. Jesus Christ, what am I going to do? No, I'm sincere though. Look, I'll make you guys a deal. If you're listening to this podcast, if you guys be flexible with me on the scheduling, I will find a way to get in touch with you. I am that committed to dealing with traders. I feel like, we've all been there where it's like, oh yeah, I'm a trader, and somebody looks at you askew. They don't even know how to talk to you. They don't know day trading. They don't know financial markets. They kind of look at you as, like we were saying before, that old 1990s heyday, cocaine cowboy going to make a ton of money and, screw someone over in the process. I don't think they realize what job we actually have. And I think talking to another trader who gets it, another little anecdote, Aaron, you and I were talking about working with younger traders versus working with older traders. I was talking to a 19-year-old trader who I offered, for our first session, let's do the coaching session with either your father or mother on the phone. He was like, oh, no, that'd be awful. I say, no, trust me. I know. It sounds like the worst thing in the world, but it's important to not only have respect for how your family will factor in, specifically being a young trader, kind of being backed by your parents in this one context, but, you want them to appreciate how much work is going in on your end, that they don't think that you're just sitting there playing basically a grown-up's video game all day. This is the highest level of intellectual challenge that many of us have ever or will ever encounter. It's worth putting in that same effort and therefore, engendering that same kind of respect. I always tell people if he was, if this trader was going to get his master's degree, would anybody in his life doubt him or tell him he's screwing up? Like, probably not. You know what I mean? But that's a master's degree. And I think we all know, especially in the last 5 years, that is not the guarantee that it may have once been, let's say, for future prospects. It's just as much of a risk in a way. Let me take that back. It is a comparable risk reward, meaning there is an emphasis on commitment and time, not only time but effort. Wise. I think a lot of people underestimate what goes into creating the best traders out there, and I think a lot of people feel like, well, if I was born with $1 million, or if only I, played lacrosse with somebody who was a quantitative finance major. I'm kidding, but that's not the way any of this goes. None of the best traders have stories like that. I think those stories, again, are made because they make us feel better than they make us trade. Are you noticing a common theme throughout this conversation, Aaron? It's all about, the world around us is not designed to make us better traders. It's designed to make us feel better. It's the placebo effect happening over and over and over again. And whether in the jargon, I'm going to write about this week, the jargon that finance as an industry uses. You ever notice that they're not stocks anymore? They're equities, because equities sound safe. Stocks go up and down. You can pick a stock. It goes up, it goes down, it goes sideways. Who knows? It went out of business, But an equity sounds strong and robust and long-term. And it's ridiculous because they're literally the same thing, right? I'm not an options trader. I'm a derivatives trader. Oh, a derivatives trader. You must be doing algorithms. And truthfully, you're just clicking buttons, just the same as every other schmo out there, right? You don't know your Greeks from Greek food, let's say. But, you want to tell people you're a derivatives trader. The verbiage that we use is very, and this goes back, of course, to my English background, having a great appreciation for the words that people use, why and how and when they use them, as well as the intonation. And I know it sounds like such a small point. Now we're getting into the drama stuff, but you can learn so much from people if only you pay attention. And most traders don't pay attention. They don't pay attention to themselves. They don't pay attention to other traders. They don't pay attention to the markets. What can I say? It's an incredibly lonely and difficult business, and I always feel like it's grim to realize that about 75% of traders every year kind of go away. You know what I mean? There's immense turnover in this business, and so that's something that you and I could learn from, and your other young listeners, Aaron. Especially if you've made it an hour and 15 minutes into my rants and raves. Seriously, it's not being a young hotshot that impresses anybody. It's being a calm, even-keeled, measured veteran of the markets. The guys that I respect the most have been around and have not been fired, have not blown up too many accounts. I mean, they've probably blown up one or two along the way, but you know what I mean? They're the guys who don't make a giant name for themselves. They just silently accrue money. And I want you to realize, you, the listener out there who has a dream of making $1,000 a day, driving a Veyron, everybody wants a Bugatti. Why not, right? Just give up. Literally give up on your dreams. Stop that right now. And I'm stealing from my Sangalucci posts earlier this week, but seriously, the sooner you give up on those unrealistic dreams, the sooner you'll start building realistic dreams. and you'll start achieving them because the bar is set a little lower because you come back to reality, away from whatever perception it was that motivated you initially to get into the business. And I don't know how else to say it other than that's not a popular thing to tell people, as you may imagine. But I pride myself on being the guy who will say the stuff that everyone else is terrified of saying. Here's a good kind of impact quote for you. You can definitely put this in your quotes. We all know this business is dominated by dinosaurs. I'm the fucking comet. Like, I want to be the thing that wipes the landscape clean and starts anew. That sounds very apocalyptic and terrifying, but you know what I'm saying about being radical. You want to do things differently. You want to shake it up because I think this is not a groundbreaking statement, but this business is feeling a little heavy in some ways. You know what I'm saying? There's a lot of people who aren't doing this right and should be. And I want to help. I want to teach traders how to swim. You know what I mean? I want to teach them how to rise with the tide instead of drown alongside it. So,
yeah, no, that's really cool. So, just one more question on VWAP, and then we'll keep it moving. But do you rely solely on VWAP, or are there other things that influence your trades, such as certain technical levels, or even news releases? Do they have any factor on your decision making?
Well, fortunately, based on the way that volume-weighted average price works, I always tell people whenever a news event hits, I'm going to see the reaction on the charts. I know this is it goes back and forth between news-based traders and technical traders. Each side swearing that they've got a leg up on the other, right? Like, well, if I can synthesize news reports faster than these guys can deal with the charts, I'm going to be better informed and know exactly how to trade by the time that these guys even read the news report. Well, yeah, same to that guy. I'm going to be already in the trade for 3 minutes while he's still trying to figure out what he should do. Meanwhile, the market's ramping, and I don't care what the news was. I mean, people are excited about it. I will trade it in that direction until my thesis is invalidated. And I think that's where. Okay, so you asked the question about other indicators. This is part of the reason why I'm working closely with Sang Lucci. I think they brought me in because Lucci is an absolute beast about telling you when to enter the trade. He knows the minutia and the timing and the market microstructure to know exactly when is optimal to enter the trade. Position-wise, kind of the where on a trade where on a chart should I be trading this? That's what I specialize in. So broad, and this is what has freed my mind in the last 4 years with volume-weighted average price. When I stopped worrying about where to get into the trade, I started worrying about just identifying if it's going to go higher or lower. And people may say, well, that's no good. If you can't get into the trade, then who cares? Yeah, but what if you knew it was going higher? Would you really care where you entered the trade? I mean, if you really knew that it was like 80% or 90% odds to go higher, why are you so worried about where to get in? Participate with maybe half your intended size right now. Get in the trade. If it's that compelling of an opportunity, you don't need to be that right. You don't need to be the guy trading it at the bottom. You don't need to be the guy exiting at the top. What you need to be is the guy who recognizes how much money is made in between those two entry points, or entry and exit points, I should say. Right? I mean, it's one thing to look back and go, well, if I had realized that was the bottom, and then I realized that was the top, I could have made $1.50 on this security. Well, that's great, but what about in the moment? Can you still capture 75 cents? Because if you could, and you're doing it at 20% of the effort or mental capacity required, you've definitely got the leg up on the trader trying to get the bottoms and tops. So, sorry, that was a meandering answer to your indicator question. I have found some success with things like the RSI, but on what I'd call non-traditional settings. So without sounding like this is a particular recommendation, I'll keep it really broad so people don't feel like I'm misleading them if this ends up not working. A shorter term RSI, let's just say. And the reason I say shorter term, meaning typically it's a 14 period RSI setting. The shorter, the more responsive an indicator will get. I'm sure people have conceptualized this before. It's kind of a spectrum. The analogy I've used is like when you're sharpening a knife. If it's really robust steel, it won't rust, it won't break, it's very strong, but it won't hold an edge very nicely. versus if it's like a cooking knife where it's very fine, very delicate, very sharp, but not very strong. So similarly, it's like we're trading off responsiveness for credibility in indicator settings. And so I'm encouraging, the RSI is a typically good confirming tool. Perhaps examining it on a shorter time frame may be valuable to balance out a bit of that. We need maybe a little more responsiveness. Maybe we need a little more. But I'll tell you, I'm not an indicator guy. That is not where my heart lies or where I put most of my focus. That's, I would only use that for a confirmation. When I've already identified a likely trade setup and know pretty much everything else about the trade, I'm just looking for when and, where am I really down to the, split second, when am I looking for that entry? Does that address, I think, what you're asking?
Yeah, absolutely. Yeah. No, that's really good. So just sort of moving along a little bit, I wanted to talk a little bit more on the coding and the systematic sort of approach that we sort of touched on earlier. So,
sure.
So you've sort of transitioned from sort of being a hand trader or what do you call it? Sort of like discretionary qualitative trader.
Yeah, bad trader. I'm kidding. Yeah.
To now sort of actually coding systems and almost at the stage where you've got your trades running on autopilot. So what were some of the key benefits that you saw and the motives that got you heading in this direction?
Okay, so, and what a great question, by the way. I think for me once, and this is a comment from Dave, the quant trader who I met many years ago, he'd say, what good is this if it doesn't apply to everything in the market the same way and yield positive expectancy? I mean, who cares? You're basically just finding an artifact, some one random occurrence that may lead you to think you're onto something. But unless you can apply it to 100 stocks or 1,000 stocks and show that it has broad potential, it's not worth your time. Because once you start applying this to more than a few stocks or more than one stock at a time, you start realizing I don't want to waste my time on something that doesn't apply, to many securities. I don't want to build a trading system that doesn't give me enough signals. I don't want to build a trading system that is overly particular. I mean, all these challenges of, you can kind of think of it like we were talking about the analytics program that I used last night, Aaron, and we were talking about a dartboard. When you start, you're just trying to throw the dart at the dartboard and get it to hit somewhere on the dartboard. It doesn't even need to be a good throw. It's just not hitting the wall. So that's like starting from 18,000 equities and saying, I want things where this moving average is above this moving average. And we filter that down to, 10,000 stocks meet that criteria. And then we say, well, I want the moving averages to also be this far apart, at least. And we filter down and, there's 3,000 equities that meet that criteria. And we filter it down further and further. And that's the bull, we're getting closer and closer to the dartboard bullseye with each throw until we really can nail down, for anyone who's a scientist, you probably yell at me for trying to talk about type 1 and type 2 error as a non-scientist. But in my own little interpretation, I mean, it's easy to think about type 1 error is where you're getting signals that you shouldn't type 1 error is you're receiving signals that aren't actually, I'm sorry, I'm getting this backwards. What is it? Type 1 error is where you get signals that you shouldn't be getting and then type 2 error is where you're receiving false negatives, right? False positives and false negatives, roughly. Where you get signals that should not be signals versus type 2 error, where you are missing signals that should be identified but are not. There we go. My brain was struggling there for a second. But you have to balance between not being, not capturing everything, knowing that some are going to get away, but also not being so open-minded that you identify a lot of things that aren't actually your trading opportunity, that you misidentify and say, oh, yeah, go ahead, let it into the system. It's a constant struggle. It's kind of like running on a knife edge, so to speak. There's just a very fine line of profitability versus falling to one side or the other, and either being too broad or too restrictive, to where the system fails. And I think that higher level of scrutiny has challenged me to evaluate my trading systems on that same level. So rather than, hey, is this something I've made money on in the past? Is this something that I expect to make money on in the future? And that distinction, like the way I just asked that question to myself, or your listeners, or you, Aaron, would ask yourself this question, that was a change in mental approach, because I used to think, oh, well, who cares? I made $6,000 in the last month with this approach. Well, that's great. But, how random is that? How expected is that? I mean, were you trading abnormal size? There's so many other things that factor into profitability. I didn't have a very sophisticated or mature, view of profitability. I thought about it very simplistically. And now I know I'm just meandering here, but other little thing worth bringing up. Most people think about profitability as a function of risk reward. And anybody who knows probabilistic determination would be like risk reward times probability of outcomes. Like, how likely is your risk? How likely is your reward? Otherwise, you're assuming literally it's just a coin flip. Oh, well, it's 3-to-1 risk reward. I expect to make 3 for every 1 that I lose. Yeah, it's not quite that simple. And also, what's your position sizing, and how do you manage stops? And do you do partial exits, or do you do all in, all out? There's so many different ways to look at it. Similar to how an options trader would look back at equities and say, man, that was such a linear environment. Things either went up or down. In options, there's non-linearity and so many more dimensions, but it's exponentially more complicated, let's say, than just adding one new dimension, or it's not just a little more complicated. It dramatically overcomplicates things when you move to systematic trading. And that's something that I did not expect. I did not look forward to, I guess, but I have grown accustomed to it and realized that higher level of scrutiny is a good thing. That we need to ask ourselves every time we want to put a trade on, is this a trade that I will be taking tomorrow when it sets up? Is this the kind of trade that I would have taken 6 months ago? You want some consistency in your approach. And that's where I've moved towards trying to programmatically identify these intraday trades. It's so much easier than just visually assessing on a chart. And even though I'm very good, at this point, having done it for 4 years with these patterns, there's nothing that will ever be, until they make Jarvis, the AI computer from Iron Man, where I can talk to it and say, Jarvis, show me all stocks trading above their 200-day moving average. And it'll be like, computing right now, Mr. Hurwitz. They're not going to make a better tool for us than what we've got in front of us, which is the coding language, where we can, dream in plain English, right? Where you write out the kind of broad logic, and Aaron, you and I have done this. We write out kind of the broad logic for the system. And then, it's your job or a developer's job. You can hire, an outside developer or a friend of yours, let's say, who's a good coder, or someone like myself, who can take that plain English and turn it into what I'd call pseudocode, or like we're saying soft code. And then eventually, if it's successful enough, and here's that great word, deploy. If we're looking to deploy it at an automated level, that's when you get into hard coding. But that's a wonderful problem to have when you're worried about market impact and scalability and a lot of things that Peter was talking about last week. I remember on the podcast. So.
Yeah, no, that's really cool. Bringing that back to sort of people who definitely aren't at that level yet, but sort of aspire to get into that coding sort of field. I mean, trading can often seem like a daunting task just on its own, but now you're sort of adding another layer on top of that with coding and developing and that sort of thing. I mean, how clued up do you have to be before you even start dabbling in this area? I guess the question is it a realistic goal for retail traders to work their way towards this?
Okay, that's another really good question. So here's a good free resource that I should throw out there to people. I know we've talked about it before. Finviz.com, that's FINVIZ.com. They are a wonderful starting point, especially at the kind of free or retail level, for people to start thinking about. And I know anyone who's familiar with the site is like, what are you talking about, Zach? Those guys aren't coding. What they are is systematic kind of identification. Select a few criteria and then show me the stocks that meet that criteria. It's very user-friendly, very engaging, very easy. I want people to start there because once they create, let's say, a basic scan that they like what the output is. Oh, wow, look at all these chart patterns. Look at all these channels, right? This is what I'm really looking for. Upsloping channels that are above their moving average and are part of the S&P 500. I'm making this up, but let's say that's your scan. What most traders don't realize is they've pretty much just done all of the basic coding they need to do to look for their first system. Now, obviously, we're still assuming they're a hand trader. We're not expecting them to like begin coding anything. We're just expecting them to start logically. So separate, and when we say coding, guys, separate logic from syntax. The logic is the stuff that I don't care if you've never looked at a line of computer code before, you could probably create. Like, okay, stock must be uptrending. Stock must be above its moving average. Stock must be breaking out of new highs, whatever these logical conditions are. And then let people like me figure out the syntax to get them into the actual coding language, right? But starting at something like FinViz for scanning, I think that's how the average, beginning or intermediate trader would probably start with coding. Second resource would definitely be Thinkorswim. They have built one of, if not the best, beginners coding languages. I would not have been close to ready for some of the more big boy tools that I'm using now had I not started in Thinkorswim. They have a very engaging, easy to read manual. They have, I was going to say ample examples again, an ample number of examples, right? They have a great trading coding community as well. So, that's a little more intermediate, but still kind of somewhat beginner level. And then start talking to other coders. That's the other thing. They will, much in the same way I'm trying to relate all of my VWAP and trading psychology and coaching experience in an hour or so, reaching out to other systematic or very code literate traders who you may know or be able to come in contact with. It's very easy to say, hey man, sum it all up for me. What are the kind of things I need to start thinking about? And if you were I'm going to go into code for a second here, guys. Hold on. Batten down the hatches. Zach is talking about code, but Aaron, I think we even talked about this. There are input statements, things that the user can change. There are def statements, define statements, where you're kind of like defining a variable that's used in the calculation. And then plot, which is what do you actually want me to put on the charts. Now, granted, this is all in Thinkorswim code language, but it's simply to show that those three things, inputs, define statements, and then plot statements. That's pretty much coding right there. And if a former English major turned econ major, never done any coding in his life, can teach himself how to code and evolve into a systematic trader, I promise you there are people out there way smarter than me who are listening to this who have doubted themselves. You know who you are. I'm talking to you right now. I don't know who I'm talking to, but you know what I'm saying? Like, the people out there who are listening who say, yeah, I probably could do a little bit of coding. It doesn't seem that hard, and I could read a manual, and I'm a smart guy. You probably are. You're probably exactly the right guy to start coding. And especially in the last 5 years, we've had such a great democratization towards the trading utilities that are at our disposal. It would be absolutely backwards to not exploit this, especially right now when it is so right at our fingertips. I mean, it's a free download. You know what I mean? If it were 10 years ago, you'd have to know MATLAB. You'd have to know an actual hard coding language to ever begin. So the barrier to entry, the kind of learning curve would be ever steeper. Yes, 5 years from now, it'll probably be even easier. But I'm going to tell you the truth. Guys like Aaron and I are going to be taking your money at that point. So you better get started soon. I'm just kidding. But like, seriously, guys, and I'm speaking away from Aaron for a second. When I first met Aaron, I mean this. I said to myself, damn, kids these days, because he's a couple years younger than I, but like you can tell immediately, he's a hardworking self-starter. He's going to go far in the business. You will probably, you who are out there listening to this podcast, an hour and a half, gosh, long. If you're listening and this resonates with you, guys like Aaron and I will be coming for you in a couple years. It's best to get a head start on us and start learning systematic trading whenever and wherever possible. And that's what Chat with Traders is kind of all about. When you want to advance yourself and you don't know an expert trader, how are you ever going to have access to them? This is the kind of public service that you're doing, Aaron. So I applaud you for that.
Yeah. Thank you. No, that's really good. So those few things, resources you mentioned there, I'll put links to those in the show notes, so listeners can definitely check those out and get amongst it if it's something that they're interested in.
Yeah, of course. And please, I encourage people to reach out to me. Sorry, I'm cutting you off, Aaron. Just so people know, don't feel like I'm up in my ivory tower I'll give my email address, and obviously, if you guys have any questions, you can always reach out to Aaron. He'll put you in touch with me. So long as I haven't inundated you with requests, right? You're going to get 1,000 people to try to sign up for a 30-minute coaching session with me. I'm going to be swamped.
The more, the better.
I know, all the better, right? Yeah, no.
Yeah.
I would love that. I think that would speak to how many people are out there who are eager versus just expecting that it's going to fall in their lap. Those guys are going to, screw up and blow up an account anyway. Let them go off and do their own thing. Those of us who are putting in the time on a Sunday night or Monday morning, whenever it is you're listening to this podcast, you're in good company. That's what I would leave you with. You know what I mean? I think that's what people need to realize, is that they're not so far from their dreams. They're actually a lot closer in some cases than, So.
Yeah.
Sorry, go ahead. You were going to say something.
No, that's really good, Zach. So we should probably sort of start wrapping this up. But before we do that, I'm just going to run quickly over my notes here to see if I've missed anything I was super keen to ask you. One thing I want to hit you up about, and that is, what do you think separates the traders who succeed and the traders who fail? Or maybe the traders who are just constantly treading water and never break through. Is there a common trait that you see, especially with your coaching background?
Sure. I mentioned this in the Sangalushi TV interview that I did, and so I'm sorry I'm quoting myself, but I realize this is what traders need to hear. Is that most traders, certainly risk management. I mean, that's obvious. That is not a groundbreaking assessment of traders, right, and why they fail. It's the absence of mastery of one subject. And what I mean by that is not they're a great Elliott Wave trader, or they're a great so-and-so style trader, and that's just what they do and they've found success, because that's very hard to imagine when you're a beginning trader. Well, how do I even know what I need to go master? But that speaks to why the trader experience is the way it is. Not knowing what to master, they jump around from thing to thing to thing. And whether it's system to system, or indicator to indicator, or options to Forex to futures to... And I'm guilty of this too. Early on, I bounced around between options and equities and futures. I've never traded Forex, thank goodness. But I did the same thing. And I realized I wasn't learning enough about any of them to become competent. I was only becoming confident. And that's dangerous, because you need competence before you gain confidence. It's easy to teach someone, hey man, you're a better trader than you realize. Look at the evidence. It's very hard to teach people to be humble and kind of respect that they need to build more skill in an area. So I always advocate to people, whatever it is that you are passionate about or resonates with you or you have had success with, drive it into the ground with investigation. Find out everything you can. Talk to the experts. Read the white papers. Learn everything you can about that subject. Once you've mastered that, if you're still hungry for more, my God, there's a million other trading styles that you can learn to incorporate and take something from. It's the people who are constantly looking for the easy solution. Well, what should I trade? I mean, just tell me what I should trade. Where should I be? It's never going to work. Nothing is ever going to come from that. Because the people who are eager to tell you, oh yeah, you're just looking for something right now, I'll give you that quick fix. They're not your buddy. They're there to, here we go, the same old quote, right? They're there to make you feel better than they could ever make you trade. And I hope that people are hearing that and feeling it when I say it, because those kind of quotes to me, they stick with me too. This is I don't want to say predatory business, but it's something that you must be cognizant of, that especially as a developing trader, you're like a baby duckling, and there's hawks out there looking for a little snack. It's very easy for people to convince you, oh, you got to go with this. You got to go with this. You got to try my method. You got to go with the people who are the most real, right? The most earnest, honest individuals out there. The people who are going to give you access to them, to talk to them whenever you have a question. I always tell people that psychology does not work on a 9-to-5 schedule. It works on a 5-to-9 kind of schedule. You know what I mean? Your psychology is what happens all of the off hours. I mean, it certainly happens during the on hours too, but it's the what trading does to you when you aren't in front of your screen. And people don't do enough examination of that. So I'd kind of condense this approach. It's not only a bit of mastery of one subject. The traders who master one thing get better at mastering any subject. But also they recognize that psychology is just one more subject. It stops being this white whale of, what I'm after all along. If I just master my psychology, eventually it becomes, oh, well, I learned how to trade VWAP. I learned how to be disciplined with VWAP. I could be disciplined with myself. I could learn myself. I could do this too. And so it's a confidence building exercise, as well as it is organically the right approach to take. That you aren't going to retain a little bit about options and a little bit about Forex and a little bit about this style of trading, and a little bit about day trading, a little bit about, that just doesn't matter. You don't want to be a jack of all trades, master of none. It's a stupid approach. And I swear to you, when you're explaining, here's the thing that should connect with traders out there who have had to explain to someone, yeah, I'm a trader. And they say, oh, what kind of trading you do? And you say, well, I do a little RSI trading. I do a little support and resistance trading. I also trade some chart patterns. I also trade point and figure, and I trade Elliott wave, and I trade. You sound like an idiot. You know what I mean? Like any real trader is going to be like, what? Which of those do you actually trade? Do you trade all of those? Do you trade none of those? Do you know what you're talking about? You want to be able to say competently, most recently, for the last 8 months, I've been focused on, doing analytics on options volatility, comparing implied to historical. And I've adapted a system that I've developed with the Black-Scholes model of discussion. It's just like, whoa, that guy sounds like he knows what he's talking about. So not only from a perception or like interpersonal standpoint, but also like, don't you actually want to have that expertise such that you can say, I've dove as deep as the pool will go. And I've come back up for air. Now maybe I'm going to go explore another ocean. Maybe, before I jump into the Mariana Trench of whatever trading systems, or maybe that's coding is kind of like the deepest, darkest recesses of the ocean. You know what I mean? You gotta really prep yourself for that. But who knows? I haven't come up for air since. So what can I say?
No, that's really true. So thanks for breaking that down, Zach.
No worries.
So let's just run into the closing bill, which is just a few short questions to take us out. And sure. These are totally generic, so I ask them to...
My favorite color, what I want to be when I grow up, favorite type of pasta...
Pretty much.
Yeah, no. All right, go for it. I'm all ears.
Yes, so the first one would be, what is one piece of trading advice that has stuck with you ever since you initially read it or perhaps heard it?
Okay, I'm going to try and say it in the same accent that it was said to me. It was by Ben Lichtenstein, who, what's the company called? I think it's like MarketCast or like Traders Audio. They're the guys who run the S&P Pit feed. And he says this pretty much at the end of all of his, trading squawk sessions. He says, if you want to be here for the good days, you got to be here for all the days. And what he means is like, you have no fucking idea what the best days are going to be. You have to show up every day and apply the same level of intensity and focus, because the minute you look away, it's going to be a good day. You're not going to capitalize on it, and you have no idea when the next one's coming. And that is what builds that kind of negative, reinforcing, shitty self-psychology that I was talking about before. Well, of course I slept in today. Of course it's going to be the one day the SPY moves. I had all my puts on. It's like that negative poison that we spew to ourselves. It's unfair. And it was totally random. But because we don't follow through with kind of having a healthy respect for... I took... here's one more class that did help me at Tufts. I should have mentioned this. Introduction to Socratic philosophy. Looking at Socrates, who, kind of... paraphrasing, really brilliant man, but he said, the one thing I know for certain, the one thing I really do know is that I don't know everything. I can't ever know everything. That is my one absolute, is that I'm not the man. I'm not a genius. I'm just another man. And I'm another human on this planet. And kind of healthy, humility, right? A very honest humanistic approach of like, I am but one man in a group of men. And realizing that, that's really powerful to me. I stopped trying to swing for the fences and realized that if I just made a few $100s a day, I'd probably end the week really positive and be happier and healthier and more balanced. I did that for a week, went well. I'm going to try that next week. And then here we are now 4 years down the road, and I've never stopped. I think I would psychologically collapse. I would just like fall apart if I had to trade the way that I had traded for the first 2 years, for the next, 4 or 5. It takes too much not only time, but effort and energy and psychology. Like it just, I would be balding. I would be like Kenny and Lucci, right? We joked about this. They've got shaved heads, they're losing their hair. Guys like me, same sort of thing. I probably would be ripping clumps of my hair out. I'd be balding by now. So there you go. If you want to be here for the good days, you got to be here for all the days. You have to treat every day as an opportunity with the same respect and humility, rather than dynamically sizing. Well, today's the big day, and I'm gonna go. Who cares? Who even knows if you're right? The market will tell you if you're correct or not.
Yeah, no, those are two really great quotes. So really cool. Is there one book that you believe is a solid read for any new to intermediate trader?
I have two. Reminiscences of a Stock Operator. I love that book. Edwin Lefebvre. I don't know if I'm pronouncing his name right, but that's my attempt at a French accent. Lefebvre. I don't know how to. Whatever. Reminiscences of a Stock Operator is the fictional-ish account of Jesse Livermore, one of the best traders to ever live. Anyone who knows the story of Jesse Livermore knows why I put emphasis on that, the greatest trader to ever live. Anyway, it was a fascinating story, and the parallels ring true in 1908, 2008, 1808, doesn't matter what year. He's talking about human psychology, and there's so many good anecdotes from that book. I know that's an oft quoted, and people will refer back to it, but I love it too. It's one of the few books that I've read in the trading space, and by design. I didn't want to kind of impact my own view of the markets by having 16 other books that had kind of designed my course for me. I wanted to meander. I wanted to build it kind of my own way. And partially, I think that's what Livermore's story is about, is building a visceral or qualitative connection with the markets, as well as having a quantitative appreciation or understanding of them. And then the second book would be anything by Jack Schwager. Anything in the Market Wizards series. And the reason I suggest that is it is so easy and fun to read. Oh my God, I can never put those books down. They're interviews with traders. I mean, do you want to hear about the best people? Where are we right now? We're on Chat with Traders. If you're interested in this type of stuff, over the last 20 years, Jack Schwager's interviewed some of the best. I actually have hedge fund Market Wizards that I'm 2/3 of the way through right now, which is a wonderful read. And it's a little more modern, not to say that the old ones are archaic. I think the oldest one is like 1992, I want to say 93. So a little bit dated in some of the references, but I think it's also, it's almost like reading a Dan Brown novel or like a Michael Crichton novel, those airport bestseller type books. It's like, it's that level of, I could just sit here and just churn through these pages, but that's not doing it justice, because it's obviously, I think, a higher depth of read than Michael Crichton or something. But it really, it resonates with me that strongly, that you get to hear in their own words with their own anecdotes. And Jack Schwager does a tremendous job talking about the context surrounding the person. He does a lot of research on them and tells you, more than you'd expect to get. You expect it's just interview questions, but he's like, look, when I met with them at their offices looked like this. Can you picture, being on this side of a cliff with blah, blah, blah. I'm making this up again, but he really sets the context or sets the scene particularly well. He's a great author, and the interviews are incredible. And the fact that it's vignettes, it's not one book of this guy's story. It's 70, market masters over 2 decades, so. Clearly, I'm also repping Chat with Traders too. Like, I'm serious. I didn't even realize. Like, I was looking at the book and I was like, wait a minute. Like, what's a modern version of this? Like, it's exactly what we're doing right here. And I mean this, man. I told you before we hopped on the podcast, but I admire you too, and tremendous respect for what you're doing, altruistically for other traders too.
Thank you. I appreciate it, man. Yeah, those books are the real deal. I'm actually trying to convince Jack Schwager to come on the podcast.
Oh my God. I'll send you like a piece of paper. You can ask him for an autograph from me or something. I'm kidding. I'm such a fanboy though, but like really, he's a huge name. And you've already had some great people on the podcast, man. Props to you for that. I felt like, well, if he really wants me to have me on, I guess I have to go. I'm kidding. I have tremendous respect for just guys like Pete and Lucci. Tim Sykes, who I know, obviously I went to college with. We didn't know each other at Tufts, but we were in the same dorm. Coincidence, right? Trading lightning may strike twice. I'm kidding. But yeah, it's a tremendous community you're building too.
So. Yeah. Well, I mean, that's the whole sort of, was sort of one of my motives for starting the podcast, was to sort of meet other like-minded traders and connect with them and you know, sort of...
Let me speak to the listeners for a second. Do you guys realize what Aaron has done? He had a dream, he made a website, and he did it. He didn't, you know the phrase measure twice, cut once. He didn't sit around and measure 6 times and dream about what it'd be like to interview these traders. He just called them, he organized it, started disseminating it. People like yourself, like myself, are listening to it now. That is the example that you should be really picking. I mean, really, Aaron, you should like have me interview you for your own podcast. But seriously, because I really mean that. I'm not trying to just blow smoke up your skirt. I'm telling you, like, most people would never... Let's say we're talking about, I have an idea for a system, but I don't know if I'm ever going to code it. There are people out there who will help you. That's the lesson of this podcast. Wherever you are, whatever you need, wherever you're headed, the world is a big and friendlier than you might imagine place. And Aaron, we talked about this. I mean, we're in diametrically opposite parts of the world on diametrically opposite time zones. And the fact that we can connect, share ideas, share screens. I mean, we live in a wonderful day and age. Take advantage of that, people. Get out there and start making whatever your eagle vision is. Be the mouse, draft the details, and then be the donkey and get this into reality, whatever it is.
Yeah,
you know?
Yeah, that's really true. One of the last questions would be, knowing everything you do now, what would you have done differently come day one again?
I think I would have told myself that you're not going to get rich if you quadruple your account. I think that's something that I kind of had an epiphany about a couple years back that, I always tell people, think about your account and double it or quadruple it. Are you life-changing rich? Oh, no, you're not. You just have a little more money now in this hypothetical. Okay, then stop trying to quadruple your account now, right? It's not about, I was thinking of very oversized trades that I took early on in my trading career that oftentimes I was like right about the thesis, but I was really bad in the execution. I wasn't very smart about where to put the trade on or how to add to the trade, how to do position management. Don't make the stakes so high is what I think I'd tell people. That this seems like a really intense game you want to participate in, and it's where the big boys play, and we got to really, you're trading against the best and the brightest and all these other algorithms. Yeah, I mean, sort of. You're really more trading against yourself. And I think people they feel kind of foreign when they hear that. They're like, well, what do you mean? No, I've never had to do self-control, in anything before. I have other people who are my managers or my boss or my parents or somebody who's my kind of overseer. You're on your own, kid. You're out in the cold, solo, and you've got to. It's kind of like I'm an amateur pilot flying a plane by yourself. It's not something to be taken lightly. Like, the stakes are pretty damn high. You know what I mean? But when you're in a simulator or you're in a classroom and you're just taking a test on basic aviation, stakes aren't that high. So don't treat yourself like you're in Top Gun there. You know what I mean? Like you're not, especially at the beginning, you are not at that level of intensity yet. So partially what I'm trying to say is don't fool yourself. Partially what I'm saying is don't make it harder on yourself. You know what I mean? Like, trading is a hard enough business, and adding the emotional intensity to it only compounds that, exponentially. Again, it just makes it really, really, really hard to deal with. I've seen many traders mentally collapse more than I've seen traders financially collapse. I know that sounds weird to say, but I really mean that. I've seen more traders who stop trading because they don't know how to succeed, they don't feel fulfilled, than they blew up their account and they ran out of money. The kind of grandiose explosion of a trader, when it happens, it's memorable, and therefore we talk about it a lot. Like, oh, did you hear about so-and-so? He lost 100 grand or something. I understand that. That's a high-profile or high-intensity example, that we may look back to. But the average failed trader is somebody who just can't get what they are looking for out of the markets. And so I would stop trying to peg it to dollars and cents. Start looking about it as intellectual fulfillment. Treat this like a puzzle that the stakes are pretty high, but they're not life or death. You are learning how to solve the puzzle ever more with each passing day. And it is the smartest man in the world who can learn how to gain an education without taking the risk that others take in order to gain said education. You know what I mean? Like the market will teach you what it needs to teach you. Whether that costs you 6 months or a year or 5 years or 50 years is up to you. Whether that costs you $1,000 or $5,000 or $50,000 or $500,000, I mean, that's up to you. You choose your tuition in the market. And being cognizant of that, I mean, like, I think because I just gotten out of 4 years of undergraduate, I was a little blinded, let's say, or saturated probably with the academia thing. But I didn't do too much planning for my own path. I just, as 2008 financial crisis hit, I started trading, and I figured I would, just dig my way out once the whole thing settled. I should have done more planning. I should have had more foresight as to how am I going to be a happy, balanced person. And that's the biggest also change that I would say. I mean, it's certainly more personal than professional, but learning how to build a happier life for myself. And that's when we get beyond to make ourselves feel better than it could ever make us trade, to make us be better than we could ever hope to trade. And that's when you've really won, when you feel happy, when you feel fulfilled, when even if trade goes bad, it's just a trade that didn't make money. It's not a failure. It's not a personal loss. I didn't screw anything up, and I don't deserve to feel so bad about it. What I do deserve is to do some honest assessment about why that trade didn't work and how I could have done it better. It's like when you go off a diet, do you starve yourself for 7 days to make up for, eating a piece of cake? No, you just go back on the diet the next day. We need to get over this kind of, cinematic level of intensity to our trading careers sometimes. I think that's what I'm broadly getting at. Don't make it harder on yourself than it has to be.
Yeah, I really like that. That's really good. So
on the bright side, this podcast is going to have a lot of great quotes that we can pull from it. So the people who go down and they say, too long, didn't read, or oh my God, 2 hours, didn't listen, which I don't blame you. If you're skipping through and you just click to this part of the podcast, you're a jerk. You're like the guy who drives up alongside that line and then, tries to put his turn signal on at the last second to get in and just, I'm kidding. No, I'm just kidding. I'm kidding. I hope that we can summarize a lot of this for people. I appreciate that you've been patient with me in kind of indulging my meandering. I feel bad, like a guy like Peter Zhang from last week on Aaron's podcast, who is 20 times as well-connected and bright and experienced as I am. I think he nailed everything in an hour, hour and a half, hour and 15. Here I am. I'm stumbling over for 2 hours. I'm just babbling.
Not at all. It's been incredible. It's been really good. I think listeners will definitely pick a lot of gold out of this one. Good
stuff.
Before we wrap things up, let's do two different things. So if you just have a question for Zach and you just want an answer on that one, just go to chatwithtraders.com/Zach. That's ZACH. If you want to do, he's also offering to do a 30-minute one-on-one sort of consulting, coaching session with listeners. So if you're interested in that, just shoot me an email and I'll put you in touch with him. So my email is Aaron, AARON, @chatwithtraders.com. And we'll do it that way.
Yeah, absolutely. I appreciate you being the intermediary. I'm very flexible. Obviously, I'll give people my Sanglucci email address. So this is for, any future questions, or if you're looking to get in touch with me, Zed, I should say. I almost said Z because I'm a Yankee like that. ZHURWIT as in Tom, Z or Zed again, at Sanglucci. That's SANGLUCCI.com. And, anyway, if you reach out to Aaron or reach out to myself, I'm happy to field any questions. It would be a wonderful problem to have if people were eager and excited to push themselves further along the path of trading. You know what I mean? We need more of those people and fewer of the guys who are sitting around saying, what should I be trading today? Well, I have no idea, dude. You know what I mean? We need more students in the market. We need more people like you and I, Aaron, more young guys who are committed to this. So.
Yeah, word. So I know a lot of our listeners are very active on Twitter, and you also have a Twitter account. I know you're just starting out, so don't be too harsh on him. But
please, I tell people, like, tweet at me and prove me wrong. Prove to me that I should have been on Twitter a long time ago.
Last time I checked, your display picture was still an egg. Is that still the case?
No. Look, man. I got the lecture from Charlie this week. He was like, "Dude, I appreciate you putting your Twitter handle in the blog post, but you look like a sketch ball, man. We got to get." I said, "You're right. No, it's actually me. I'm so bad about social media, and so guys." You can laugh. This is where I am absolutely the infant learning from the master. You know what I mean? So I appreciate anything that I can pick up on from anybody out there on Twitter. If you want to tweet a chart at me, if you have a question, any of that, you can feel free to put my Twitter handle. It's just my name, at Zach Hurwitz. No spaces, no dots, no nothing. ZACHHURWITZ. There we go. Got it. There we go.
Awesome. And
I'm learning slowly.
A link to that will be in the show notes, of course. And
awesome.
Yeah, hopefully we can get you a few more followers and get you a bit more active on Twitter.
No problem. Well, and that's the saddest part is, like, people are like, "Hey, should I follow you on Twitter?" I'm like, "You're going to be exceptionally bored, but I'd appreciate it because it will motivate me to use it as a smarter medium for disseminating my ideas." And I really do love it. I love that it's like we were saying, democratizing. There's a really low barrier to entry right now to a lot of the intellectual realms or skill sets or, networking tidbits that you would normally not have access to. Take advantage of that, my friends. Oh my God. If that's what I would do, I would go back in time and tell myself at the very beginning of my career, just wait a few years. Things will get a lot easier. There's a thing called StockTwits coming out. You should pay attention to that. I would also probably tell myself to buy some Tesla, I guess, theoretically, if I could, that's what I should have said as my my answer to, what would you tell yourself when you're just starting? I'm kidding, of course.
All right.
But,
Great.
Well, thank you so much for having me on, Aaron. I mean, seriously, it's an honor to be included with this high caliber of a crowd.
Right
as well
back
as
at
to
you.
be talking to,
No, I really appreciate you coming on.
So
let's make it a wrap, and we'll keep in touch, and we will speak soon.
We sure will. Hey, thank you guys, everyone out there on Aaron's podcast. Really been a pleasure.
All right. Thanks, Zach. Talk to you soon.
Cool. Talk to you soon, Aaron. Thanks, man.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes.
Before we part ways, do you want to tell the listeners where we can find out more about this and where we can connect with you also?
Yes, you can go to optictrading.com and check out the professional trading course. I'm also on Twitter at Optic Trading, and I have a YouTube channel, Optic Trading, as well.
Okay, awesome. And we'll put links to all three of those in the show notes at chatwithtraders.com. So definitely make sure to check those out. And again, Adam, man, been really good having you on. So thanks a lot.
Oh, thanks a lot for having me here. I appreciate it.
All right. Well, Jonathan suggested I try to get you on for an interview, and I'm pleased he did because your answers have been outstanding. So thanks again for coming on.
Awesome. Thanks, Aaron. Thanks, Jonathan.
And to learn more about Lance, make sure you go and check out his website. It's yourtradingcoach.com.
Yeah, come to the site, check it out, yourtradingcoach.com. It's mostly just an archive for all my blog articles and posts. It's years and years of them. It's just crazy. So come and check it out if you like it. Sign up and you can get them each week. If you don't like it, that's cool. Good luck with your journey. But also Facebook, yourtradingcoach.com. I'm on Twitter, YTC Trading, or also at Lance Beggs. You should find me pretty easy.
Very good. All right. Well, all those links will be in the show notes. And this has been awesome again, Lance. So thanks a lot for coming on. And take care, and we'll speak to you soon.
Cool. Thanks, Aaron. It's great to be here, man. If anyone has any questions, I believe there is a comment section on your page that you post this. So put them in there. I'll monitor that for a few weeks and be sure to answer anything if anyone has questions.
Absolutely. So, yeah, just go to chatwithtraders.com. You'll find Lance's episode there. And if you just scroll down to the bottom, there will be a comment section. So, yeah, that's really cool. Thanks for offering that up, Lance. That's really good.
Awesome. Thanks, man. It's been great.
All right. Talk soon.
Cool. Bye.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
You can connect, and I'm always around. I'm happy to chat. I'll never give you the secret sauce, but I'm always happy to chat. Just Google me on LinkedIn, and I think that's the best way.
Well, this has been really good. So